Dum dum dum. Who's ready for some live trading action right here? I'm getting into it. Let's spin this bad boy around and let's get it started. It's time for live trading. Who's getting that chicken dinner? I don't know about you guys, but I'm already thinking about Christmas dinner. I need to go ahead, make some moolah. Let's get after it. Live trading right here. Benzinga.
Winner, winner, chicken dinner. Those words have been dancing around my head all night. Oh, it's Vegas lore, that phrase.
All right, team, let's get into the action. Let's bring on, of course, we got Ryan Faloona in the house. We can go ahead and take a look at the stock market action. But how are we doing today, Ryan?
Well, we're doing good. We're doing better now that you were the one that volunteered to sing a little during the intro, because if I had done that, everyone would have left and we wouldn't have any viewers today. So I really appreciate the good looking out on your part, Mitch. And I too am ready for Christmas dinner. I am looking forward to it. We are so close.
So close indeed. But now the question starts to ask, right? Will we get Santa Claus coming to town, right? Do we got believers out there? That's what I want to ask about. Who's a believer? Who's a Santa believer out there? Let us know, team. We'll take a look into the market. But like always, we want to see if that Santa Claus rally is going to come. Okay. There were a lot of comments out there. Everyone's looking for it. We'll just have to wait and find out if we hear the hooves on the rooftop landing. So we'll have to wait and see. Let's get into the market action. I'm going to go ahead and just bring up overall market talk. Then we'll get into Ryan and some kind of more macro and micro outlooks. SPY right now is battling. Let's go to my main chart. I'll show you guys what I've been looking at on the daily. We talked about yesterday on the RSI, right? Would we get an RSI bounce, an extreme oversold condition, right? Well, we did get a little bounce there. Now I want to watch today. What do we do? Do we come back trying to fill in this gap, this daily gap, or are we going to just fake towards the 385 and then take back down towards 380? That's where I'd be a little bit careful, because I have a feeling that we could get, of course, a fake to the downside again before we get a little bit of a Santa Claus rally. But this hard down move has actually helped my thinking overall in that we could get a little bit of a rally because we came down so fast, right? That actually helps a little bit of the bounce. Last time we were here, you can see when we were down on, let's say, September 26th, we were just chopping around there, going sideways, and then we took that next leg down, followed by a little bit of a rally. This is kind of a similar pattern that I'm expecting here. And so I'm expecting more of this kind of sideways action, followed by maybe a quick test down, and then a little bit of a rally going into maybe tomorrow or Friday. So if we test down today, I won't be feeling too bad. The big thing for me is going to be Thursday and Friday. If we can go into looking positive Thursday or Friday, I think that we could get Santa Claus rally. Now, where should we be maybe looking, right? Well, to me, I'm going to be looking at oil stocks. Oil stocks, I feel that could get the lift because at the end of the day, they haven't wanted to crack completely. They came down, they did a correction move, and now are starting to make their way back. Keep an eye on some of these. Halliburton, I talked about this one yesterday. It already made a nice move. And look at the pre-market action. Yesterday, we were pushing up there through the 36.50, came back towards 36.75, bounced off of that, kept going to the 38s. This is definitely an area that I'll be looking at. These stocks are on my radar, but there's also retail stocks that are on my radar. Today, we got good earnings out of Nike, right? Well, I'm looking at this one, Ulta Beauty. It's come down last, 1, 2, 3, 4, pretty much 5 days down. Now showing you that reversal signal. This is one that I might look for a little bit of a move today. We'll see what happens there in Ulta. It's already starting to push back here towards 447. Of course, a more expensive stock, so you got to be a little bit careful here. But I'll be looking for a swing in Ulta. We'll just see what happens there. Just wanted to give you guys a similar stock that's outside of oil that I will be looking at, and maybe even like a Best Buy getting a little bit of a bounce back. It's hung around, and I think that's the important thing. This looks like, would this be considered for you a floating island, Ryan?
Yeah, but it wouldn't really get me excited because the island isn't huge and we didn't pop to new highs. So yes, technically, but I'm not rushing out to get that one. Look at the one on Deere for comparison.
Okay.
That'll give you an idea.
I like that. That's actually another stock that I was thinking about bringing up there. So,
and actually, now that you're looking at this, look how it's actually tested the bottom of that first candle. I guess technically it did break beneath it, but it didn't stay there. And we actually got to close back above that level. And now we're moving towards the highs. So this is not resolved yet, but it's still in play. And as you and Mitch, zoom out a little bit for me on that chart. First of all, look at the degree that of pop that the island is in. And actually we popped right into the resistance area of all-time highs. This is what I would rather see for this formation.
Love it there, Ryan. And definitely this is one that's going to be on the radar today. And what I would say about Deere is also take a look at the laggard plays, the Caterpillar, right? Look at this little setup that it's having on the daily chart. Really pretty. And they both could break out on the same day, right? Look at that. That's pretty for me. And it's trying to get up there. That shows me more and more that the industry is hanging on. Picard, down gaps, comes down, sideways action. If I see Cat and I see Deere making a nice move up, I'll look for Picard to lag behind that.
There you go.
And start getting the move. As you can see here from the daily chart, this has lagged before and then made a nice little push up. We were looking at this right when this started making a move here. November 8th, we started looking at that. That was right here when we just started getting above the trend line and holding. We've made a move to 106. We pulled back below the 100. I'd be looking for that 100 to show back up. But of course, be careful with Picard on the spread, as you could see it get through that 100 today, but it's a bigger spread. So just keeping that in mentality there so that you don't forget about that part. All right, we'll get out of Picard, we'll get out of Deere, and of course the Santa Claus rally talk. You guys can keep taking a look, and if there's other stocks that you have on the radar, let us know. I'm going to go now to Ryan's stocks, and of course, we'll leave a little bit of time to maybe cover some from you guys in the chat. I'll let Ryan go ahead and do whatever he has to knock out right quick, and he's back. Just like that.
Buddy is making some funny noises today. It sounded like he was trying to pass a kidney stone just a second ago, but what he's actually doing is wrestling with his stuffed toy. So he totally faked me out. Now, Mitch, I got a surprise for you. Okay, so we are going to talk about some small cap stocks on the movers tool, I promise. But first, I'm going to make a case for a Santa Claus rally right now.
I like it.
So we're going to start off here with a daily SPY chart. And one of the things that you're going to notice here is, first of all, from the beginning of the year, we are in a downtrend. There is no ifs, ands, or buts about it. This light blue parallel channel represents a downtrend for the overall market from the first of the year. As you can see, we're doing a lot of this wave theory stuff. This all, Mitch talks about this quite a bit, and kudos to you, Mitch, because you got a really good handle on some of the wave stuff. It's helpful to follow along with that when you're actually seeing the market look like it's getting destroyed, right? It can help you make sense of what's going on if you have a longer term approach. Now, as far as the Santa Claus rally goes here, the Santa Claus rally, technically the first day would be Friday. Okay, so today's Wednesday, so we got 2 days. Maybe we meander around a little bit here. But if we look on the chart, it looks as if we're trying to curl back up. Now, really, the question is going to be if we do continue up, where do we stop? I would say that we will probably stop somewhere between the 403 and the 408 channel that I have marked off here with these little purple lines. This is where we stopped before. I understand that the trend line is going down. So if we wanted to, stay within the actual trend, we'd probably top out around 400 on this upside. However, I wouldn't be surprised if, especially on low volume around the holidays, if we actually broke above that, only to quickly come back come back in. So looking at the SPY chart here, there is a potential for this. If we take a look at the MACD, histogram, and the RSI, our RSI reading is 42. So we're still in kind of no man's land. I'd love to see that come in a little bit more towards 30. That would really kind of set us up for a bounce off of the oversold territory on RSI. And then the other thing that I'd really like to see is I'd like to see the MACD converge. We're actually getting the histogram. I believe we're getting that to shrink a little bit here. We should have a cross with the blue line through the red line pretty soon as well. Now, the other thing that's kind of lending me to think that maybe we will get a shorter term rally. We got some pretty big earnings reports last night. We got earnings out of FedEx and Nike, and both of them had or are trading up after the report. Now, I will say I'm not an expert at covering either of these two companies. I do look at them, FedEx especially, because it's often used as an analog for the consumer, which I think is going to have a rough 2023. However, we had really good reports yesterday. The market is really rewarding FedEx. First move initially was down, but we actually took we bounced right away, and now we've taken a next leg up here. So we're butting up against that 175 area. We closed around 164.5 yesterday, just to kind of give you an idea of what kind of movement we have there. So FedEx shares are trading higher after the company reported better than expected Q2 EPS results. There was FedEx draws dim view from analysts despite earnings beat. So here you go. So some of the analysts thinking, yeah, okay, well, they did beat, but I am not sure how great the outlook is here. That sets us up for a shorter term rally as opposed to a longer term one. Now, if we go ahead and check Nike, remember, Nike, this is, I don't know because I don't actually wear the product. So anyone out there, please correct me, give me some more context, Mitch, yourself as well. I don't actually wear Nike products or Nike shoes. I guess I do have some Jumpman apparel, but regardless, this to me seems like one of those stocks that there would be a lot of Christmas gifts or holiday gifts that are Nike under the tree, right? I would expect a lot of different shoes under the tree, maybe a new jacket, maybe a new hoodie, something of that nature.
I'll tell you what, I bought the wife some new Nike shoes, some new Nike running shoes.
Okay. So
the Pegasus 39.
That goes to just prove my point, right? So here we go with Nike. This stock closed right around 103 yesterday. It's 116. We're up $13 here this morning. If we take a look at the daily chart, we actually popped right into this resistance area. So we're getting a couple of stocks here that are telling us that maybe earnings won't be as terrible as we thought, and maybe that sentiment will be enough to drive us higher for the next week or two. Now, again, I'm still in the camp, even if we get a Santa Claus rally. In fact, if we get a Santa Claus rally, or even if we don't get a Santa Claus rally, I am in the camp that we are actually going to set new lows next year. I think that if we go back to the SPY chart, let me go ahead and show you. Let me pull up SPY here. If we go back to the SPY daily chart, it's my contention that this low here that was at about 348 gets challenged at minimum at some point next year. Now, ideally, I'd like to see this in Q1, but the reality is depending on how strong the consumer remains or how long it takes for the consumer to get really hurt, that process may not happen in Q1. And I think if we do not bottom early, it's kind of going to be a rough year. That would be my take on it. And so a Santa Claus rally ahead of this would be ideal, right? This is going to allow more people to maybe get out of some positions, maybe put on a trade, feel pretty good about the holidays, feel pretty good about going into the new year. I don't know. I just don't see it. Now, I did see yesterday a report about some of the BLS data being inaccurate and the Fed making projections on interest rates based on inaccurate data. If that holds to be true, and I'm not an economic expert, I don't know, but if that holds to be true, I would expect more talk about a pivot sooner rather than later for the back half of 2023. So a lot of ifs in there, a lot of things that we're going to have to watch for, but that's kind of where I sit right now. So I would say that as far as a Santa Claus rally here, maybe we get it, maybe we don't. We do have some good things pointing to it. We've got a really nice chart set up here on the SPY, and then again we've got positive earnings from FedEx and Nike. So we shall see if we end up getting that. Now, Full disclosure, also next week, I will be out all week. So we did hear from Zunaid. Do not worry out there, fam. Zunaid is doing good. He has some other holiday commitments, but he will be back. He confirmed that he will be back with us next week. So you're effectively going to trade me for Zunaid for next week. Mitch is going to be here to hold down the fort as always. All right, now let's go ahead and take a look at some of the small caps that we got off of the movers tool here. Let me go ahead and adjust this to a 1 minute chart. First of all, we'll take a look at Nike. Let's see if Nike keeps moving to the upside. As I've said before, I'm not a Nike fan. I'm not a Nike trader. I don't trade this, so I'm going to avoid Nike. But it'll be worth mentioning here. And if we break this 117.50, maybe we do kind of run a little bit. Not the same as the MDGL that we saw the other day when I said, oh, this might pull back, only to see it run another 60 points or whatever. I'm not sure the same dynamic holds here on Nike, but if we do break above that 117.50, maybe we do get a trade. A pullback towards VWAP, a hold, and a bounce would also make for a nice options day trade here. We can take a look at FedEx. FedEx doesn't really move all that much. It's kind of a thicker trader for me. In fact, I actually haven't looked at the option chain in a little bit. I'm sorry. I should have done that. I should have prepared for that. Options are pretty liquid. So FedEx, we can trade this, and the options aren't actually that expensive. So we'll keep an eye on FedEx too, see if we get any type of breakout and move. Now, let's get down to brass tacks. Let's get to some of these smaller cap stocks. First one on the list here is going to be Lassie. This is Laser Photonics Corporation. And if this ticker looks familiar to you, that means that you have a good memory because we've traded this one before right off the relative volume scanner. We do have a catalyst here this morning. Laser Photonics shares are trading higher after the company announced it received an order from the largest glass manufacturer in North America. Okay, so I would imagine that order is going to help them make more lasers, which is pretty sweet. Now, how much that actually is going to help them, we shall see. As far as the trade goes here, we actually popped as high as 218. We've really retraced about 50% of the move. Did kind of find some support here at 181. I understand that we broke beneath it, but we didn't spend much time beneath that. We are below the VWAP, so I would love to see a VWAP cross on the way to a 2 test. Boy, that was more difficult to say than I thought when I was playing it in my head. I'd love to see a cross through the VWAP to a 2 test. A pop above 2 does put 218 in play, but we might not go straight there. We definitely want to watch the volume here. We've seen the volume already kind of decline and then pop a little bit in the pre-market in terms of its volume level. So what we really want to see for a long side trade here is that volume expanding right at the open. Here we are actually trading up towards 191. So we shall see on Lassie. Next one here is going to be ADTC. This is ADC Therapeutics. Remember, the random biotechs seem to be the stocks that are working the best here, whether they're low price or high price. The random biotechs seem to be working the best here. We do have a catalyst. ADC Therapeutic shares are trading higher after the company and Sobi announced a European Commission has granted conditional marketing authorization for the use of Zynlonta for the treatment of relapsed or refractory diffuse large B-cell lymphoma. Okay, so that is a mouthful, but obviously treatment here for large B-cell lymphoma. We did pop as high as 501, and we've retraced almost 66% of that. In fact, let's see what we have done here. Retraced. Okay, so it's not 60, not even, no. Well, here, this move 317 to, yeah, it is about 66% of the move up. We're down about 30% from the highs, but we're down about 60% of this initial move. Now, unlike Lassie here, we really haven't found a bottom. It continues to try and test these bottoms here. I'll go ahead and mark this here, 361, but it looks to me like we might set a new one. So let's see. We want to see some of this strength really come back to ADCT. One of the things that we want to do is we want to see if there's any type of curl action here. Crow, I know you've been trading a lot of these on the curl back up. We'll see if we get the same type of action here today. ATNF. This was one that popped yesterday, gave us a great trade yesterday. This was a former reverse split that recently started to move, and then they announced an offering. So we had a nice little pop back up here, announced an offering, and we dropped back down. Now, what's going to happen today? I don't know. We'll see if we actually move through VWAP and then move through 3. This one, not the best here, given the fact that the offering news is out there. Last one here is going to be CACO. We did pop here this morning. This one has a recent drop, so it's a recent beaten down stock. We don't necessarily have any idea if this is really going to run today, but if it starts, the fireworks could be large here. So keep this one on the back burner. This is not one that I'm going to focus on, but I am definitely going to be mindful of it. One more thing that we should take a look at here, Mitch, is going to be Tesla. I know that we look at Tesla every day. Tesla's, one of the big traders here. Elon's making a lot of news about stepping down and all of that. Tesla's really had kind of a rough recent go about it. We were actually talking about this on the Happy Hour show yesterday. We think that Tesla could really come in a little bit more. Wouldn't be shocked to see this come in and try the 138.47 level, even lower than that if we keep breaking down. So we'll see. The one thing to keep in mind here on Tesla is that it's recently been kind of a rough sell-off. So if we do bounce, we might bounce pretty ferociously. But we'll keep an eye on that too. Got 40 seconds here till the market opens.
To put it in perspective there, I've only seen Tesla get lower on the RSI once or twice. So that just goes to show you that Tesla's completely oversold, could bounce at any moment. So
that's what I'm thinking, yeah.
Short Tesla and you're thinking that the best play still is short Tesla, just be careful there. Just be careful with that mentality. At some point, that's going to rip up maybe 10 points. Just keep that in mind, right? I mean, the volatility in Tesla can get big really quickly when it expands. Volatility has gone down to 9. At one point, Tesla was moving 15 points in a day. So just to give you perspective on how quickly Tesla can turn around and change that up.
Market is open. Good luck, folks. 13. Great of you to join us. I've actually used your charts here on SPY. Appreciate all of the knowledge that you give us here on SPY. Keep shouting out those trades. You are great. Thanks for joining us here this morning.
My only thing there is who uses the 100-day SMA? Why does that act as support? That would be my question there, because it's not very common use, moving average at all.
13 uses it. I'm sure he will tell you why he actually uses that one. He also uses the 500, which I've actually nicknamed the Joe moving average, and that one seems to be pretty good for longer term trends as well.
Yeah, just weird timing on them. Why the 100? That's what I would ask.
I will let Joe answer for himself. It's Crow. You had mentioned Vero here. This is one of those penny stocks I'm not going to trade. Maybe we will pop above 55. That would be your entry here on Vero. VERO, pop above 55. We shall see.
All right,
first move on Nike is up here out of the gate.
Exactly. That's what I'm noticing. Looking at a couple of different stocks, Nike's going to be one. Under Armour can move today. We already talked about it in the chat. DKS already getting a nice little push here towards 113.43.
Sorry, Mitch. Sorry.
You're good. You're good. We'll keep moving, man. If we run over each other, we run over each other. Let's just keep calling out what we see out there.
Love it. Okay, so Lassie here, absolutely popping out of the gate. We went right through VWAP. Really, the question is going to be, do we take out the pre-market high here at 218? Let me go ahead and remark this on this chart. Boom, 218. So we'll see if we end up getting that pop and mow. We're going to keep an eye here on the volume. I like the formation so far. This back test of VWAP wouldn't be bad either. We shall see if there we go. Looks like it's trying to go higher back at that 2 level. Let's see if we snap 2. Stop. The big volume here stopped at 204. We'll see if we can break that. I think if we break 204, maybe we do challenge 218 here on Lassie.
Interesting stock getting an up move right now is Bath and Body Works. It's getting a little bit of a lift up. We'll see what happens with that.
You know what? That seems like a good holiday store to shop at. I don't know how that should really translate to the stock other than maybe the sentiment. But, Bath products, scented candles, stuff like that. Great holiday gifts. I wouldn't be surprised. I'm not surprised to hear that stock is strong here today.
Mm-hmm. We'll see what's going on right now, trend wise. Seeing energy take lead. Actually, financial services are taking lead. There's a couple of sectors moving right now to the upside: financial services, communication, healthcare, industrials. We talked about DE, right? Well, DE. Let's see what's going on here. We're just getting kind of a sideways move right now. Nothing going really on right now, but I'm going to take a look to see if Cat leads. There's Cat taking lead, right? We talked about how Cat could take lead. It just broke through a very important daily level. Look at that. Nice little clear breakthrough. So we could look for the other ones that kind of play catch up, like Pakar through 100. It already broke through the 100. It hit it on the pullback to its 99.93. Now it's at 150. DE actually looks good here now that it's done that move, Cat. So I don't feel like this is a bad move. Eventually, I think Deere can get to 450. That's definitely in reach if it can break out of this daily trend. Doesn't look bad right now.
No, it doesn't. And, the thing I forgot to mention earlier when we were having our discussion about Deere and Cat, I think next year the industrials actually might be one of the better sectors. I'm not sure if tech is really going to storm back next year. I mean, I could be completely wrong on that. And of course, as being a technology guy, I will absolutely be watching the tech sector on a regular basis. However, I do think industrials are set up to lead. And remember, I believe that some of the farming equipment, there was incentive to buy those from the government. So I think that actually benefits Cat and Deere. Real quick, big shout out here, Jay Rice. This is a great. I actually like this chart here, right? Crocs definitely strong out of the gate today. This daily chart is nice. We really kind of pushed out of this consolidation range, took the next leg up in here between 92 and 100 ish. To me, it looks like this is trying to curl back through that 100 level and maybe break out here. Crocs down from an all-time high of 184. That is, in fact, the all-time high, isn't it? 184. So we'll see here on Crocs. I do like this daily formation here, Jay. Let me know what type of trade you're looking to actually place on this, or if you're already in it.
I like the 97.75 level right now for pullbacks into that 86 should act as a little bit. Actually, it's closer towards that 83. So 97.75, maybe risking towards that 97.25 level. It's actually pulling back right now for that.
On Crocs here?
Yeah. Let me see if I can get it here, guys. I'm going to try.
Crocs spread about 30 cents too. So,
that's the hard part there.
Factor that into your trade. This is, one of the things about some of these larger stocks, the spread can be larger like that. SINT, you guys mentioned this one here this morning. I think this was a Crow's mention here this morning. See, we are strong here, looking like we're trying to take out that pre-market high 975. Lassie still hanging beneath up, just took out 205. Lassie looking to take out 208 and move to the highs here. You had a halt up in SINT. Nice shout there, Crow. See it right here on our halts list. So we'll take a look and see what happens after SINT opens. Another reverse split play, right? Another reverse split play. And real quick, let me give you a little insight here. If you want to continue trying to play some of these reverse split plays and prepare for them, here's how you can do it as a Benzinga Pro customer. Mitch, if you have a trade, please interrupt me. Real quick, though, we actually, in our calendar tool, we actually have calendars that outline splits, right? So there's a calendar here called splits, and these will outline both forward and reverse splits, and we'll mark them accordingly. So as you can see on my date range, I've actually gone into the future here, and I'm looking out to the 31st of January. This is
the future.
This is going to give me an idea of what stocks are actually going to have splits coming up, and it's going to have your X date. That is the day that it actually splits. So SINT, as you can see here today, split yesterday. Today is the first day of trading post split. 1 to 100 reverse split. Boy, that sure sounds like a quality company, right?
Good call out on Crocs. Wasn't able to get the order filled there. It's already the 98.40.
Lassie open and Lassie higher right through those pre-market highs. Got to set a new high here of 224. Go ahead and bring up Lassie. Where are you? Where are you?
Looking for a pullback in Ulta to 445 here. If it can do that, I'll take a shot and look at it. SPY is just kind of getting a little bit weak here out the open. It just went down a little bit. We'll see if it can come back and recover 384s on the day. It's definitely battling right now. So looking around to see what's going to happen here. Are we actually going to get a rally today or not? Taking a look. Hasbro doing well right now. That could be maybe kind of Santa Claus type of rally there. A stock that's beaten down on RSI has been really hit hard as of late. I'll put it up here. Hasbro, it's right now off the VWAP. Daily has been really beaten down on the RSI. So I'm not saying that this is something maybe I'd hold for long term, but it's been back down to pandemic numbers, has some support to go off of. You got your bogey to the left, 55.15, 55.60, acting right now like it wants to act as support, 55.50 area. It's right off the VWAP. Doesn't look too bad there.
Real quick here, Apple, nice shout there, Jim. Nice to see you here, Jim. Happy holidays. Apple popping to the high here. Apple had kind of a rough couple of days here, but real strong out of the gate here. So too is Nike, right? Nike strong out of the gate, and FedEx.
Long that Hasbro.
FedEx actually coming in here. Nice on Hasbro.
I got a bad fill there, though. I'm not even gonna lie. I jumped up about 10 cents there, and I jumped on the offer. So I'm in here off of even 95s off the offer. So definitely trying to get in closer towards 55.70 here on the VWAP, but looking for this to take out 56 and keep going to 56.50. SPY getting a little bit of a bounce there, right back up there, and it's a kind of V bottom shape. So look to see if we can take out 383.50s. And especially 384s. If we can just go straight up through that, it's going to be a nice looking strong day right now of SPY with a nice little push back up on the 5-minute.
Might that be the start of your Santa Claus rally? Might we be able to credit Mitch for wearing the Santa hat for having this strong day? I don't know. We shall see. Really quick, I see a couple of people mentioning SMMT in the chat.
Finally.
Let's remember here, let's keep some perspective on SMMT. Really, to continue to move higher, we're really going to need to take out this 439, 440 area. This first move out of the gate here, definitely a nice move. And if you were able to trade that, awesome.
So
I didn't have any trigger there, but we pushed right up into a resistance area. I'm sorry, Mitch,
so pretty. I haven't been watching this one because I missed it on Monday, but it looked like it's just setting up really nice on a daily. There's very rare times where you'll get a small, cheaper name like this to set up on the daily. This to me is more of a daily setup than an intraday setup. SMMT, make sure that you're looking at those daily levels. Look how they go so like organized towards that 450. That's the big breakout level that you want to see really actually break through. You can see how you even spike today. You get up there towards 435. People are looking at those 450s. Can we get it through there now? Can we hold 4 on pullbacks? That's what I'd be looking for. A $4 hold. VWAP is at 399. There's a reason why there. I'd be looking for that 4 to hold now and get through that 450. Not a bad looking stock there.
No, and SMMT, that 439, 440 level, the candles do briefly go above it, but this is the level we seem to be stopping at. If we can take that out, maybe we do move higher here. Nice looking chart. No, that was not a Becca. That was not a timeout. That was a straight up ban. That was a straight up. We have zero tolerance policy for behavior like that. We do not even mess around with the timeouts. We go straight to the ban hammer.
Ban. All right, looking around. We'll see what else is going on.
Ban hammer. Sorry, I had to.
Drop it on them. Trying to add to this Hasbro here off the 70, 75 area. Definitely jumped in this on the offer side and should have just waited for the 78. So just to kind of give it perspective, making a little bit of a mistake there on the entry. SMMT went right back towards 404, bounced there multiple times now. We'll see if it takes out the 430s.
Virgo shouting Tesla at low of day here. Tesla absolutely at low of day, really kind of pounding the lows here. I'm not sure where the bottom is. I'd love to hear from the group here where you think the bottom is here on Tesla, but Yeah, having another rough day. I see CEI being mentioned. This is that junk stock, Camber Energy. This also did a reverse split recently. I think is today correct. Help me out here, folks. Is today the day? Looks like maybe it is. Today's the day. Jaeger saying Tesla price target of 25. That's the level to bounce. Oh, Jaeger, that's awesome. Is that a shout out to EFT, by the way? Jaeger the trader. Just wondering. Yes, Wiss is saying this is the first day post split trading here on CEI. So maybe we do get some crazy action here on CEI today. Looks like we're going through 4. It's like we're going through 4 here. By the way, Crocs at 99 here, looking like it's really going for that 100 magnet. And you're actually about to get a MACD cross on the histogram as well. We might actually cross into. I like that Crocs play. Jay Rice. Jay Rice. Good shout there, man. Great shout there on Crocs. Love it. Love that setup.
It is just a difficult fill. It didn't fill me. I had the order out there. It just the spread was a little wide there. It spread by 30 cents. So it's a tough trade there. I would say it's a nice setup. Hard to trade there with a 30-cent spread there on Crocs. At the second, it was at like 97.95 by like all the way down there towards like 75s on the bid. I put out 78, just got no fills, but really nice setup now towards 99.50s. So you got a nice little daily break there on Crocs. Now you just want to see it, make sure that it holds 97 on pullbacks. Looks good there for it to just keep going, even on a swing. Doesn't look bad.
Voodoo. I was trying to go for some levels, and you one-upped me with the quality of comment because I agree completely. This is spot on. It is very, very tough to call Tesla right now because there is so much emotional sentiment surrounding that stock. I completely agree. You obviously have the Tesla bulls, the cult-like, and I say that endearingly. It's not a bad thing. The people that really, really love Tesla. Then you have the people that don't like what Elon is doing with Twitter and on Twitter, and you have this kind of seesaw battle back and forth. I completely agree with you, Voodoo. Very, very difficult to call on where this is going to go. We try to make sense of it, and here we are bouncing, right? So we bounced off 135.89, and we've bounced 3 complete points already on Tesla. Let me go ahead and pull that up here. CACO might go with, so it doesn't look ready yet. It is curling here at the bottom, though, maybe through 2 there. But look at this bounce. This is and by the way, Voodoo, this is kind of what this type of action right here tells me that there is that emotional sentiment, right? It's been sold down for the last several days. Today, right out of the open, sold more, and then we have these huge bounces here as people step in and buy it. I don't see that on every stock, but I do see that on Tesla. Jay Rice, been selling the upside calls on Crocs over 100. Jay Rice, man, you are on it right now. Great stuff. Thank you.
Yeah, that might actually be the easier way to go about it. You know, sometimes it is easier to go on the options because of the spread on the stock. So that might be the easier way about it. I just don't trade options. Not for me.
Options have really hurt me this year. I'm impressed. Every day we sit down here at the desk, I'm impressed with Zunaid's ability to trade options for a profit. They have hurt me this year. It's not been the greatest year for options trading.
Yeah, I don't know. I feel like there's too much there in options for you to be kind of consistent. That's the only thing that I would say. I've seen too many option traders that, they do well on certain trades, but then they do really bad on others. And I try to avoid that. I try to get into trades where there's not going to be that one trade that wrecks me.
Yeah. So we what did we have here on SINT W? I'll get to VRNA here in a sec. Let's take a look at SINT. We opened, traded up, and then halted again. So SINT, this looks, weren't you saying that this was one of the reverse splits too? This might be the reverse split du jour. 1 for 100, right? That's what the reverse split was. Unbelievable. Opened and halted right away. Difficult to trade these things, my man. Difficult to trade these things. Okay, we wanted to take a look at VRNA. Let's do that. All right. So nice little strong move here out of the gate. Nothing abnormal about the volume. Seems fairly regular. Nice little dollar move here out of the gate. We're kind of right where we were.
Sold majority of Hasbro.
Nice. That's for a gain, isn't it, Mitch?
Yeah, that's
Nice
356 there. The big thing for me is I got caught on the offer. So instead of trying to be picky with the target, I'm going to take majority of the trade off to limit the risk on any downturns because I got caught on the offer. If not, if I had a good entry on the VWAP, I would hold to that. But since I'm a little bit higher at 55.83, don't want to get caught too much closer towards this 56. So now I took majority of it off, can hold off the VWAP and look for the trade to actually make the move.
Great success.
Nice job, Mitch.
Great
Nice job.
one.
VRNA here. Thoughts on VRNA? So first of all, 1950 seems to be the level that we really need to clear out. Looking at the 1 minute chart here, this is really that channel that we've kind of hung out in. You know, while we're talking about this, might as well draw the downside of this channel here. So about 16.25. So we're in about a $3 range here. Now we are kind of butting up against the top of this. If we flip over to the daily chart, one of the things that you'll notice is we do kind of have that floating island here. Now, the interesting thing is we haven't actually back tested the bottom end of this range. So could we break out from 1950 and keep going right away? Well, yeah, sure. But I think that for what would make this trade a little bit easier would be if we came into the bottom of that range again and then pushed back up, because that would shake out some of those weak hands there. If we zoom out a little bit further, we can see if we do break out of that 1950, the target that I would be looking for is about 25.50. So you're looking about 6 points upside. I don't think it goes there in one session, but crazier things have happened before. We shall see.
All right, hopping in here. Good call out here from Ron Willis. Of course, Ron always has good eyes, and
yes,
he's seeing right now technology moves, semiconductors making a nice lift. I'll show you that by showing you SOX L. Look how that's been moving on the day. Nice little push up on the 1 minute. Now take a look here at Micron. You guys will see here, not looking too bad at all. Nice little push there, but it's not only Micron. You guys can be looking at different stocks here. I'm going to tell you guys what's been moving from the open. NVIDIA up 2.48%, AMD 2.17%, SYNA up 2.03%, Micron, Intel making a nice little lift, INTC having a 1.35% move, trying to get towards 27. This doesn't look too bad. A lot of green there all around. I'm seeing all around. There's only one area that's in the red from the open. That's oil, actually. So XOM coming down fast, oil coming down fast. That's the only area I see in the red from the open. Everything else in the green. SPY overall, nice up move towards 383. We talked about 384 being so important. There's a resistance there. Can we get through 384? We'll see if we get through there on the SPY. I'll put it up here on the left-hand side. You can see how we rejected. Look how we reject 383.90s right off of that, right off the kisser. So we'll see what happens. I have it on the 1 minute. We even got to a high of 383.94. Just couldn't get through the 384 spot. So acting as resistance right now. We'll see what happens.
Sorry, I'm just handling a support request here for one of my teammates.
Good, guys.
I'm back at it now.
All right. Seeing a nice little move here. Hasbro starting to make a little move towards 56.25. Going to take another profit through that if I can get it. And then, of course, from there, we can just leave the last little runner to keep going.
Real quick here, SINT. Lassie, LASC, we are starting to curl off of that VWAP, currently at 206, 207. So maybe another push here brings us back to the high of 224. Lassie's starting to curl here. Seeing some pretty decent volume as well on Lassie. Another shout here from Crow, ICCM open. So that's interesting. This was halted yesterday for news pending. I actually didn't see the news. Did we get that? Yeah, that was just the details about the offering, right? So they priced nearly 9 million shares at 165 a share. Stock's currently at 180, down 31%. This is why when you have some of these, don't be afraid to take your gains, right? Don't think every stock is going to have a multi-day run to the moon. You can really get hammered on this. So hopefully you all took your gains on ICCM. Tesla hot off that bounce. Good Lord, Tesla. What you doing? That's actually on the relative volume scanner here as well. So is Snap, by the way. Look at this move here in Tesla. What we'd really like to see here, clearing out 140, 150. Maybe we do move higher back towards that 145, 147 handle. We shall see.
All right, just took a little bit more profit there on Hasbro at the 56.25, like I talked about. Now we're towards 56.33. Not looking too bad at all there on Hasbro. Average is 55.83. We're just going to let this continue to work here to see if it can get through the 56.50s, and then I'll just run towards the end of the profits. Not a bad trade here. Was looking for a similar Santa Claus style trade. I could even make this into a swing trade if it really wants to go, but I'm just trying to just nail in a trade or two here. There's a lot moving today, so I'm trying to get towards another opportunity here. We'll see what happens. Nike's battling that 119 right now. If you want to take a look at Nike, SPY still topping around that 384. It doesn't seem like it wants to get through. Be careful. We could get a quick little pullback here and maybe some opportunities off the VWAP. Value names like Clorox moving well today. So if you're looking at value, that's not looking too bad right now. What's the consumer discretion one? XL. Is it? What's a consumer discretion here for XL? Oh, well, this is why I like using my TC 2000, because I don't like focusing on the spiders. I like to focus on just regular unweighted indexes. But yeah, defensive's doing well right now, getting a nice little lift there. Household products, beverages, confectioners, packaged foods. Seems like the value names are also getting a lift today. So those are the ones that I'd be looking to buy on pullbacks. We'll see what happens.
XLY. XLY.
Yeah, XLY.
Is what the ticker you're looking for.
The hell would you make it XLY?
Discretionary. It ends with a Y, bro. Come on.
Why not XLD?
Isn't XLD something else?
No,
it's not. It's nothing.
You get what I mean? Like, why not just make it XLD, bro? I didn't make them. Spider.
Who thought of that?
Man.
Come on,
Man.
Come on, man. You're killing me, Smalls. You're killing me. But don't worry.
Nice
it's like
Sandlot reference 3 days before Christmas. I'll take that.
Yeah, you're killing me, man. You're killing me, Smalls. Ford looks like it wants to bounce here. And of course, the autos like to move when Tesla moves up. So Tesla got there towards 136. You know what was my call for a long time on my charts was 135.05. We got pretty damn close to there. So Ryan, you asked earlier, what was the bottom on Tesla? On my charts, I have 135.05. We're in historical RSIs. This looks like a decent bounce to me. I'd be looking at this for a pullback towards 138.50s. And then we'll look to see if it rips right back up through 141. Not a bad stock to keep in mind.
Crocs did cross that $100 level that we talked about. Really impressed with that call from Jay. That was money in the bank.
Pulling back fast.
Lassie curling. This is crazy. Lassie curled right back up to that 218 spot. Boy, do you think it was a coincidence that we stopped at 218? I'm going to go ahead and say no. Let's see if we can pop above that. Looking at the 216 looks to be the spot where the most volume was traded on this recent run up. 224 that high. We'll see if we break above these. Lassie looking strong here. The other thing I really like about Lassie, we talk about this all the time, this volume in here, right? So the volume flipped to selling volume and came in, but the buyers were like, we're not done yet. Stepped back in there. We see that volume expand. That correlates to the price moving back up to the highs. Let's see if we get an even bigger volume candle here, pop through that 218 and set some new highs. Morning, Shelly. Can't stop flipping, huh? You Forex flippers out there. Forex flippers, Shelly. I bet you use a whole bunch of math and statistics to justify your trades as well, don't you?
I like this Ulta. I wanted it at 445, but missed it on the pullback. It's already up there towards 445.84 on the offer. Looking for a pullback towards the 444. If it can make that bottom attempt there and just come right back through VWAP, it'll be looking good. And that's Ulta. I'll put it up here so you guys can see that. And so I'm looking for a little pullback right back towards these levels. I missed it on the pullback because I was, looking at other trades here. But Ulta, nice little pullback there. We talked about, I like the 445 level. I would have got already long on this little kind of reversal action. So I'm looking for the pullback into that I could risk off the 444. It looks good, but this is a hard thing when you're dealing with stocks that have spread, right? 446.58 by 445.50. That's a whole dollar point spread. It's hard to deal with those. What you got for us, Ryan?
I was just going to say, JG saying he's off to the cinema. I remember back to my childhood around Christmas, we would often get random cinema days where my dad would take me and my sister to the movie theater, and that was so my mom could wrap some presents. So hitting me with that nostalgic vibe there, JG. Good. Have a good time. I would be interested to hear what movie you're going to see. My guess would be Avatar. Good luck on your plays. Thanks for the kind words. Good luck to you, sir or ma'am.
Oh, the good old days when we were young, hiding underneath the tree, man.
Man, I'm telling you, I didn't want to ruin the sound drop there.
You're good, no, definitely. I think everybody remembers those days, and it's just how it is, right? Oh, man, this Ulta spread not helping me. Now you spread $1.50 wide. Come on, Ulta. This is the hard part of going after more expensive stocks. Sometimes you got to put stuff in between. You got to put some on the bid, spread out the orders a little bit, maybe to get the better fill. But it's not easy, right? And then this is why sometimes I think we need to keep in mind the free commission game, right? We can put in multiple orders. There's no need to put in all or nothing order at one specific level. That's the tough part with me with a stock like Ulta, when the spread right now is literally, it's got to $1.50 wide. That's just tough.
Yeah, no, it is tough. It makes those higher price stocks that much harder to trade. Real quick, shout out to your daughter. Happy birthday to your daughter there. Crow, nice shout here on SINT. You've been all over this. Congrats if you fought. I think you meant bought. I think, but not sure here. SINT actually looking like it's going to try to take some more highs here. This stock definitely strong here. You know, the interesting thing here, we do have this phase 1 contract from the U.S. Missile Defense, only for 150K. Here we are, new highs 14 and through on SINT. So nice stuff there. Nice stuff there. And you guys are expecting data here in the next minute.
Oil stocks, 10 o'clock. Big news, guys. Watch out. That could shake up oil real quick. Micron, since we mentioned it, it went straight down, guys. So be careful. Market turned around massively there. Everything was in the positive. Now we're getting that bounce in the SPY. So watch out, team. Bouncing, coming strong here. SPY pushing strong here. Consumer confidence numbers probably came in good there, getting a little bit of lift in the market. Let's see if this can really drive some stocks out there. I cut the complete position on Hasbro, so I'm looking around to see what else we can get into.
So
Best Buy seems interesting for me. I'm looking at that right now. Might get into this. If I can get just the tiniest bit of pullback to 25s. If not, I'm just going to risk off the 80-20s. I like it here. See if it can pull back a little bit.
Okay.
Ulta making the move.
So this is pretty crazy. 13, are you still out there? Let me know if you're still out there. There's several hundred people here. Let's see if 13 is still out there. I want to show you why I shouted that earlier. I want to show you why I shouted that earlier. Let me find the recent chart here. Okay. And now let me share this chart. I have to do it through here, right? So I have to stop first, then I have to hit present, share screen, window, and now we got to find this chart image. Here we go. Okay, 13. Okay, 13. Now, remember, this is credit of someone here in the chat. So this is all 13's chart. This is all his charting. He is an ace at it. So I'm just presenting it on his behalf. This is pretty amazing. One of the things that we do is we track SPY every day in the happy hour, and I'm sharing it, folks, or sharing it here with you folks. This 383.98 is this bear level. This represents a 20% correction from the highs that were set earlier. This 398, this has been a really, really important level. And one of the things that we discussed yesterday is we might actually see a rally back up to this resistance level, right? Well, let's go ahead and see what actually happened. Let me go back to my SPY chart here. I'm sorry it's taking me so long, Mitch. I can see you.
No, you're
seething with
good.
anger.
I'm just more along just trying to get Best Buy, and it's like offering up, and I just did this. I jumped on the offer, and I like regretted it. So I'm not trying to do that right now. I'm trying to let it come back to me on a pullback fill.
So now I've got this chart up. The first attempt here, okay, if I'm mousing over this red candle right here, okay, this stopped exactly, has a high of 383.98, literally to the penny, stopped at that bear level. Now, the intrepid observer will realize that we are busting through that level right now, but it did actually take 2 attempts. We also had to pull back to the 383 before we made that move through 384. So 13, I just got to say, man, the charting job that you have been doing and sharing with our community here, it has been absolutely fantastic. It's awesome to see those levels hold and be obeyed. Looks like we are breaking through here. Let's see where we go. Be interested to hear what your update is on this. Amazing stuff, 13. Amazing stuff. That was literally to the penny. Literally to the penny. In fact, I'm going to go ahead and draw that line on here so I have it on those charts. 383.98. Boom. Boom.
All right, guys, I took a little bit of Micron there on the pullback. Saw all the tech stocks get a nice little push up here. So I'm looking to get in also on Best Buy on this pullback. It's not looking too bad. Just need to get filled in between here. I'll let you guys know. I put the limit out there. Boom. Just got to fill there. 80 23s. 80 23s on Best Buy. All right. And then for the Micron, I got to pay attention to that too. Whew.
A lot going on, huh?
Here. Yeah,
sure,
a lot going on.
Sure looks like we might be setting up for the Santa Claus rally too. Just saying. Just saying.
I mean, the SPY's made a big move up right there. Now let's see what happens from that, right? I mean, the SPY, can it continue? It pushed right through the 384. Now it's pulling back. We want to see the prior resistance start acting as support. That's around the kind of the 383.80 level. So let's see if that can hold here, and we get right back through the 384s on the SPY to the upside.
Shelly is short SPY, folks.
She's short SPY?
Looks like it. Short SPX now, not SPY. Sorry, Shelly. Sorry, Shelly.
There you
short
go.
XPX. Nice little shout out there. Love
Don't SPX
it.
me, bro.
Just, what did you say?
Don't SPX me, bro. Don't
SPX me. I thought you said don't DX me. I was like, are you trying to derive Mitch? We'll just integrate Mitch instead.
Let's do it.
Oh, Shelly, I want to hear your best math jokes, Shelly. I want to hear your best math jokes.
Ooh, Best Buy coming down fast. Micron looking good, though. So we might just cut the Best Buy. Going to hold it towards this 80 here. 80 needs to hold here on Best Buy.
SINT pushing to the next leg up here. Remember, we did break through 14, currently at 1460 now. SINT moving right off that relative volume scanner.
Want to see if Micron can get back through the pre-market resistance. No, you're good. We're just looking at different moves right now. A lot going on. It seems like one of those days, right? I'm trying to hit the gas pedal a little bit here, but we'll see what happens, team.
My math jokes are pickup lines. All the more reason to want to hear them here. I will only say them in front of Buddy. Buddy is taking a nap. He was super wild this morning.
All right, nice little push here in Micron. Here's the pre-market resistance, 51.23s. Want to see if we can get through there. If we can, I think we can get back to the daily high. Daily high even went through the 51.50s. So towards 51.40, I can take a big amount of profit and look to see if we get the run or not.
SMMT looking to pop here on SMMT. 430 right now. We'll see if it takes out this 430 spot. This seems to be the spot here. Nice little formation here on SMMT. 439, the next one that we're looking at. 430 is down. Some pretty good buying volume in there. 439 would be next. Pop above that probably sends this too. Remember, not yesterday, but the day before. So Monday, we actually had a high of 540 on SMMT.
All right, looking for Best Buy to come back through the 80-40s. If it wants to do that, it won't be looking too bad. But if it rejects here, comes through the 80s, I'm going to cut it. Already set a stop on that one. Sometimes when I'm focused on this, instead of focusing necessarily on the loser, I'm trying to maximize my winner. So I'm going to limit the loser probably with a protective stop. And then I'm going to focus on my winner, which is Micron right now, to really try to maximize the return. Because if I can maximize the return on this one, it's okay to cut that Best Buy as a loser. And so we'll see what happens here. Can Micron get through the pre-market high? I saw NVIDIA taking nice leaps, AMD making nice leaps. We'll see if those can continue. Those have been pushing well. AMD actually looking like the strongest one right now out of those two.
I'm watching SMMT here for a break above that 439, looking pretty good.
Yeah, Boeing is definitely a good one, EKS. And you guys know I'm not even a bull on Boeing, but I think it's a really nice setup. Look at that push now going towards 194.79. Really nice day there for Boeing. I'll put it up here. I had it on my other charting, but look at this daily push now.
Yeah.
Really nice push there. And it gave you a chance to get it at pandemic lows again. Just like when you think that you'd never get a chance, you did get a chance there in Boeing. It's up there towards 194 right now. Has been making more and more requests. And it seems like finally the Boeing Max, right? The 747 Max is really going to get the regulatory passing the regulatory after, of course, the review, after a couple of them had struggling problems. That's, I think, giving the lift. And it's going to continue lifting here. Not a bad value name. As for a person that was bearish this, I got it wrong, and it's looking great.
Voodoo, that's good feedback. I really appreciate it. I'll shoot you an email later today. Shelly, happy hours is a little pop-up in pro, little notification. So it's for pro subscribers. Virgo, huge shout out here. You had mentioned VKTX earlier today several times. We were in the middle of talking about some other stocks, so we didn't get to it. And for that, I apologize to you. Great call here, though. Nice little we kind of sold off out of the gate here, really held that 7 level, moved right back to the 722 level, which is one of the levels we were looking at yesterday. We actually pushed up, back tested it, and we've taken several legs up here. So VKTX definitely looking strong here. As far as your next spots, to me, it really looks like 825. Your next resistance spot here on VKTX. That's far away. We're currently at 765 right now. Great job.
It's been a good one today, guys, and that's what I say. Let's get it, guys. That money, it's a crime. Look at that. Not a bad little move there. And Micron just took majority of it out there at 51.40s. We got in this one 51.07. Not looking too bad. We'll see if it can continue through the 51.50 high. Best Buy coming back here towards my entry. Not looking too bad on the 5-minute, right? Bottoming around the 80s. Now let's see if we can get through the trend line here. That's what's going to make the sense here. We wanted to see it hold now the 80.10s, push up through the 80.40s. Let's see what happens there in Best Buy. Is it a Best Buy? You guys tell me. What do you guys think? We'll find out.
Well, Jay Rice here. This is actually funny. I've never used this, but I will use this going forward. VIX is close to a teenager. Remember, with the VIX, every time we've got down to that 1850 level, we get a really huge bounce in that VIX chart. So maybe we're nearing the top end of this. Maybe we get, kind of top out here today and start selling off. We're definitely watching the VIX chart. And at EKS is asking for us to ring the register. We'll do that. We'll do that several times. Let's go.
All right, getting a question from W about Halliburton. It looks like an hourly pullback to yesterday's resistance, now catching support, starting to work its way back. That's what I see on Halliburton's chart. Just going to call it out very simply. And that's on the 1-hour chart. You'll see resistance around, I would say specifically the close there is 37.64. That acted as support today. Best Buy, Best Buy, Best Buy. What do I do with you? See what happens here. Don't want it to cut through the 80 again here. Should get back above the VWAP, which is a cut through back towards the 80-30s.
Looks like SMMT pulling back here a little bit. SINT, that big runner, looks like we're halted here. Last halt was, 3 minutes ago? Halted here at 1287. This looks like a downside halt, although I wasn't watching it. So confirm that for me if you could, Crow, please.
All right, not liking this Best Buy. Just got out of that one, cut it out there. First loss on the day. Still have some Micron. Good trade on Hasbro. Let's keep moving. How'd that Ulta do? Look at that Ulta move, man. That would have been a nice one at 445s. Just missed it. And that's how it is sometimes, team. Especially one thing I say often is when you have certain plans for certain stocks, it's going to be important to have charts that keep them up. Normally, like if I wasn't trading like together with you guys, I would use my 4 screens to the max ability, and the screen that I'd see you guys on would be full of like 8 different charts that I'm just trying to focus on and have alerts set. This is one thing that I can teach you guys to sometimes think about it. Are you getting too focused on the noise that's going on in the intraday and losing out on plans that you have already set? This is why I like the planned approach versus more the wing it approach into the market. What is the ticker ES on TradingView, please? That's going to be I don't know. I don't know the futures game on TradingView. I'm not sure.
So I'm sorry that you're stumping us there. First of all, just understand in Pro there is no futures feed. That's one of the ways we're able to actually keep the cost low. So you won't have that ticker despite having the TradingView license in Pro. Now, as far as TradingView goes, I don't actually know what that is. My first guess would have been ES. By the way, SINT open here. We popped above 13, but it looks like we're feeling a tad heavy. See what the next move is here. If you're trading this, good luck. Be really, really careful. Looks like we're going to go, if we break that 1287, I think we're going lower here.
All right, SPY starting to get a little bit toppy here, but it did break through that 384. So just kind of mentioning that there are some strong stocks out there. You just got to go looking for them and try to find the relative strength right now.
Appreciate the chat. Always looking to help out fellow chatters here. /ES, ES1, and ES are the 3 suggestions that we got from the chatters. Looks like ES1.
All right. So right now, stocks that are doing well: Carnival Cruise, Master Brands. I don't know this one. It's a SPY stock, but it's a $7 stock. It might have just gotten added. Master Brand Inc. Have you ever heard of that one?
No. What's the ticker?
MBC. It's part of the S&P 500 now. So it's not one that
MBC, Master Brand.
looks interesting off the VWAP right now. Not something that I'd known before.
Was this a ticker change? Because I only have one.
Has to be a ticker change. Has to be a ticker change.
I have December 15th is the last
I don't know.
candle I have.
I have to research this team. It's something that I just found out about, but we'll end up finding out. Master Brands, MBC, interesting stock there. It is trying to bounce there off the VWAP, but RCL, better stock, right? Royal Caribbean doing well today. Cruise lines just doing well. Also Norwegian making a move. Etsy making a nice move up today. GE making a nice move up today. If GE's making a nice move, I'd look for Honeywell to have a nice move. It's hanging on right now. It just bounced off of VWAP. We'll see if it can continue making a lift. GE having a decent day there. What's up with Deere? It's hanging on right now. Not much going on there. SPY is making that up move, though. We're towards 384.62. There's Santa Claus coming to town. I could think we get to the 385 today. I don't see too much further than that. So if I see a breakout above 385, that's where I'm going to be like, okay, boom, the Bulls have control and they're running it. But we've had a nice little up move, and it hasn't been a bad move, right? I think a lot of stocks made a nice little move. Majority of stocks into the green today. Now I can see it starting to slow down as we get closer and closer towards resistance. We'll just have to see if it's kind of more of a volume push here.
Nike 3 points off of its highs as we speak. Mitch, here you go. All right. MBC Master Brands is the largest residential cabinet manufacturer in North America and has completed its previously announced separation from Fortune Brands Innovation. Effective of 5 p.m. Central Time, Wednesday, December 14th, Fortune Brand common stockholders of record as of 5 p.m. Central Time on Friday, December 2nd, receive 1 share of Master Brand Common for every share of Fortune Brands common stock held on the record date. So it looks like this is a spin-off of Fortune Brands. Company is now public. December 15th was the first day that it was trading, and that is the daily candle that we have. So there you go. Solved.
All right. Trying to do something for us here. I know that some people are asking me to kind of stay with the charts. It's just hard when I'm using multi services to show you guys that. But I can do something here that maybe will help it.
We fight through it, Mitch. We fight through it.
All right, so I'll show you guys this charts there.
Ooh.
The only thing is that you won't see us when I bring up this chart. So I don't want to kind of take us off for too long, but I can show you guys stocks that are making moves. I know that I use my TC scanner more than I use kind of my Benzinga Pro right now, but I'm using my Benzinga Pro for my charting right now and trading and looking through the intraday scanner for different types of stocks, right? So I do sector outlook on this one, but I'm also doing at that same time a scanning outlook here. And so it's all more relative what you like using. For me, scanners are really good at finding the recent move, right? So I can I shift this down towards the 30 minutes and I can take a look at what's moving on the 30 minutes. That shows me Asana right now, not a stock that I was thinking about trading today, but that just shows me more and more how there's certain stocks making a quick move up. And then you could see on Asana, nice little lift there, right? Well, you got to use multiple tools here. And that's what I'm kind of showing off more is when you got the multiple tools to help you, it's definitely going to give you an advantage.
Asana, what a fall from grace that stock has had, right? $13, almost $14. That stock was 147 at the highs.
I don't know why I didn't short the hell out of that crap ride.
Oh my goodness.
I wanted to short it the whole time up, but that's just how it goes. And it also showed me that on certain stocks like that, if you feel they are going up to a point where it's just nonsense, I'm going to actually be looking longer term to kind of get short on stocks like that. I have no problem.
Would you actually carry a short equity position, or would you do it with puts or something like that? I know you're not an options guy.
I think what it's going to be smaller positions in cash, but let it go. Like at that point, just take a really small position and just say, okay, well, I think this stock will go back to like $20. Well, if you think that, I mean, even like 5 shares, right, will do a lot for you, right? I think that's where a lot of traders get lost thinking that they need to put big bets on for the move. If it's a long-term move, you can put a smaller bet on and let that trade work.
SINT just absolutely ripping here now. We talked about SINT holding that 13 level. It's doing that, but man, it's really starting to push off now here. So just kind of keep this in mind. If we break this high here, I would say 15 really. I would actually, the high here I have is what, 1512-ish. I'd actually play this through 15 for an attempt here. So through 15 on SINT. Be quick with it though. Be quick with it. This might yank as soon as it breaks through there. So make sure you get your profit if you do in fact trade that.
Sark is about to break through my levels. I'm still watching Sark here. I'm still in that swing from I think that was on Thursday. So just watching it here. I just wanted to hold 65s. We'll see what happens. Still got to stop there. That can stop me out if I need to. Still in the green there in Sark, but really wanting to get it back towards 70.
Sorry, just looking around here.
No, you're good, my friend. Let's see if Micron could take that next step up here. It doesn't look too bad. I'm looking for that to make that next move here. Still in this one from 5107s. We took some profit there at 5140s. Last time it got up there, pulled back there to 51.25s. Now let's look for it to take out the highs there, 51.50. If we can get through that, start making a push towards 51.60, we can take the rest of it off and celebrate the day. Not a bad move there. Micron. So shout out to Ron in the chat. He brought this one up. He didn't tell me where to trade it, but he definitely brought it on my radar, and I did the rest. That's
Ron's
what it's all about.
Guy. Ron's got his eyes on the big movers every day. You can count on that. VKTX here pushing up to that 774 level. This represents yesterday's intraday high. This also represents one of the levels that we went through when we popped up in the pre-market. This was December 19th. So VKTX still in play here. Curlin looking like it wants some more here. A break above this probably puts, let's see what. Gosh, I want to say 1020 going to be your next spot here, thereabouts. 1020. Unreal. VKTX really, really strong. Virgo, another shout out. You were on this one earlier today. We should have been talking a little bit more about this one today. I'm sorry. A lot of stuff going on. You know what that means.
You're going to need a bigger boat.
We're going to need a bigger boat to handle all these trades. That's for damn sure.
SPY battling up here in the 384.60 handle. We'll see if it gets back towards 385. Talked about how that could maybe start playing as resistance. We've had a good day so far, so it doesn't look too bad. We could start seeing some reversals actually happen here. Looking to see if Micron can get through the 51.50 area. It's at 47, has tapped 48. Let's see if it gets through there here, and then I can take some profit into the high of the day.
Nice trade on that. Nice trade on that, Mitch.
That was searching a lot. I'll show you guys exactly what I did there to find Micron. And it wasn't that I was looking at Micron first. I looked at NVIDIA. I looked at AMD, but they were already above the VWAP. And so that kept me off of those plays. What I was looking for was a VWAP style play. And if you look at Micron, it was right off the VWAP when I got in there. So the VWAP was at 51 tens, and I got in at 51.07. That's why I got into Micron, because it was lagging the effect that I was seeing in the semiconductors pushing up. NVIDIA was leading. AMD was making a nice move. And then I looked to Micron, and I was like, oh, man, that's still off support. Let me go for it. It worked out.
Check the Twitter streets, see if anything's going on here.
Yeah, I think today was a better day than yesterday, just personally, from what I've seen in the action.
I mean, it definitely is. Definitely is.
I feel like yesterday was just a little bit choppy. 47, 51, 48. Come on, Micron. What you got for me? Get through that 51.50. No, it didn't do it. Rejected. SPY is getting toppy here. I'm gonna look for one more push here. One more push. Getting tippy toppy there. Went to 384.92s and it just stopped. Let's see if we can get back through there.
FedEx only up about just under 4% here.
Yeah, FedEx.
They liked the earnings. They liked the earnings yesterday and in the pre-market today, but ever since the market is open and the volume showed up, we've been pulling back here. We'll see if this can go higher.
I mean, if you looked at what they gave in the earnings, right? I think that's what people need to sometimes catch is the earning call. So on FedEx, what actually hurt it was the earnings call. It wasn't necessarily the numbers given out. And that's what matters. So one thing that they clearly can see is that they see slowing demand, and that's what they mentioned on the earnings call. That was an important catch.
And think about that, Mitch. The numbers that you're referring to, those are backward looking, right? That's about the quarter previous. The call, that seeing slowing demand, that's forward looking. So that makes complete sense to me. That dynamic, that action makes complete sense there.
Yep, and then that's how you can sometimes miss it, right? You saw the numbers. The numbers can lie to you if you don't catch that earnings call. This is why some people say that the earnings calls are more important than the earnings themselves. Why? You also get the Q&A from the analyst, right? A lot of times they're going to the analysts that specifically cover that stock, that are experts in that area. Well, this is exactly what Adam Johnson talked about on yesterday's video that we put out from New York City, Central Park. I asked him some questions on investing into 23. And if you guys missed it, I definitely recommend to check it out. We talked about how to find high quality stocks in 2023, some of the stocks that Adam's looking at, and how you can also find these going into 23. I'll give you guys that link. If you guys want to check out that video at any time, go ahead and check it out. It's part of our uploads, not a live stream. Can you believe it? Well, check out that video. You guys would like it. Adam Johnson, Bullseye Brief. All right, Micron not getting able to get through there. Starting to slow down. I'm starting to think we're going to get a little bit of a turnaround here to the downside. Some stocks that are weak might start turning back around. SPY trying to get through that 385. Come on.
Oh.
Come on, SPY. Can you get to it? 385 right on the kisser. There's 385. 04, 06, 08. There we go. A little bit of expansion. Now I'm going to look for like a little bit of a weak move right back down. Let's see what happens here because it is pushing through that 385 spot. We are getting the lift. I'm looking to push through on Micron and sell out. We'll see what happens here.
So Tesla, man, Tesla cannot figure. This is one of the reasons why swing trading just in general has been extremely difficult. Look at this chart here in Tesla. First move was down, we bounced, then we took another move down, then we bounced to highs, and now we're when we pitched around there, whatever the stupid word is.
Yeah.
Then now we're trading back down towards lows. So this thing just absolutely crazy.
Our charts.
Scalping works here.
Our charts. That's what's going to help there on Tesla. Get around some of the action. Get around some of the wicks. Look at the hour. Look how it holds that 141 so cleanly as resistance. It was just a bounce, and it got faded right back down. I'll show you that right here. Look at this. 141 hourly, went right back to it, came down, right back to it, came down. So the levels that you're really looking at are kind of the hourly resistance and the hourly supports. And if you look back, it's done this before, right? It's come to support, came back towards resistance, rejected, came down, right? And so Tesla does this often where it'll come down, it'll make a support, it comes right back towards the hourly resistance, and then eventually cracks through. Look for those types of moves in Tesla. And it's hard because you have to be using hourly charts and then an intraday chart to time that entry, right? And then nail it. That's not easy. That's why Tesla, some people say it's an easy trade. It's not an easy trade by no means.
I was going to say, you're a baseball fan. How about this for a stat? You ready for this?
Yeah.
Of course, the Mets signed Correa last night, right? I'm sure you heard. The Mets spent more in free agency in one night, $315 million, than the Pirates have spent since 2010, $207 million.
Yeah, and that's why baseball is troubled. Right? It's only for big market teams. It's not set for small market teams to do well. That's why I love my Rays, because the Rays figure a way to spend $30 million, $40 million, and put out a great product. These other teams, like the Yankees, spending 5-6 times the amount of money and yet get beat by the Rays? Come on. It's kind of like seeing we ain't going to get into it, but it's like,
here we go.
Ryan, you know what I'm thinking here. It's kind of like the Rays should be our government and not be so Yankee-like. Let's just say that.
I did. That's not where I thought you were going, but
I tried to hold it back a little bit.
Okay.
Let's go Braves. The Braves spending a lot of money too, but they lost a couple players. Moneyball, the Moneyball approach. Yeah, Oakland A's, they're not too bad. I like the Seattle Mariners as they keep developing. They're following the Rays strategy. Build from within. The Wall Street Shuffle.
Shout out Beach Bum for giving us the oil numbers there.
There you go. Oil.
What happened to it? To oil. Higher on that.
SPY pushing here, guys. 385.30s now. XOM completely changed tune from that bottoming action there when the numbers came in. 10 a.m. Look at this chart, guys. Look at that. Look at that 10 a.m. bottoming action right back up there in oil. Hourly supports. Did they come into play? Well, here you guys see it. Prior resistance acting as support. This is why I look for those pullbacks all the time, because all the small traders, they get washed out on that pullback. If you were buying that 1 hour pullback, you nailed that thing right back up there towards the resistance. You don't even need to sell at resistance. I mean, let's just be honest. And the SPY just telling us Santa Claus is coming to town. Whoa. Santa Claus is coming to town. Whoa. Santa Claus is coming to town. Let's go. Let's go. Get it going there. Look at the SPY ripping. Santa Claus said, we let Rudolph take the lead. Rudolph, the red-nosed reindeer, taking the lead today.
Can we get a check on Mitch's coffee? We need to check for alcohol in Mitch's coffee. He's a little out of control this morning. Over.
Let's go! Santa Claus is coming to town, team. Let's get it going. Don't stop.
Oh, that's funny. That's funny. SPY, though, legit breaking out here.
Yeah. I mean, that was a nice push there. Another thing to note there is look at the increased volume, 600,000. Now, of course, as we get closer and closer towards the gap area, we're going to start looking to see if we start filling in that. Now we're starting to get in there into the daily gap on the SPY. So I talked about this gap area. Would we try to fill this area, or would we come right back down? So now we're starting to get in that area. This is where I think we would get a rejection eventually, but we could fill this all the way back towards 390 and then cut back. So we'll have to wait and see. But right now, it's not looking too bad. And if I look at it, every sector into the green from the open, very rare industries in the red. Looks like it's a risk on type of day. Pretty much where you're looking at, not looking too bad there for upside continuation as we keep getting the push.
Rod says, I want whatever he's drinking. Yeah, me too, Rod. I'm still trying to figure that out myself. Mitch woke up in a Christmas mood today, right? And the SPY is now giving him the Santa Claus rally. We are popping here, folks. So Mitch is, I got it. There's some vodka in that orange juice. I got you.
What can I say, guys? I mean, I was hearing those bells ringing, and I was looking for Santa Claus. I had a feeling, let's rock the Santa Claus hat today. Let's see if we can start getting the Santa Claus rally going.
I like it.
Not looking too bad right now. Even that Best Buy that stopped me out earlier did make a nice little move now. So I'll show you guys that. But that one's not looking bad either for a little bit of a Santa Claus rally. It stopped me out on that last pullback, but you guys can see Best Buy now up there towards 80-40s. We'll see if that can continue popping there. What's up with the Nike stock? There it goes. Now it's starting to bottom. Remember, Nike made a nice little move. Now it's starting to bottom here. Doesn't look too bad. Look how this green bar, the 3 advancing soldiers, showing us the strength that it's just getting right now. So that's that 3 advancing shoulder look right there. Nice little green bars right back. Now let's see if it can hold VWAP. VWAP is around 117.27. We'll see what happens to this. And it came back to hourly support. Wouldn't you know it? Around the 115.52 level and maybe the 115.32 level was some support there. Nice looking pullback here on Nike and could continue pushing here through the 117.
Easy, Mike. Best way to deal with the AMC bots is to just straight up ignore it. That's what I've been doing here.
All right, guys, not liking that Micron rejection of continuing through 5150. So we're just going to take it right here, take the profits on Micron. Not a bad little move there. It was a good one. but they didn't want to continue seeing the slowdown. I'm out of it. Can look for another opportunity now. Someone might know me. I'm not going to say why. But let's keep going. Let's take a look. What else is going out there? Looks like Basic Materials having a good day there. Steel. X going to give it to you. He's not looking too bad today. X, second day move back up towards resistance as steel starts to push again. We'll see what happens to names in steel. Nike battling that 117. See what's going on in the SPY. Are we going to have reversal style action here? Or is it just going to be straight liftoff into Christmas?
You know, how's the volume doing on SPY?
Overall, let's see.
15 million. Yeah, this is a breakout. Maybe this is your start of your Santa Claus rally. I'm going to credit the hat, Mitch. I'm crediting your hat for this rally today.
I tried to come in here with the.
We got to send a message to the news desk and get a whim printed on SPY. Mitch's hat caused the market to trade up today.
Yes. All right, what you got for me, Crow? You taking a look at some hourly charts? I know you've been loving them.
SLNO hourly chart. Let's see it.
All right, let's take a look there. SNLO or SLNO. I don't know why I kind of flip-flopped it there. But let's take a look here. All right, let me put a big screen here. 1 hour chart. Let's go to it. Look how everyone forgets it after this day, right? Majority of traders, they love trading this chart, right? When it's popping, right? They're like, yeah, I'm looking at SLNO. What happens usually? Well, you'll get a day like this yesterday where the stock didn't do anything. It just went sideways action, consolidation, right? What happens? Well, yesterday they might have been paying attention to it, but a lot of traders forget to look at this. You can see the Crow being not one of those traders, and he's paying attention to that sideways consolidation. It gives us levels to really go off of. What's the support? What's the resistance here? And then when you're getting like hours of going sideways, I always look for those trends to break and give us opportunities to look for the move back towards the resistance. If we can get back through this resistance, let's say 151, actually hold 150 on pullbacks, we could go into this gap and fill it right back towards 182. Doesn't necessarily mean that we have to go back to 230, but it does give room, and there's a room there. There's not many price levels. There's not volume profile there. It can just flow through there and get up there towards that 180 or 190 level. Not a bad outlook there on SLNO, and hourly pullbacks to support looking good here. We'll see if it makes the next step. Not bad to keep an eye on those. I do love those hourly charts. And X gonna give it to you. Nike trying to make that 117 move. You can see it's battling there. It pulled back to 116.60s. Let's see if it gets through that 117. SPY overall, what a monster move there on the SPY today. We've had about I would say 1, 2, 3 runs. Maybe we can get one more, but I don't see too much further from here. But then again, I saw 385 being the top, and you guys saw how we blew through that 385. And then Santa Claus celebrating here. You know, it's one thing you're going to hear a lot in the media today, the Santa Claus rally. And I hope that at least we were able to talk about it first here on Benzinga. Lassie coming back up. Okay. Alt, says Virgo. You can take a look at some of these. Paul says AMC going to 10 to 20 by next week. I can see it getting a lift maybe from sales from Avatar. But then after that, what happens? Probably a knockdown right back. So it's tough. It's tough to trade that AMC. I've heard there was some news that was supposed to come out, but I mean, just look at Ape. Look how that did, right? It's just a trick. I don't trust that. I don't trust the leader of AMC by any means necessary.
This is all I have to say about AMC, Mitch. And I might make some enemies with this one, but it is what it is.
You are fake news. You are fake news.
Yeah, I think their
I don't know what to tell
CEO.
you.
I think their CEO is more fake news, but it's not even the company. The company itself, what it does, okay, movie theater, right? People will come back to movie theaters. Now, what I don't like is the tricks that get played on by the CEO towards the investors. Like they tried to say that Ape was a good thing for AMC. How the hell is something that opens up, gets sold to you at $8, then goes down here to 72 cents? How is this good for me? Come on, guys. Come on. Like,
Come on, man.
you're killing me, man. Look at the monthly chart on this. Can't even get a green month on the Ape. That just shows us
I
something.
mean, look at that chart. Look at that chart.
And you know why they did Ape, right? Why did they do Ape in the first place? The idea of Ape was created because they couldn't dilute AMC any further.
So they're going to dilute it with Ape instead.
Literally, that was the idea here. We can't dilute AMC any further. So we're going to create this preferred share unit. We're going to call it Ape. We're going to make all the apes super excited. Put your money into this. Then we're going to flush them down the freaking toilet. Come on, man. You're killing me, man. You're killing me. All I got to say is
Run, bitch! Run!
You guys, I'm going to try to bring this back here. Mitch, you're making me laugh quite a bit here today. Lassie, right? We talked about this. We talked about this setup all morning. Well, here we go. Fourth time was the charm. We busted through, went all the way up to 240. There's your setup. New high a day here, 240, 239, 240. So Lassie, we'll see. And again, remember, this was the other thing that we were waiting for. We talked about it when we were looking at this volume expansion. We said we'd like to see volume candles surpass this. That's exactly what we got on the cross through 218, 219. Great trade here on Lassie. Had to be a little bit patient. But we ended up getting it. We had this trade pegged from this morning. I know Crow hit this.
ow.
Ooh, that's
can I
what I need
say?
to get. We need to get like a lone wolf howl. I'll look into that.
Yes.
VKTX through that 774. Gotten a lot of moves here. That this next tier 825 for me on VKTX. 825 your next spot. Another 40 cents from where we're at.
All right. Starting to notice the SPY slowing up here. Just be careful, team. I'm not saying that it's going to turn around by any means yet, but is slowing up there at the 386.50 area. I'm looking at the 1 minute though, so I might be a little bit like too into the time frame. 5 minute also shows reversal. 15-minute candle still hasn't closed up here, so I'm looking to see what happens. All right, what else is going out there? Good luck, you serious AMC holders. Yeah. I mean, I've talked to serious AMC holders. You guys know I'm friends with Matt Core, and I'll tell you right there. I mean, Ape, that was not a good thing for the AMC holders.
Nope.
And some people are going to admit it. Some people aren't. And as a person that flip-flopped between bullish and bearish AMC multiple times, I can tell you right now, that wasn't a bueno one. It wasn't a good one there to bring out the Ape. And I think that was the final flush of trust from the CEO to the investors. At that point, I think even the hardcore apes are like, man, this guy is ruining this stock as a CEO. But hey, to each his own.
Alt, good shout here on Alt. We're a little late to this. We've actually traded this before. We traded this when it was single digits, I think right around the 6-7 handle. And now here we are up around 14. So this one been really, really good. I'll be honest, myself, I didn't do enough research on this company when we first saw it. I kind of dismissed it. And sure enough, we're having a nice little move here. We were actually higher than this. We were up around 24 bucks. So this is, I think, when we were trading it, when it was right in here.
That's how you do
right
it.
In here.
Love it. And this was brought multiple times in the chat. Shout out to you, Virgo. Today you've been killing it.
Yeah, Virgo's on top of it. Definitely leveling up the chat here today.
And that's what it's all about.
Yep. Shelly's asking, where is Zunaid? Zunaid has some other commitments outside of work here around the holiday, Shelly. We actually just checked in with him. He is doing fine. He misses everyone. He misses everyone here, and he will be back next week when I take my vacation. So, Mitch, we're not going to stick you here alone. We're going to make sure you have some help. We're going to bring
I want to give you guys a little insight into next week. So next week is going to be a little bit of a kind of rest period here, I'm going to call it, for live trading. And the reason why there's going to be a lot of like holiday days off. We also have some event that we're going to try to pull off on Tuesday that will take live trading time. Wednesday, we'll be having a sports betting event for you guys. And so Thursday will probably be the only day that we have live trading. Friday, I'm going to be taking off as I go ahead and try to enjoy the New Year's. I hope that a lot of people try to enjoy the New Year. You know, one of the things is once we can kick off and get out of 2022, hopefully we can have a better 23. The New Year is going to actually be on the weekend this time on a Saturday. So I'm trying to enjoy it. I hope you guys out there get a chance to enjoy it also. Majority of the times, the last couple of New Year's have fallen either like on a Monday or where I had like an exam the next day. So I'm just going to be happy with just ending the year, enjoying it. So Friday, look to see a little bit less content. That's next week, of course. Monday, we're out, of course, the 26th, market day off. So don't miss us there.
The Monday after New Year's, right? It's another market holiday in observance of New Year's, which falls on a Sunday. So we'll be looking to hit it hard though in 2023, and I'm really hoping that we get some better market conditions. We can make some more of the wealth building moves here instead of some of the scraps. Shelly is saying 0 chance of Buddy. Shelly, you know that is not accurate. All right, you know 100% that what you just said is not accurate. You have asked me on command for pictures of Buddy via Twitter when I was not on live trading, and we gave it to you. All right. So you know that there is a higher than 0 chance of Buddy. He is going to be enjoying Christmas and New Year's as well. I will try and update it with pictures.
We'll see what happens, right? I mean, I do see people talking about that there's supposed to be an AMC mention coming up. But the one thing that we've seen is that every one of those have been kind of buy the rumor, sell the news type of thing. So it is doing well today. It's making a little bounce, but not anything that I'd be looking at. All right, we'll see what else is going on here. Looks like we're at 10:49. I'm going to start queuing up some education for us to keep pushing forward. Like always, team, I do recommend that you guys check out our video from yesterday, how to find high-quality stocks. Adam Johnson, New York City. Mitch, Central Park interview in person. Check it out, team. It's a really fun video. I think that a lot of people might have missed yesterday. I can either play it right here or you guys can go to the link. You guys let me know if you guys want me to play it again here, but I'm going to start queuing up some education here. Ryan, you go ahead and give us a little bit of a wrap up of what you saw today and what you're going to be looking forward going into tomorrow.
Okay, well, what did we see today? We saw some of these small caps really rip. We saw the market try to take its next leg up. We see maybe we saw the start of the Santa Claus rally here today. Going to need more data to confirm that. Small cap market here really working for us. Lassie, this is one that has given us multiple opportunities here. Looks like we're setting up for another leg up here. Shout out to some of the other trades that were on today. SINT for any of those that traded here. I think that trade might be done, but at least we got some of that early on today. VKTX, another good one. What am I going to be watching going forward? Mitch, I'm going to be watching some of the holiday prep meals. I'm pretty much done trading myself for the year. I look to be able to restart again next year. So as far as what I'm going to be watching in the market, I really want to see what we do with the SPY. I really want to watch the SPY and the VIX more than anything else. Thought it was interesting that some of the semiconductors were strong today. Just going to kind of note some of those strong sectors. By the way, LASE dropping here, knifing as we speak. So Yep, that's about it. Just kind of watching to see if we get the Santa Claus rally and waiting for those hoofs on the roof. Looks like I did not go long enough. Mitch is still taking care of his Slack responsibilities. One thing that we are seeing here, I'm sorry, Mitch, go ahead.
No, you're okay. You're okay. Go ahead. What are you seeing?
One more thing. Crow, first of all, Crow, you've been on fire recently. One of the stocks that you were talking about earlier that we didn't cover a whole lot was Vero. This is going to be one of those penny stocks. You had said you felt pretty good about this, looking like we really need to move above 45 and then above 55 to get some juice. We shall see. Looks like there was an Okta hack. Thank you, Jay Rice. Okta hack. And you said all of the cyber names are red. That would be something to watch here. I actually didn't see that come out. I'll take a look. I'll take a look into that here in a little bit. But good stuff.
All right. We're going to go ahead and bring you guys over to some education. We'll see Ryan tomorrow. Like always, guys, give Ryan a little farewell. We'll have you back on tomorrow, my friend. Enjoy the rest of your day. Like always, battling with the Benzinga members. And if you're a Benzinga Pro member and ever want to reach out to Ryan or anybody on the onboarding, definitely go ahead and reach out. We're here to help you out and continue your progress and journey on learning your skills in the trading, where it might just be a better understanding of the markets. Like always, we're here for you guys, and we'll keep pushing forward. Have a good one, Ryan.
Day.
Definitely. We'll see if Santa Claus keeps coming to town. We didn't do too bad this morning. Looks like some kids aren't behaving too bad out there. Ryan, looks like you were a good one this year. Not on the naughty list, so we'll get you out of here. Have a good one, man. All right, we'll get you guys over now to some education. We got something for you guys coming up right now. We're going to bring on Gianni DePochi. And, of course, one of the things that I love about Gianni is that he always focuses on different aspects, like technical analysis, focuses on rotation. I think he does a really great job here on how do you chart patterns work here. So I'm going to give you guys a little education from our boot camp. This was a great one. Check it out, team. Tell me what you guys think, and we'll talk about it at the end of it. I'll jump in before Benzinga Live, and we can recap what was said here and how we can also take advantage on opportunities like this.
My friend.
Well, I got a lot of charts for you all.
You got charts?
Yeah.
All right. Chapter 3. How did
charts on charts?
I'm going to go hide out, sir, and I'll let you take it away. You want me to put your screen on?
Yes, please.
All right. You are up and ready to rip.
Okay, very good. Hello, everyone, and thanks again for joining us for Benzinga's Bootcamp, the last one of the year. Today, we are going to dive into how do chart patterns work. We're going to look at various patterns and some of the theories and thinking that goes behind them. But as was mentioned before, I am the breakout strategist and editor of Benzinga Breakouts, and I'm also the president and an analyst of the Mercator LLC. So without further ado, let's dive into some of the basic concepts behind how chart patterns work. So first and foremost, we're going to focus on technical analysis. I know that's been discussed at length already today, but it's basically defined as the study of price trends, patterns, momentum, and other indicators to deduce to a certain degree of probability which direction a stock might be heading. So that's all we have in markets. As many of you have probably figured out by now, there are no guarantees. If you want guarantees, go ahead and deposit your money in the bank or get a CD. You'll get, a 0.5% clip, not that much. I don't think it's worth it. So if you learn how to manage risk, which is something we'll talk about at length toward the end of this discussion, trading stocks or crypto or any market for that matter is a fantastic alternative. So there are different types of trading. You can be a position trader, swing trader, day trader, and you can use those various methods of trading to either trade a breakout, which is my favorite, or reversals. I'm not much of a top picker or a bottom picker, but I know some pretty good traders that are, and I tend to trade more long positions. I like to focus on weekly charts, and we'll talk a little bit about why that's the case on the subsequent slides. But as I just mentioned, risk management is so key. There's a saying in trading that goes, do you want to be right or do you want to make money? That is what I would call the holy grail of trading. You are not going to be right all the time. You don't even need to be right half the time. But if you are more profitable when you are right than when you are wrong. You can still make a good living in this business. And another key concept with respect to technical analysis and trading, for that matter, really just hones in on the whole idea of behavioral economics, is the whole idea that sentiment follows price, not the other way around. So by the time a move is already made, or I should say, by the time consensus or sentiment becomes aware of the bullishness or a bearishness of a market, the move is already made. So from that perspective, why not study price, which is going to pay you? Sentiment is not going to pay you. Being bullish or bearish on a position is not going to pay you. Having a position in a stock is going to either pay you or take from you. So another idea, and I don't need to get too esoteric with all of you today, but one of the principles that I have with respect to technical analysis is the notion that there is a natural order to the chaos. So it turns out human behavior can be quantified to a certain degree. And whenever I'm wrong, I don't view it as, the market's manipulated or whatever. I view it as I'm not aligned with what is versus what I want. So you've probably heard this: the trend is your friend. I would assume that at least 90% of you are retail traders. And the good news is that as retail traders, we can get in and out of positions fairly easily, largely undetected, under the radar. I would liken it to being a sniper in a war zone versus being a heavy infantry tank unit. The big institutions, your Fidelity Growth Funds, your Vanguard Total Market Index funds, they can't buy Apple stock one day and then sell it the next. They buy too big. Their trading lots are too large. But as a trader and as an individual trader, the fact of the matter is, unless you're moving, hundreds of millions or even billions of dollars of stock, and really just depends on what you're trading, you can get in and out of a position largely undetected. So that is an advantage that we need to capitalize on to the fullest extent. And so from that perspective, we just trade with the trend. Let the institutions do the heavy lifting while we just, basically sail next to them as a little lifeboat, if you will. And, we're like next to an aircraft carrier, basically. So another important concept when it comes to trends is the longer the trend, the more powerful it is. So the most, or I should say the longest trend in this market right now is the 40+ year secular bull market in bonds. Bonds aren't sexy, but they're very important. They're bigger than the stock market. So, and that's been the leading cause, I would argue, of or behind so many of the trends that we see in stocks too. You've heard the phrase, software eating the world. Well, it's because we're coming out of what I think a period of secular deflation. The 2000 to 2010 was a period of where stocks really didn't do much during that decade. The 2010s were a period of commodity deflation. We've had exceptional rallies in both of those sectors since March of last year. So, but the main story is the 40+ year bull market in bonds. And so we have to ask ourselves, are we closer to the end of that period than the beginning? And the key that I want you to think about when it comes to the longevity of trends or the duration of trends is the market can stay irrational longer than you can stay solvent. So a lot of times, people tend to leverage up near the top, or, they'll sell, they'll capitulate near the lows. But that's why we study prices, so we can manage risk and hopefully stay solvent during periods of market irrationality. And then to compound on that whole notion that the longer the trend, the more powerful it is, we're going to be looking at price patterns. And when we see breakouts across, longer term time frames like monthly charts or weekly charts, that's more significant than seeing a breakout on a 15-minute chart or a 2-hour chart. So the technical signals become especially powerful when you see confluence across multiple time frames. So if you can line up a weekly breakout with a daily breakout and a 2-hour breakout, chances are you're about to be on the cusp of a saying in trading that I didn't come up with: the bigger the base, the higher the space. The inverse of that, the bigger the top, the bigger the drop. Again, I didn't come up with that, but they are very good phrases to help you remember very important lessons in this business. So technical analysis. Why do we study price? Well, history doesn't repeat, but it rhymes. And every market participant is going to act based off an opinion or an insight or, earnings, or, a tip from a friend, or so on and so forth. So the culmination or the accumulation of their behavior can be statistically quantified to a degree. And so I think that's a large driver behind price patterns. I don't think they're predictable. They're not certain, but we do know that history rhymes, and we do know that we can plot human behavior on bell curves, for example. So why not be able to plot that same human behavior on a stock chart or a commodity market chart in looking at price and time? So that's kind of the theory behind technical analysis, I would surmise. So let's highlight some of the price patterns that we're going to look at today. We are going to look at most of these. I'm using real world examples that I've traded off of in the last, let's say 3 to 6 months. So all of these charts that we are going to share with you are real world patterns that we've highlighted. So there are different categories of price patterns. We have continuation patterns, and in that category, I call the triangle family. We have ascending, descending, and symmetrical triangles. We're only going to look at the ascending triangle today, but there are other examples you can see online of what a descending and symmetrical triangle looks like. Then we have the rectangle pattern. This one kind of overlaps with a momentum pattern, which is another category we'll look at the next slide. We have also ascending and descending price channels. So we have examples of those as well here today. So momentum patterns, saucer patterns. I love these ones. We'll look at an example or two of those. We have broadening wedge. These are good as well. And I really like the broadening wedge because I don't see a lot of traders trading this pattern. And speaking of which, I actually would argue that we have a broadening wedge pattern on the S&P daily chart, and we'll look at an example of that on the subsequent slides. I did bring an example so you could see what that looks like in live time. Cup and handle. The example I have today isn't the strongest one, but these are very powerful price patterns. I think the example today only yields like a 15% gain, but we didn't get out near the high, but that's okay. I'll show you an example of that nonetheless. Bull flag and or pennant. When you see these as a trader, your mouth should start to water because these are some of the most powerful, fastest resolving patterns in all technical analysis. And I got a couple examples of those as well. And then rectangle, I'm not going to repeat myself on that. Reversal patterns. I did bring a couple examples of these today as well. We have the head and shoulders, or the inverted head and shoulders. Sorry, head and shoulders occurs when we are basically rolling over from an uptrend, and inverted head and shoulders occurs when we are breaking out from a downtrend. Then we have rounding tops and rounding bottoms, rising or falling wedges, double or triple tops and bottoms. So we'll have examples of variations of the first three.
Can you show us what some of these look like?
Oh, I will on these next slides for sure.
All right. Promise?
I promise. See,
I'm just going to load up the agenda again. We're on chapter 3, how do chart patterns work. You're going to give us some patterns?
Can you see this first one?
Yeah.
Okay.
All right. All right.
I'll get there. Okay. So first example we have is Google. This is a daily chart of Google, also known as Alphabet. And here we observe an ascending triangle. So if you recall from my previous slides, there's a method to my madness here. I want to introduce you to different categories because it helps deduce a certain type of likely outcome. So ascending triangle, what type of category did that fall into? A continuation pattern. So what does continuation pattern mean? Well, remember when I started off by saying the trend is your friend. So what type of trend do we see in Google? We see an uptrend. We see higher highs and higher lows. If you can see my laser pointer, you'll see that each subsequent high is more often higher than the previous one, and each subsequent low is more often higher than the previous low. So we have an uptrend. So when we see a continuation pattern within an uptrend, that leads us to believe that the pattern will lead to a continuation of the existing trend. So if Google can close above the upper horizontal trend line, acting as resistance, we see how this trend line. And another thing I want to digress real quick here. Support and resistance are more often characterized as zones instead of hard numbers. So give a little leeway when you see these trend lines drawn in the chart. So we have resistance basically in this $3,000 area on Google. If we can clear that $3,000 area to the upside, that would likely lead to a continuation higher of this bull trend, and we would have a price objective in the $3,400 to $3,500 area. in Google. So another thing I want to point out here is notice how the trading range of this ascending triangle gets narrower and narrower. That's representative of a compression of volatility. Volatility moves both ways, upside and downside, and it tends to compress before it expands. So we're seeing a compression of volatility now. The pattern is only confirmed upon a breakout above the upper horizontal trend line. Otherwise, we could break lower. So that's why we have to let price guide our actions and not rush into positions prematurely. Okay, let's look at another continuation and or momentum pattern in this case. This is a weekly chart of Newmont Corporation. This is a precious metal miner. This is a stock I own. I'm becoming much more constructive on precious metals as we head into 2022. I think the macroeconomic landscape is evolving in such a manner where, ready for this statement, I think pet rocks may be a better trade than digital rocks come 2022. So we'll see how that unfolds, but I think a lot of the price patterns lend credence to that notion. But basically, a rectangle chart is when a rectangle pattern is when a chart trades within a trading range for an extended period of time. Recall what I said earlier, the bigger the base, the higher the space. We observe on this weekly chart of Newmont a rectangle pattern in which prices have traded between $52 and basically $70 since the beginning of 2020. So this is almost a 2-year price pattern, and this is suggesting prices, if we can close above this upper horizontal trend line here, suggests prices as high as $90 to $95, I think, on Newmont. But of course, we would have to close above this upper horizontal trend line too. So again,
can I give you another one, Gianni, that I've been looking at for a while, and tell me if this matches the pattern. And if anybody else in the chat has stocks that may match this pattern, let's drop them in and check them out. But let me give you IWM, ETF that tracks the small cap stocks. IWM. I mean, this thing has been sideways forever, it seems. At the same time, the S&P 500, we're at all-time highs.
Right. So IWM, that is the pattern that we see. However, we had what appears to be a false breakout. But a lot of times you see a false breakout, and that basically shakes out, the over-leveraged longs in the short term. So it is a similar pattern. You are correct. And it kind of looks like this Newmont pattern here in the sense that, are you sharing IWM now?
Yeah, I just threw up IWM real quick.
Okay, could you zoom out a little more so we can see let's get like 2 years.
Here's 2 years.
Yeah, that's beautiful. But you see how we started to break above it.
Yep.
We broke above resistance, got slammed back down lower. That's why we have to manage risk. So if the market's telling you you're wrong, you got to get out. And you can always buy it back. But there's a saying in trading that goes from false moves come fast moves. And if we do break below support, or the lower horizontal trend line of that rectangle, look out below. I wouldn't be surprised to see IWM drop down to 170.
Wow. Okay.
But key phrase, if the if doesn't happen, then the then doesn't matter.
A couple other ones in the chat. Somebody threw in GC. Is that a stock? GC? I don't know.
I think maybe gold. That's futures
gold. Okay. So we'll use GLD as our ETF right here. But it's going to look similar to your mining stock that you had up. One more, somebody threw out AMAT.
Yeah, that's breaking off from rectangle too.
Okay, so that was the same pattern, and then boom, we have the breakout. Now it's hitting all-time highs.
And this is a great chart too, because you can see how former resistance turned into support. We broke out above resistance, and then is that a weekly chart, Luke?
These candles are weekly. Yep.
Yeah, so then what was it, like 4 to 6 weeks later, we retested that former resistance level turned support. So that is that 140 where that breakout was? Yeah, that 140 level
140, you got
is
it.
Key support. So if you own this stock, there's really no reason to not own it unless prices break down below 140.
And Jenny, let me ask you this, because this will help us for the rest of the presentation. Is this chart that I'm showing right now easier to see or not? I know neither is a great solution.
I mean, they're both pretty easy to see, I think.
All right. There it is. And I'm going to stick.
You know what? Not now. I think the one you just had is a little easier. Yeah.
Okay. Fine.
Yeah.
It's back. All right. So we'll use those for the rest of the day.
Cool.
All right. Keep going, Johnny. I hopped in.
All right. So that's those are great examples of rectangles, and we can see how they are replicated in numerous other markets. So we're going to stick with this Newmont Corporation stock because I think it really is coming out of an important low. We talked earlier how confluence across multiple time frames gives you stronger signals. So on this Newmont Corporation chart, we have on the daily chart, we see a saucer pattern. So we have the upper horizontal trend line acting as resistance. We see how this $58 level was rejected by sellers 1, 2, 3, 4, basically 5 times. And then the saucer is also characterized by a U-shaped parabola lower portion of the pattern. And once again, notice how the trading range gets narrower toward the as you progress through time. So here too, we broke out from the upper horizontal trend line level of resistance, and we retested it. Remember, I said resistance and support more so are zones than hard numbers. So, we broke out, had a retest, successful higher low, and now we just made a higher high. So this stock is bidding today. By the way, all these stocks are accurate as of yesterday's close. So this is a really constructive chart pattern. Like I said, I own this stock, and I think from this pattern, we could see a move at least into the $64 to $65 area, which would be very important because if you go across here, that would take out this high from July of this year, which would, I think, really increase the odds that a intermediate term uptrend is forming.
Two things, Johnny. One, I love how authentic you are, right?
Okay.
You just said, hey, I'm in this stock, and here's my thesis on it. You're not just talking theoretically, which you do a very good job of, but you're also giving us the, hey, here's what I'm actually doing. Number two, good question out of the chat. I'll put this one up on the screen. You enter the trade when the trend line breaks, correct?
Yeah, I'm not gonna lie, I was a little guilty. I did front run this one a little bit. So I didn't, bend my rules a little bit, but I kept a really tight stop loss. What I liked is basically I bought right around here, $55, and I looked at the risk reward ratio. I said, hey, if we, start to break below this low from late November, early December, I was only risking 5%. It was like 4 or 5% from that entry. So if I can risk, 4 or 5% to potentially make 30%, those are odds I'm going to take to the bank all day, every day. But a clean, proper entry would be on a close above this upper horizontal trend line. That's correct.
Cool. Thank you, sir. Appreciate it.
Okay. So bull flag pennant. This is another stock that we highlighted in the breakout service. I actually don't own this one. Didn't have a chance to buy it. I was fully vested at the time. But this actually has a couple patterns. So before I get into the bull flag and pennant, what we see here below is a broadening wedge. So once again, upper horizontal trend line acting as resistance. We see how prices were rejected by the $30 level, like 1, 2, 3, 4 times at least. And then we have a downward sloping lower trend line. So this one's a little bit different. You don't usually see a compression of volatility through time, but basically it's representative of a whipsaw. It's basically a false move lower, and that from false moves come fast moves phrase applies to the upside as well. So we had a false breakdown, springboard higher. We broke above resistance, successful retest of former resistance turn support. And then here's what made my mouth start watering. We gapped up, bullish breakaway gap. We established what's known as a flag pull. We then coiled within a pennant formation. The difference between a pennant and a flag, I have a flag in the next chart, so you'll see, is the pennant is basically, it looks like a symmetrical triangle pattern, but basically the upper trend line is downward sloping, the lower trend line is upward sloping. And this was very powerful in terms of momentum, because normally we see the flagging or the pennant formation, it takes like 3 to 6 weeks for that, the digestion of the gains to lead to another move higher. But this one, the momentum was so high, it resolved within like 4 days. So it's making new highs today. This is a tremendous example of the power behind a bull flag and or pennant formation. You can get tremendous price moves in a short period of time. So the entry basically is to get long as soon as you start to break above the upper trend line of the flag or the pennant. Okay, here's another example of a bull flag. Now you'll see how we have the the horizontal trend lines versus the sloping trend lines. That's the difference between a flag and a pennant. But just to review real quick, we broke out from this saucer pattern here too. We covered that a couple slides ago. And what do we have here? We had the bullish breakaway gap. and that established the flagpole. Now here we saw the flagging formation last a little bit longer. It lasted about 7 to 8 weeks, but similar concept. We buy on a break above the upper horizontal trend line, acting as resistance. This is a stock that we shared in our breakout service, and we did sell about 22% higher. A couple, what was that, like 2 months later, and it's basically the stock's basically still hanging out where we sold it. So turned out to be a pretty good entry and exit on this one. Descending channel. So these are also continuation patterns, and this is SM Energy. This is a oil producing stock. Oil's yielded us some tremendous returns this year, especially in the back half of 2021. So what we see in these descending channels is a downward sloping upper trend line and a downward sloping lower trend line. We essentially see prices bounce off resistance, in this case, the upper trend line, and support the lower trend line here. So we would buy on a break above the upper trend line. And again, these are continuation patterns. Now, this daily chart you can't really see, but if you were to zoom out, you would see that SM has been in an uptrend. So we closed above the upper trend line. That's our catalyst to get long. And since this is a continuation pattern, we saw a continuation of the uptrend. This stock, we basically kept raising our stop losses as we hit new milestones. At one point, we were up like over 70%. We came away with like a 51% gain. And it would have been better had we not gapped down on this day, but we did sell it right around right here. But once again, we're seeing a descending price channel on SM Energy here. So this could be another catalyst to get long on this stock. Last I checked this morning, we were starting to break above this upper trend line of this price channel, and we're seeing oil make new multi-week highs as well. So I think the thesis is building once again that we could be getting long on SM Energy very shortly again here. And once again, continuation pattern, we see the descending channel. If we do close above this upper trend line, that's our catalyst to get long. All right, cup and handle. This is a daily chart of Signet Jewelers. So we have an upper horizontal trend line acting as resistance, and it's basically two saucer patterns put in one. But the cup portion of the pattern is a bigger parabola, and the handle portion of the pattern is a smaller parabola. Remember what I said earlier, we see compression of volatility. The trading range got narrower and narrower. We get long on a close above the upper horizontal trend line, and it ripped higher. We kept raising our stop losses. We got stopped out once prices closed below support here. So this was a timely entry and a timely exit, because when we sold, the stock only continued to fall. So one of the most damaging things that can happen to a trader psychologically is to see a large gain turn into a loss. So one of the rules that I employ, or deploy rather, is that every time a trade that I have moves 12% above my entry, I raise the stop up to break even. So I don't want to see a 12% gain turn into a loss. All right, inverted head and shoulders, Marathon Oil. So here we have the neckline, the upper horizontal trend line acting as resistance. Left shoulder, head, right shoulder. So these are very tricky patterns, and a lot of traders, especially new traders, don't use them correctly, because it's only confirmed once you close above the neckline or resistance, because there are instances where these head and shoulders patterns can resolve as continuation patterns. What did we talk about before? Continuation patterns lead to a continuation of the trend. The break of resistance, in this case for the inverted head and shoulders, means that the short-term downtrend that we saw in this stock, between late June and August, was ending. And another trick that I like to deploy with these inverted head and shoulder patterns is the right shoulder low was higher than the low from the left shoulder. So if you see a right shoulder low that's lower than the left shoulder, it's not as strong as a signal. So once I saw this, I said, oh, we have the higher right shoulder compared to the left shoulder. We have this head and shoulder. I'm going to get long on a close above resistance. And we came away with like a 26% gain on this stock in just a matter of, I think it was like 4 to 6 weeks or something like that. Falling wedge. Okay, this is El Dorado Gold Corp. This is another precious metal miner. Here too, we see the trading range get narrower and narrower. Volatility is compressing. You would get long on a close above the upper trend line of the downward sloping portion of the pattern. So we got long here. We're up a little bit. We're not up quite to that 12% gain point, so that we're at break even. But we're going to keep holding this one. Likely just formed a higher low here compared to the low from late September. the first step in the establishment of an uptrend. If we clear this high from late November, we would have a confirmed uptrend, and I think it'll be off to the races for El Dorado Gold Corp. Okay, I told you I was going to come at you with the S&P daily chart. This is how I view the daily chart for the S&P 500. We have a plethora of patterns, ascending price channel here from between May and August. We started to break out, didn't quite materialize, but then in the process formed a saucer pattern. We broke above that, and then we made new highs, and then now we're coiling into this broadening wedge pattern from which we broke out. This is suggesting prices as high as 4,900. That's my upside objective in the S&P. We can have, give or take $10 on each side. So let's say between 48.90, 49.10. That's my upside target in the immediate term. We are in the Santa Claus rally time period of the year, so we are in a seasonally bullish time of year, and we do want to see a positive return in these last 5 days of 2021 and the first 2 days of 2022. That often portends bullish omens for the next 6 to 8 months of the calendar year. But I've even seen some studies replicate that for the entire forthcoming year. So, but there are signs that upside momentum is waning. We have some bearish divergence in price in the RSI indicator on the S&P. And, I'm sure you've heard there's been some issues with respect to market breadth. A lot of stocks down 40 to 60% from their highs that were formed in the last year or so. And that is a sign that, there are some issues brewing under the surface. But that being said, don't be surprised if there's more upside in the immediate term, but just, be sure to manage risk as we get into what is presumably the later stages of the intermediate term trend of this rally. I think long term, we still rally into 2022 and into late 2022, but keep in mind, the S&P hasn't had a 10% drawdown. Actually, it doesn't even show it on this chart. The S&P hasn't had a 10% drawdown since September 2020. So we are 20 months in to a strong bull market that has not seen a 10% pullback in a very long time. Okay, plethora of patterns once again on Bitcoin. Here's an example of an inverted saucer, a rounding top. We had a case of bearish divergence. The Bitcoin made a new all-time high. RSI indicator did not. We closed below support around this $59,000 level. I would argue that what we saw in terms of price action in early December was the establishment of a bear flag. We established a flagpole. We've been flagging throughout the month of December, and we likely just formed another lower high with respect to the short-term trend in Bitcoin. So I wouldn't be surprised to see Bitcoin wash out lower into the high 30s, low 40s. And, we'll have to reevaluate. If we break below this low from late September in Bitcoin, that's not going to bode well for the short-term direction of this cryptocurrency. So remember, what do we say? The flagging portion of these flag patterns, they tend to resolve within 3 to 6 weeks. And, we're basically on week 4 here. So don't be surprised if we see a resolution lower. The catalyst for a breakdown would be a close below 45,000 on the daily timescale for Bitcoin. All right, Ethereum. Luke, I'm going to do a little trivia for you. I want to get your input on this. So Ethereum, this, I view technical analysis and trading as a craft, more so than an exact science. So it's like a craftsman approach. So when I look at the Ethereum daily chart, I try to keep an open mind as much as I can and not impose my will upon the market. Remember what I said earlier, when I'm wrong, I view it as myself not being aligned with what is. I'm trying to impose my will, on the charts or whatever, and that seldom works out well. So for Ethereum, one could make a case that we have a rounding top or inverted saucer. We have, lower highs here, lower lows compared to this one. We broke below support, had a successful, what appears to be a successful retest of former support turn resistance. Or do we have a descending channel, which is a continuation pattern in the face of what's been a very strong uptrend? Luke, what do you think? Luke, you there? Okay, well, it's okay. I'll let you decide then. Whatever you think it is. So I think the short-term risks are present in Ethereum. especially the formation of this lower high. Wouldn't be surprised if we saw a drop down to this low $3,000, high $2,000 area. Now, there has been strength displayed in the cryptocurrency sector, ascending price channel. This is Terra to US dollar. You see how we closed above this upper trend line of this ascending channel. These are continuation patterns. Once again, we made new highs. So long as Terra doesn't close back down below the $70 mark, I think we could look for the formation of a higher low and eventual continuation of the uptrend. But if we do close below $70 on Terra, I think that's going to be some cause for concern in the short term. So I gave you a lot of charts and theoretical analysis, some real world analysis as well, but timing the breakout is very important because time is not money. Time is precious. We all have a fixed amount of time that we get to do things. We all have the same 24 hours in the day. We all get to trade, stocks between 9:30 and 4 p.m. Eastern. That is indisputable, but an improperly timed purchase of a breakout can skew your risk reward ratio out of their favor. We'll talk about some risk management principles and how I like to manage risk when trading from the long side. But by definition, an upside breakout occurs when we close above resistance. A downside breakout occurs when we close below support. And I say close because a lot of times you see, false breakdowns, false breakouts, and you can get false moves or fast moves in the opposite direction when we don't see closes above those respective resistance or support levels. So how do I like to manage risk? Well, I always set my stop within 7 to 8% of my buy point. So that usually allows me to get out of a trade no more than, like a 10% loss or so. But, sometimes if a stock gaps down 20%, there's nothing you can do about that. That happened a couple times this year. We got a stock we like, we're up, 5-6% on it, and then it gaps down 30% at the open. Can't do nothing about it. So how do you mitigate that risk? Well, position sizing. So one rule I like to employ is I never use more than 20 to 25% of my account's total given capital on a particular trade. Truth be told, I typically use even less. So if you view trading like a business, which I encourage you to do, losses are like business expenses. You're going to have losses. They are inevitable. And I'll show you some examples and how you can afford to be right multiple times. You can even be right less than you are wrong and still be profitable, because at the end of the day, I think that's our main reason why we're in this, is to make some money. But proper position sizing can help you prevent you from being shaken out of positions due to fluctuations. If you're trading too large and you refuse to admit you're wrong, you're tempted to average down, or you think that your next stock is your ticket to riches. Play the long game. Trading is a marathon, not a sprint. Even if you're day trading or trading on a smaller time scale or a shorter time scale, you have to manage your position sizes accordingly. You don't want to be in a situation where one trade can make or break your year. But truth be told, if you hit a really strong trade, even if it's 10% of your account, it can really boost your performance for the year. If you're risking 7 to 8% and one trade that you hit goes up 200%, and if that's only 10% of your account, that can really improve your bottom line. So I think that is how you need to approach your risk management. Okay, so I said you can divide your account by 4 or 5. We'll look at some real world examples. Say you start off a trading account with $10,000. Okay, so this is a bad example of a trader that's not managing risk and not cutting their losses within an appropriate time frame. So they buy 4 stocks, ABC and stocks GHI. They held the bag. They come up with a 20% loss on them. They hit a lick on stock DEF, and they had a modest gain on stock JKL. They had a 50% trading accuracy record, but they're still in the red. Okay, so there you go. You can be right half the time and still be an unprofitable trader. Here's an average example. This trader has a 25% trade accuracy. They're right only 1 out of 4 times. Their winner is big. They have a 30% winner, but they have 3 modest losses. With a 25% accuracy rate, they're still ahead. Do you want to be right, or do you want to make money? Serious question you need to ask yourself.
Definitely is a
here's a really good
serious
example
question
of a
you need to
trader
ask
that's-
yourself. Do you want to be right, or do you want to make money? I think one of the things that Gianni really understands here is that patterns overall, and I'll say this from a person that studies technical analysis, right? Patterns overall are never going to be exact. It's never going to be 100%, because at the end of the day, we need to define these patterns in an exact manner if we want to trade them like that, right? That's why he said it's more of a craftsman approach. Because if I see a head and shoulders, does everybody else see it, right? That means that it's objective, that there's specific levels that you're looking for that make up that pattern. Everyone needs to kind of define some of these patterns for themselves. Some people can see patterns while some others can't. And I think another thing to learn from here is what Gianni is saying here, that, you can't just go always for the home runs. We need to be looking at things like a base hit, take multiple trade approach, maybe thinking about it in like a 50 trade sample, right? 50 trades at least to show you that if a system works or does not work. Well, all things that you guys can keep pushing towards to find out if you're going to be in the green consistently. Well, now time to kick it, of course, to Benzinga Live. That's coming up next. My man AB going to take control of the wheel here, as I'll go ahead and kick off here. Last comment I'll make on the SPY. It's been a good one. Santa Claus is here, baby. He ain't turning around. He's coming, leading the way today. It looks like Rudolph is coming. We'll just have to find out. Now the question is, what's AB thinking about? Let's get to him. Let's bring him on here. What's up, AB? How we doing?
What up, Money Mitch? How you doing today?
Ready for your action. What's going on? Is Santa Claus coming?
It looks like it. It looks like Santa Claus finally decided to stop by New York, stop by Wall Street a little bit today.
AB, were you good? Are you on the naughty list?
I was good today. I actually, I think I might have done it yesterday live on the show, but I bought some SPY calls, out of the money SPY calls. So the calls that I have right now are up 470% total from when I bought them yesterday.
Hey, well then talk to us. Tell us, because I can't trade those options. Looks like AB's kicking ass today. So I'll let you kick ass and take some names. Let you take lead here. I'll see you in a little bit, AB.
There we go. Thank you, Money Mitch. Smash the like for Mitch if you have not already. We've got my man Nick Brown hanging out in the chat, and he will be joining us here on the show any minute now. We're going to talk about some of the top headlines with Nick. We're going to run through some of the top movers today. Tesla, of course, been the top of the radar all week for people watching stocks out there, seeing, okay, why is Tesla not getting a bounce today still when it seems like everything else is? Let me go ahead and pull up my Benzinga Pro here. We've got the S&P 500. I've actually got us on a 2-minute chart here, which I don't usually look at, but I was really watching to see if we can take out these high of days right here. 387.30. It looks like we got up to about 20-30 minutes ago. So I'm watching to see if we can break out that top. Mitch was just talking about a head and shoulders pattern. If we can't break that out, it does kind of look a little head and shoulders-y. So we'll be watching this 2-minute chart here. But again, on the daily, on the SPY, good to finally see us getting a bounce here. So don't know if it's just a little bear market rally or if it's actually some price action that we should be watching. Yesterday, we were looking at XLE up again today, 2 days in a row. For the first time in a while. So that's good to see, at least. And I talked about that on Monday, just why I saw that as a big problem, seeing energy and financials trade down together. So now that we're seeing them both trade up together, it's conversely, a good thing. And it was a problem when they were trading both down together. And now that they are trading up, I like that. I'm a big fan of that. So, all right, guys, without further ado, let's go ahead and roll that intro. When we come back, I'll pop my man Nick Brown on the screen. We'll talk about some of the top headlines, some of the things that Nick has been watching. As always, if you've got stocks, got trades you want to check out, drop them in the chat and we'll get to them. We'll be back in about 22 seconds.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show, talk some IPOs. Jake Wojacek from Trend Spider. We have breaking news.
All right, guys. I mentioned yesterday. I don't know. Again, I can't honestly even remember if I bought I think I did buy the spy calls while we were live on the show yesterday. But I'll share my Robinhood just for a second to do a follow up on those. I did. This is like classic, degen options trader. But I bought all these out of money spy calls yesterday. My average cost was 51 cents. Those are now trading at 267. At their high at 328. So 51 cents to $3.28. Not bad there. I actually sold. So here, I'll go here to the notifications. You can see. So you can see on the, actually, yeah, we'll see. Yesterday was December 20th. So yeah, I was buying them during the show. But this morning I sold, let's see. This morning, I sold 12 of 15 of those contracts for 99 cents, and then they ended up going up to $3. So I was sitting there like beating myself up like, oh my God, I bought these contracts for 51 cents, basically sold them for 100% gain, doubled my money. But then I would have, made even more had I just hold on to them. But I had 15, sold 12 of them. So I still got these 3 buys right here. And I've got a stop loss on them at $2. So if they come back all the way down to $2, I'll just bomb out of them and take that $600. But right now I'm letting them ride just in case we get some crazy like afternoon rallies. See SPY go up another %. These contracts will be worth like, back up to $3.50 or even $4 maybe. So yeah, pretty decent trade yesterday that we got in yesterday again on the show. Without further ado, let's go ahead. I'll go back to my Benzinga Pro and let's go ahead and pull my man up. Benzinga's top intern, my man downtown, Nick Brown, joining us. I think he's off from school this week for the holidays, just like I'm back home for the holidays. So without further ado, let's give Nick our special intro and give him on the show. Mr. Downtown Nick Brown, how you doing?
Aaron, it feels so good to be back. It's been a while.
It has. It's been since Thanksgiving, over a month now. What have you been watching? This week's been pretty crazy in terms of market news. What have been, your top things that you've been watching?
Earnings. FedEx, Nike, we got those results yesterday, and I'll just tell you, we've had some pretty good results. I guess we can run through. We can go through FedEx because that's what you have up, and that works perfectly as I have that up as well. FedEx reported Q2 23 earnings, adjusted EPS $3.18. Estimate was for $2.80, so a beat there. Revenue did come in slightly below estimates, $22.8 billion. Estimate was for $23.69 billion. They see the full year adjusted EPS $13 to $14. Estimate was for $14.14. And they identifies added $1 billion to cost savings beyond the September forecast. So, this company has been very profitable. CEO Raj Subramanian did warn that the economy would enter a, quote, worldwide recession, but to bring their fiscal savings for 2023 to $3.7 billion compared with its earlier plan for the year. So they are running a little bit ahead of expectations. CFO Mike Len said yesterday in an earnings release, our teams have an unwavering focus on rapidly implementing cost savings to improve profitability. As we look to the second half of our fiscal year, we are accelerating our progress on cost actions, helping to offset continued global volume softness. So it looks like this company is doing very well in this type of environment. And so if they're going to continue to do what they're doing, there should be no problem, and this stock should continue to move higher.
Yeah, and I think a lot of people, were kind of worried about FedEx's earnings yesterday, and FedEx can, oftentimes the earnings will move the whole market because it can be seen as a proxy for the overall economy, how many goods are being shipped, how much, business is being done. FedEx, if they reported a terrible quarter, SPY could be down a lot today. So, like you said, Nick, good that FedEx beat on the EPS front, slight miss on revenue, but obviously the market doesn't really care that much about that right now. Up 5% today on FedEx. Do you want to move over to Nike or have any final thoughts on FedEx?
No, I'm just going to say in general with this earnings season, if you do actually, if you perform and give results that are better than expectations, that you're beating and you're giving some kind of guidance saying, hey, we know what we're doing, we're going to be above forecast, you're going to get I don't want to say you're going to get punished, but you're going to get punished in a good way. Your stock and your investors and your shares are going to continue to move higher. But if you're going to really be on the low end of things, not beat on the estimates, not give that good of a guidance, you're going to be punished in a bad way. And this just goes to show FedEx is really showing that they know what's going on, that they are moving above their timeline, which in this era, in this, what we're talking about, recession era, is actually a good thing. So here in this case, FedEx has been proven to be good, and they have been punished in a good way, moving higher by 5%. But Nike, on the other hand, Nike actually, it was a little rocky of a ride here in some parts, but EPS beat 85 cents. Estimate was for 65 cents. Revenue, $13.3 billion. Estimate was for $12.58 billion. Gross margin, 42.9%. Estimate was for 42.1%. Greater China revenue came in just a little bit below expectations, $1.79 billion. The estimate was for $1.81 billion. And in the call, I was tweeting out some headlines last night from the Benzinga Pro or Benzinga account. They see full year revenue growth in low teens, excluding the FX effects. Sees Q3 revenue growth to be higher than in Q4. And some other thoughts from that yesterday too on the call. They say that North America they saw in North America Black Friday, Cyber Week performance set a record high for demand and traffic. Says in the EMEA business, we closed our biggest Cyber Week ever, increasing demand by 75% from last year. In Greater China, 11/11 demand grew mid-teens, outpacing the sports industry. LeBron 20, KD and KD fueled double-digit growth in basketball. And, to growth low teens on currency neutral basis from prior forecasts of low double-digit growth. This company, this quarter really did well, and it opened up 15% higher, which is, I believe, the biggest gain since June of 2021. So again, another company that reported better than expectations, moving higher. They gave good guidance. They know what's going on.
Yeah, and Nike, I mean, to your point, like the beat on EPS, beat on revenue, and then today, the follow-up you see on the Benzinga Pro overview. Again, if you guys don't have Benzinga Pro, pro.benzinga.com, free 2-week trial. Go check it out, no credit card needed. But look at all these, maintain buys or raises price targets. You got Goldman, Credit Suisse, UBS, Wells Fargo, Morgan Stanley, Raymond James. And I think right now that's going to be kind of the case, is that a lot of even analysts have been undecided or unsure. The outlook is so, just uncertain right now that they're waiting for companies to put out these earnings reports. And then once they hear that from Nike, because you got to remember, Nike was one of the companies that was putting out kind of a scary warning, whether it was 6 months or 9 months ago in regards to the company's inventory and all these things. And then when they see these earnings reports, like, oh my God, these companies are kind of, actually doing a lot better than what some people would have expected. And, that could be one of the bull cases to be made here for the overall market. It's just that most of the major companies, of the biggest companies, like you're talking the Nikes, Apples, whatever, have been pretty conservative when it comes to guidance, right? They've been forthcoming over the past 6 months to 9 months saying, yeah, it's going to be a tough, 2023, going to be a tough few quarters. So if you set that bar lower like Nike has, then you come out and say, actually, we did pretty okay last quarter. Then the analysts and the banks start to like that. So I wouldn't be shocked to kind of see something similar that we've seen with Nike and even FedEx per se, like happen, on this upcoming earnings season across the board. We'll see.
Yeah, there is rumors too. Jim Cramer on CNBC was talking that there's worries that Target may miss, that the big retailers may miss this quarter. And, if they do, then there is going to be some surprise, because the last quarter, I thought they did pretty well in terms of what's going on. People still out and buying. But, if one of the big retailers end up missing it, well, it happens. You can't beat and you can't just be right every time. So if you do have a miss, you do have a miss. But on the Nike front too, Aaron, if we go back to that, I think Morgan Stanley really put it best this morning in their note. And their summary was basically across the board beat and a full year raise surprise to the upside. North America and EMEA, the standout of 2Q to us as they reflect early signs on NKE's DTC transformation is finally yielding margin uplift. Inventory in Greater China still overhangs, but moving in the right direction. It really just goes to show that these companies and these banks, after saying they were scared and who knows what was going to happen, they end up beating. And I mean, price targets today, there's not one lowering. I think everybody on the board that I tweeted out this morning literally raised. Barclays 109 from 83 to 109, BMO from 110 to 120. One that stood out to me was Raymond James from 99 to 130. And I mean, they just go up across the board. I mean, they're all in between the 100 to 130 range. Price targets just continue to go up because this quarter was a generally good one after the scarce warning.
Yep. I see, Nick, and I don't want to like derail from, your topics that we've got going right now, but I do see some people talking in the chat about a few different runners today. And I talked about this either yesterday or the day before, but seeing some of these, like whether they're just like small cap biotechs or like crazy movers that are up, this one's up 60% today. We saw one the other day, MTGL or whatever, that was up like 300%. I said this the other day. I do think, I'm not saying this is like a great sign for the overall market, but it is a sign that you have some speculation returning, that you have people out there willing to buy like, stuff that's already run up 30% that day. And we saw that a lot in the markets in, like May of 2020, kind of like right after COVID. Pretty much every morning there'd be a different small cap runner that was up like 100%. So I am noticing more and more of that over the past couple of weeks, potentially a sign that more speculation, more risk is returning to the markets. And I saw there was some discussion about a reverse split. I think Jay said, reverse splits pretty much are always lower a year later. I do think big red flag, basically, anytime you see a company doing reverse splits. Not to say, there can't be some that end up running or that some that, don't go up a little bit. But for the most part, companies that reverse split, right, they're diluting shares. They're doing so, out of necessity. And it's not really something that, I would see as like a good sign of any company that I was invested in, that they were doing a reverse split. But HTGM, I don't even know anything about this company. Let's read the overview here from Benzinga Pro. HTM Molecular Diagnostics is a commercial stage RNA platform-based life sciences company focused on advancing the promise of precision medicine. It's proprietary. So yeah, I mean, just like a pre-revenue biotech, looks like market cap 80 million, up 60% today, or 70% today. I don't know. Like, I don't go out there and buy these stocks that are already up so much on the day. If you do, you got to realize
you're going out on a limb.
Right. You're going out on a limb. A lot of speculation there. I wouldn't look at it any different than, going to the casino or something, buying something up there.
No, I mean, some of these names there, and I don't know anything about, even in the Benzinga Pro news feed. It's just people are just buying. There's not really any news of why these are moving. And that's, as we head into 2023, maybe some of these companies are ready to go public I mean, not public, but like that are buying another company that could be going private, could be going through another SPAC, through somebody else giving other money. This is a time where it's going to be, as we head into 2023 and as we see more of a reopening, more of these stocks are going to probably be familiar known, but some of these don't actually get attention. Like, these are getting attention just because one person is probably buying so many thousands of calls, so many things, and they have a lot of money. They're just trying to create some speculation. But these are very worrying, because at one point we saw Bed Bath & Beyond being the big driver. And so if some of these names are probably the biggest familiar ones and speculation starts to happen, one of these potentially could be the big mover of the day. This stock is bringing down the whole market because of speculation. So these are very dangerous. I would try to avoid these. I would actually avoid these at all costs, just because anything can happen. Just because it's up 71% the next day, then the next day it could be down 100, 150%. Who knows? And possibly going bankrupt. These are just not safe plays and just nothing to look into if there's no news.
Couldn't agree more. And so someone asked to explain the reverse split a little bit more. So essentially, when a company, it increases its share price by decreasing the number of shares each investor owns. So say you own 10 shares of a company worth $1 each. You have $10 worth of the company. Now they might make those 10 shares just one share, but it's still worth $10. The reason it's not really a great thing that companies do, I think I might have said it dilutes shares earlier when it actually does the opposite, but companies typically reverse split when they're like at danger of being delisted, right? Different exchanges, whether you're talking about the NASDAQ, the CME, whatever. The NASDAQ has certain requirements to be listed on the NASDAQ. You have to maintain like $1 share price. So if you slip below $1 and now all of a sudden your stock's trading at 50 cents, you can do a reverse split to get your share price back above that threshold that you need to stay on the market. Problem is like, people don't like that, right? People don't like the seeing a company having to make, these moves, adjust the amount of stock shares they have just to stay listed on the market. Because chances are, if a stock is approaching getting delisted on the market, there's a reason for that. So typically, you don't see, if anything, you see companies that are like growing and big, like Apple, Netflix, Tesla, do stock splits, not reverse stock splits. So I always kind of see reverse stock splits as a red flag. But again, that doesn't necessarily mean every single company that does a reverse split is going to, go down or buy puts on any company that does a reverse split. I'm not saying that.
No, and I think too, a lot of these companies that are going to run up, they're eventually going to announce a split because they don't want anything major catastrophe to happen. And believe it or not, I know nothing about some of these companies that we're showing and people are talking about because there's no news. The people are, and we say people, literally, it could be one person just buying millions of things just to run something up, and then all of a sudden the next day just sell it, just to create speculation, just to create drama that means nothing to half of these people. This is just very, very scary to look into, and to see it coming up 85%. It's just crazy.
Yeah, HTGG has come off a little bit. Looking at it on the 2-minute chart now, only up 55% of the day. But all right, Nick, back to your list of topics. So we hit FedEx, we hit Nike. What's next?
Just layoffs. Tesla Electric reported this morning that Tesla to implement hiring freeze and a new round of layoffs. Tesla has told employees it is implementing a hiring freeze and confirmed that another wave of layoffs is coming next quarter. This just goes to show in this environment, anything is possible. And I tweeted back on December 7th in the early evening, a list of tech companies that are laying off. And I mean, the list just keeps growing. I haven't added to it, but if I went through layoffs, this list would just be bigger. Amazon, Apple. So these are all companies I'm about to name that have had layoffs, that are announcing layoffs that are going to happen or that have laid people off. Amazon, Apple, Adobe, Chime, Cisco, Coinbase, Dapper Labs, Digital Currency Group, DoorDash, Galaxy Digital, HP, Intel, Kraken, Lyft, Meta, Opendoor, Peloton, Qualcomm, Salesforce, Seagate, Stripe, Twitter, Upstart. I mean, the list just keeps going.
Yeah, and I guess the one, I guess not necessarily like bright side to that, but the one thing I'll say about that is it does seem like, with the Fed raising interest rates and we've seen any uptick in unemployment, it has been mostly coming from that big tech sector. I'd be more worried, if we start seeing FedEx, Walmart start laying people off. If Apple, Amazon, and all these companies that have grown like so much over the past 10 years lay a few people off because they've grown a little bit like too fast, too much, and can't survive that growth in a high interest rate environment, I don't necessarily think that's like a terrible thing for the economy. I think I'll get more concerned if we start seeing those layoffs increase in areas outside of tech. But right now, hearing Microsoft laying off, however many people, or Coinbase, I mean, crypto as a whole, the fact there shouldn't be anyone working in that industry, let alone, or shouldn't be as nearly as many people as there are. So it makes sense to see some of those kind of layoffs, kind of things like returning to normal is the way I see it.
Yeah, and I mean, we just got word today that BioNTech in Germany has shipped some vaccine over to China. And, hopefully that will eventually open up to China. But with trade and people coming into the country, 2023 is going to be a year to watch to see what happens. Is COVID going to continue to die down and more people continue to travel? Are we going to see more companies going public on the New York Stock Exchange, on the NASDAQ? There's just a lot of worrying is, are eventually, instead of hiring freezes, are they going to implement more hiring to bring back more people? Those are some questions that remain in the uncertainty level because of China, depending of, vaccines, depending on diseases, what happens in 2023. So there's no clear word or no clear path of what's going to happen with the markets. 2023 targets for the S&P are already coming out. I mean, from last year, from where we started from January 3rd to where we're at now, Many people didn't have the S&P at 3874. Many people thought 43, 44, 46, maybe even 5,000. And so now we're going to have to really be careful how we forecast 2023 to be shaping up.
Yeah, 100% agreed. Let's see if I'm seeing if we have anything. Easy Mike's talking about TVIX in the chat, saying it's a Credit Suisse product. I'm not familiar with that one. Let me see if we've got that on Pro. Nope. So yeah, I mean, I've got the Tesla chart pulled up here. This has been kind of the top story of the week. Whoa, what happened there? Let me pull back Tesla up. Like you mentioned, Nick, they're getting ready to do more layoffs. Stock not getting a bounce even today on the day. Well, it's getting a little bit of a bounce, I guess, up 0.46%. But if you look at that compared to the S&P 500, up more than 1% today. Clearly, Tesla is still showing some weakness against the overall market. Outside of the layoffs, do you see anything like fundamentally going on with Tesla right now? Do you think the stock will get a bounce if Elon fully does step down from Twitter?
Well, we do expect him to step down fully from Twitter in terms of I don't want to say fully, because last night he did tweet, quote, "I will resign as CEO as soon as I find someone foolish enough to take the job. After that, I will just run the software and server teams." That's going to really bring a lot of pressure down on him, and he can focus on Tesla. But I think Tesla is doing pretty well, as we just heard that they're expanding into India, into I think he said another place, Turkey yesterday, expanding. So I think Tesla is doing generally well. It's just Elon's attention in being the CEO and owner of so many companies. It's just he's all over the place, and there's no clear path of how Tesla is going to shape up to be. Because we've heard on Tesla conference calls, and we've heard in general from Elon Musk that he may be stepping down from Tesla one day, and he's going to have to find a new CEO for that. So, anything is going to happen. And then is Twitter ever going to come public again? We heard from Elon Musk that he says that maybe in 3 to 5 years that Twitter may come public again. So that's going to be another IPO, another thing to watch in the coming years. But it really goes to show that Tesla has been bouncing. It was down 1% earlier. It did make a new 52-week low today, if I'm not mistaken. There's just a lot of uncertainty around Tesla, SpaceX, Twitter.
Yeah, and all three of those companies you name, I mean, are certainly still growth companies that are reliant on the ability to be able to spend money now to be able for that growth in the future, which becomes a lot harder to do as the Federal Reserve continues to raise interest rates. So you're seeing Tesla, Twitter, SpaceX run into SpaceX is probably the most insulated out of the three to the Federal Reserve raising interest rates, because it has a lot of government contracts that are guaranteed money from the government coming in. That's not really going to waver with the interest rates rising. But the other two, Tesla and Twitter, certainly running into more and more problems. I mean, I don't know. If I'm not luckily a Tesla shareholder anymore, but if I were, I'd be getting real upset and frankly, just pissed off about Elon's antics, because it's just costing shareholders money at this point.
Oh yeah, and the foolish tweets and the unscientific polls that he's doing. And I mean, Twitter safety or Twitter, one of the main Twitter accounts tweeted too over the weekend. Could have been this week. It's been one of those weeks that so much has happened that they're going to be doing more polls on big policy changes. These really are unscientific polls and just trying to get the response. And I mean, he even tweeted too, be careful what you wish for, because you may get it, because he thought that a lot of people were going to say, yes, please stay at Twitter. That wasn't the case. Over 57.5% said, no, we do not want you to be CEO any longer. Please step down. Please do something. We need some kind of, because the new rules on Twitter, I mean, they're just outrageous. And I think if Jack Dorsey was CEO, we would never see something like these, that you can't share links to other profiles, Facebook, Mastodon, Post. It's just strange to see that a free speech person is now limiting speech on the platform. And, I think people are just fed up with him. More people too. I'm on Post. I got approved about a month now ago. More people are on Post, and my Post continues to
how many followers are you up to on there now?
I'm up to 66. I don't use it a lot, but it's starting to be more of a more personal platform than Twitter is, to believe it or not. I mean, from what you see on Twitter to when you move over to Post, there's a different environment, and it's a no Elon Musk environment. It's it's just a different environment.
Yeah. Let's see. Trying to catch up on the chat. All right. Yeah, if you guys want to go over to InfoWars, be my guest. Not going to talk about stuff like they do on this show. What about Apple, Nick? Have you seen anything with Apple? Have you been watching Apple stock recently?
Yeah, Apple, Apple's been one of those companies where as we get ready into the holiday season, are they going to sell a lot of iPhone 14 Pros Max? Are they going to be able to keep up with the delivery times? And there was a new report out of Nikkei Asia, believe it or not, that they're trying to move iPad and Mac out of China and moved over to Vietnam or somewhere else, just because the recent lockdowns in China have been hurting Apple to some kind of certain extent. Apple is up today, believe it or not, by 2.3%, which is, in this environment, if you're going to be out and about, people are going to be spending on Apple. We're going to have to just see how Wedbush views it. I haven't seen anything from Dan Ives, the analyst of Wedbush that covers Apple, of what he's expecting for the holiday season in terms of iPhone sales, iPad. And then we're going to have to see what happens in this latest quarter. Are they going to be able to fulfill the agreements of the people, of the orders? How's the Mac sales going to be? How the iPad sales are going to be? And specifically the iPhone 14 models, the Pro, the Pro Max. There was a TikTok, believe it or not, Aaron, that shows, it was a TikTok that has been popping up, that there's a specific website that there's iPhone 14 Pros and Pro Maxes being made, but they're not being sold because of lockdowns and just everything going on, that you can get an iPhone 14 Pro and Pro Max for a very cheap price. Instead of paying $800, $1,100, you can get it for, in terms of $100 to $200.
Yeah, I never really worry about Apple long term. I think Apple's it's not, safe from all the macro headwinds. So like you mentioned, as China, demand might waver, there might be less iPhone sales, whatever it is. But at the end of the day, it's Apple. I think it will be fine long term. And I mean, China, I do think we're people now are finally starting to get back interested in some of these Chinese names. One aspect that I don't think people are really talking about enough is that when we got out of lockdowns here in the United States, there was a lot of what economists were calling like revenge spending. Essentially, people that had been locked down for a year weren't able to spend money on travel or whatever. Now they finally were let out and they were spending a bunch of money. And China, I think we could see something similar, and honestly, maybe even on a bigger scale, because if you think about it, A, there's a lot more people there. B, they've been locked down for a lot longer than we have in a lot more severe manner. So, as China comes out of those lockdowns finally, I do think there's a potential. I'm not saying it's for sure going to happen, but a potential that you see the consumer spending really be higher than what's expected. And then, see, okay, maybe they go out and buy all the iPhones available in China. I don't know. But we shall see. Apple, sorry, I've got Baba's chart pulled up now, but we'll go back to Apple. But yeah, I mean, we'll see here. Apple will be a big, help determine kind of where the overall market is going here. Certainly the daily chart here on Apple doesn't look great, but like I said, it's Apple. Who knows? Could be fine. Yeah.
Yeah, we're just going to see more people worry about the short term of it instead of the long term, because long term it's going to be good. Short term, it's just some rocky roads. And we're going to have to see not only on the Apple front, but Target, on the Home Depot, on the Walmart front. We're going to have to see Christmas sales, Christmas shopping. How did December hold up? Did a lot of people go out and spend a lot more for Christmas, or were they doing more online than in the store shopping? We're just going to have to see, because we're in a very environment where there's still some people that are very scared of COVID, and that's okay. And then there's some people that are just ready to just burst out to shop. And we have to find the right groups and find the right environment to see who's going to win that battle, or the people that are the COVIDers going to win the battle, or the openers going to win the battle. There's a different battle between who is going to overtake the area. Is it going to be online shopping, or is it going to be in person in the store shopping? I know for clothes and apparel, there's going to be, you just can't buy anything anymore without trying it on, because of the trying to return it. There's just a lot of hassle in trying to buy something saying, oh yeah, I'm going to fit for it. and then shopping online. I was just in a JCPenney's and Macy's over the weekend getting new suits, I should say. And it's the thing about trying it on, making sure it fits instead of trying to return it because you're in the risk of long lines, losing the receipt, not getting your money back. There's a lot of pros and cons of shopping online and shopping in the stores.
Yeah, 100%. And let's go to some of those department stores. You mentioned Macy's. You can see, sorry, we're on the 2-minute chart here. Let's go to the daily. You can see we've kind of, we ran up a bunch during COVID, November 2021. That was kind of when we got the height. November 2021 was where, if you go back on it, that's the top in like ARK, Bitcoin, all these growthy names. So it's interesting to see that Macy's topped out there as well. But now trading at $20. I mean, if you go back on the daily chart and you zoom out and you look at where we were pre-COVID, this is the COVID crash. So you're trading at $17 pre-COVID. COVID crash brought us down to like $4 or $5, ripped all the way up to 40. Now we're back down at 20. I think it's tough because if you look at Macy's price action, really for the 5 years heading into COVID, this is 2015 where my cursor is at right now, and it was at 73. You have the huge drop off all the way down. This was seen by the market as kind of like a dying business before COVID. And really got back up to $40, the highest it had been since like November 2018 after COVID, when everything was running. I'd be kind of worried about investing in some of these companies that the market was starting to, downgrade, disregard before COVID, because to me, like, if anything, COVID helped accelerate, people's comfortability with like shopping online and doing these things. And if anything, like in-person shopping, you would think would be lower since COVID. And this is completely anecdotal. I was at the mall in Michigan like a week. It was last Friday. So it was, maybe 10, 12 days before Christmas, not right before Christmas. I was expecting it to be like an absolute madhouse, and it really wasn't that crazy. Like they had the, kids sitting on Santa's lap and everything. And there were certainly a lot of Christmas shoppers there. But it wasn't one of those things where it's like you couldn't even find a parking spot at the mall or anything like that. It was actually pretty. Also, granted, I did go kind of more in the middle of the day, like at like 2 p.m. on Friday. So that might have been why. But still, I would be worried about investing in companies like Macy's that were already, in a big downtrend before COVID.
Right. And then you have to pick a name like Jeffries did this morning. They named McDonald's a top 2023 pick. They say they view McDonald's as the best offensive play in restaurants, giving a looming recession, but also opting to take a share. 4Q likely to see continued strong U.S. demand trends and reset margin expectations after 3Q achievable in our view. They said the fast food giant is a top defensive idea for 2023. There's different names. Like you can compare a Macy's and McDonald's to some extent, where McDonald's is fast food drive-through and Macy's, you see Macy's they were worried about the recession. Well, I can't say they were worried about the recession, but in previous years, 2015, 2016, Macy's stores were on the decline where McDonald's were on the uprise. And now they have to try and find a balance here of who's going to be the biggest outperformer. Are people actually going to shop back in the stores? Are people actually going to shop at a Macy's, at a JCPenney's, as a Walmart, as a Target? Are they going to shop online on an Amazon? Are they going to do more of the fast food delivery, Uber Eats, DoorDash? We're in an environment where it's total mixed each and every day. Are more people at a Macy's, or are more people at a JCPenney's? Are more people at a Walmart, or are more people at Target? Nobody knows really, unless someone's doing a poll that's going to be released. But we're in this environment where nobody knows which business and which side of the business is outperforming and not performing so well.
Yeah, and I think, like you said, Jeffries, put McDonald's out as a potential defensive name for 2023. I think across the board, if you look at different stocks, whatever the kind of more cheaper alternative has been performing better. And I think it's because investors, whether it's banks, retail investors, whatever, are positioning themselves to own some of these more recession defensive names. So if you take example, if we look at Target stock over the past year, so this is November 2021 to November 2022 or December, whatever, just look at Target stock, that price action over the last year. This is a daily chart. And you compare that to Walmart. So between Walmart and Target, Walmart is for sure seen as the more, kind of cheaper, cost-effective one, target a little bit more luxury potential. But you can see, that Walmart stock here. Look, this bar right here on the green side shows us Walmart's up 3.5% over this time frame that you're seeing on the chart right here, whereas Target's is down 30%. And you can see that in other areas too. I mentioned, talked about this on the show a couple weeks ago. Elf Beauty is seen as more of a kind of cheaper cosmetics brand that's available in like Walgreens, different drugstores. And it's not really, I'm not going to say like cheap because I think it's nice. I don't know. I don't use it, but from what I've heard, it's inexpensive for how good it is. And if you compare Elf, look at its stock chart, basically at all-time highs, $54. It went from, let's see, January 2022. So almost in the last year, it went from 32 to 54. You compare that to an Estee Lauder, which is going to be seen as the more kind of expensive luxury brand, is getting absolutely crushed. And they're in the same exact space, selling the same exact stuff, different makeup products. So seeing that, like I am noticing that trend, Nick, is that, if you're between owning a McDonald's, which would obviously be like the cheaper restaurant, or like Cheesecake Factory, I'd much rather own the McDonald's going into what could potentially be a mild recession in 2023.
No, I mean, I was at the mall last weekend. I've been at I have two different malls near me. I have the Monroeville Mall and then I have the Ross Park Mall. And there are two different environments. Where Monroeville, there are a lot of the fast food places. I mean, there's still the Olive Gardens, the Applebee's. There's different malls, but it's the different environment and the different stores that are in there compared to a Cheesecake Factory at the Ross Park Mall. I mean, we waited, to put our name in for the Cheesecake Factory for 4 of us, 2.5 hour wait. And what we did in that time is, well, we shopped in the mall. I mean, we went to Apple. We went to all the different stores, JCPenney's, Macy's. We went to the different stores as we were trying to get occupied because the 2.5 hours isn't going to come in blink of a second. And there were tons of people shopping, and a lot of people were in the Apple store. A lot of people were in the Lululemon, the Macy's, the JCPenney's. People are trying to find deals. And if there's no deals, then there's really not going to be many shoppers. As I think we get closer to Christmas, there's going to be more deals popping out because so many stores have so much inventory they want to get rid of, and them selling it at regular price. A regular suit jacket at like $150, $180, nobody's going to buy. But if it's on sale for like 99, 80, 100, people are going to buy it. So they're going to try and get rid of as much inventory as they can before Christmas, and even the weeks after Christmas as they prepare for 2023 and they prepare for the new year. They're going to try and clear out all the inventory they can so they don't have to keep stocking, so they can buy some fresh, some new apparel, new clothes, new shoes. It's going to be a tough 2023 environment for a lot of these stores that are in the business of ordering equipment and ordering apparel, ordering things, to compare to some of the McDonald's that when you do chicken nuggets and French fries. I mean, there's a lot of businesses that are somewhere that are worrying, that I'm worried about. Are they going to be able to keep up with this environment?
Got it. Well, Nick, I know we are coming up. It's 12:15, so if you've got to run, I understand. Yep. I'll drop your Twitter link in the chat. Go, everyone, give Nick Brown a follow on Twitter if you want some fast stock market moves. That is his thing. Nick, always a pleasure to have you on the show, man.
Yep, always a pleasure. Good to be back. And as we head towards the new year, there's a potentially, I can't say there's a potential. There is going to be a day that I will be in the studio with you live in person, and cannot wait for that to happen.
I love that. I can't wait for that either. Again, Nick's Twitter is in the chat. News by Nick. Go ahead and give him a follow. Benzinga's top intern. Nick, enjoy the rest of your day. Have a happy holidays. Enjoy your time off school.
Thanks. See you. I'll be keeping watching on the show, and we'll keep chatting and see when we can get back on. Maybe tomorrow, maybe Friday. But if I don't see anybody before Christmas, happy holidays.
Beautiful. All right, Nick. Well, again, enjoy the rest of your day, and thank you again. Yep. Thank you, Nick. 100%. Really, again, go follow him on Twitter. You guys want some good information, some fast stock market moves. Sorry, I just dropped something. Still digesting this AMC Visa card. I see someone talking about AMC acquisition in the chat. I don't know. I mean, of course, there's always a potential that someone could come in and want to swoop up AMC. I don't necessarily think that's a high possibility. And the reason why is more what I was talking about yesterday and the day before. Just looking at data from not just specifically AMC, but just from box office numbers and movie sales in general. If you compare this past weekend's box office total revenue from movie tickets in the United States compared to that same weekend of 2019, it's like 30 or 40% lower or something crazy. And that's with Avatar, one of the biggest movies that's come out in the past 2 years. So I personally, even if I'm Amazon or Apple or someone that has all this money, why would you want to buy a name that, is in an industry that's slowing down? I don't know. I mean, I think like it doesn't make sense to me, really from an investment standpoint. I don't think people should, essentially like be sold on the idea that, should be sold on the idea that AMC is about to get acquired. So here, I was trying to find the exact tweet that I saw or like data that was talking about it the other day. Someone wrote a good thread. I don't think it's the exact one, but this one kind of illustrates my point too. So 2022 year-to-date box office versus 2021, up 85%. Okay, that's great. Up 232% of 2020, great. But you're still down 34% from 2019. You're still down 38% from 2018. You're still down 32% from 2017. Now you could argue, okay, but Aaron, look at this trend. You're up this much from here. You're up this much from 2021. It's going to keep growing. COVID was kind of like the bottom of people going to the movies, and now we're going back up. I don't necessarily know if that's going to be the case. I think right now, like as we head into 2023, for most people that like aren't worried, most people aren't worried about COVID anymore. People who want to go to movies are going to go out to the movies. I think you're seeing this drop off. The fact that you're still missing that 30% of revenue from box office is probably from people who have just realized over the past 3-4 years, maybe they're more content waiting for another week or two for that movie to come to a streaming platform and just watching it at home. Or all these different things. Like it could be a cultural thing, right? If you think about, how big of a deal it was for like young people to go out to the movies for however many years, that might be different now. Maybe they're, playing Fortnite with their friends instead of going to the movies. I don't know. Either way, I just don't think these numbers bode well for the industry. And I don't think you can safely assume that this revenue is returning, especially with what we're seeing in terms of the numbers for Avatar. I mean, Avatar, the first one, was the biggest movie, the biggest release of all time in theaters. This time around, it's been a little bit underwhelming when it comes to the numbers, when it comes to ticket sales. I don't think that's a good sign for the industry. I mean, even if it was blowing it out of the water, if Avatar 2 was making new, was beating Avatar 1 and stuff, then I might even just see that as say like, okay, it's a sign that movies are back. But instead it's the opposite. AMC squeeze heating up. I don't know. I haven't really been like watching AMC stock day in and day out. Here's what I will say about it is that you're looking at it now back down at $5 and you might be thinking like, oh my God, this is, basically back down to where it was. But you got to remember that this stock did a split, right? So it's still trading. What's going on? It's still trading well above. Yeah. I mean, if you go back to where it was like pre-COVID, or actually, yeah, I guess we're lower than we were pre-COVID. All right. I don't know. I mean, certainly like if the stock was going to get squeezed again, it'd be sometime soon you'd think with this chart. But again, those are my thoughts. I'm not bullish the overall industry, which makes it a lot harder for me to get bullish an individual name in that industry. AMC, I'm not in on right now, but trust me, we'll be covering it if there is a squeeze to be made. I made some good money buying some AMC calls the first time around. I remember specifically, I think I bought like $5 calls when people like first started talking about it jumping up, and it did, and I made a bunch of money off of it. So I could certainly get talked into, trying to play that squeeze again. But right now, I'm just not really that interested in AMC. I don't really know why anyone would be. Never trust influencers, especially bots. That should be like the biggest lesson taken away from the markets over the past few years is all these people that popped up in 2020 as like expert traders and posting picks. How many of them are still going? How many of them were posting legit, things in the first place. I think a lot of those were paper statement accounts. But all right, guys, let's do a quick crypto update. Checking out Bitcoin, down about 0.5% today. Again, I've been pretty surprised, honestly, that Bitcoin's been able to hang out where it's been. I would expect it to come down a lot more. Coinbase, kind of the same story. Coinbase hanging out at $35, pretty steadily here the past couple days. You did get Coinbase making new lows down to that 35, which a lot of people saw as a big people saw that as a big problem, that Coinbase broke that $40 level. But I don't know. It just seems like I'm not going out here buying puts on Coinbase or anything just because it seems like it's gotten down to a level where even if Bitcoin sells off a little bit, Coinbase's stock may hold up. I think we may need to see some more stuff happening there. Tesla, oh boy. I mean, this is just not what you want to see if you're a Tesla investor. Tesla going red on a day where the S&P 500 is still holding on to its gains. S&P 500 still up more than 1% today. If you look at some of the other biggest drivers in the S&P 500, Apple up more than 2%, Amazon up about 2%, Microsoft up 1%, and then you've got Tesla in the red. Clear as day, the market is saying, basically, hey, you're out of favor. We don't like you right now. But the flip side to that is if you want to try to bet on some reversion to the mean, you want to try to bet, okay, if the market keeps going up, Tesla's due for a bounce at some point. Sure. I don't know. I'm still, shying away from Tesla. Actually, full disclosure, I did buy some Tesla puts today that expire on Friday, just kind of some out of the money. The only reason I bought those were the 127 puts that expired this Friday. The only reason I bought those, was just because essentially Tesla's still showing weakness today on a day where the rest of the market's getting a bounce. Gives me some conviction that tomorrow or Friday, if we have a big red down day with the overall market, then we could really see Tesla getting crushed. And I do think Tesla will get a bounce here at some point. I don't think it'll be as easy as, everyone can just go out and buy some puts on Tesla and everyone's going to make money. That's not how things usually work out. In fact, the more Tesla goes down and the more shorts pile in, the probably more likely we are to see a little bounce. But I do think there's some big possibility that, if the market's down tomorrow, we could see Tesla down another 3-4% before you see one of those big bounces that I'm talking about. And even though Tesla's getting really overextended here to the downside and getting very oversold, you could make the argument still that there hasn't really been that capitulation point. You haven't really seen that forced selling coming in. And if you do see that coming in, then, oh boy, that's when things can get really interesting for anyone holding puts on Teslas. If you do see, whether it's a big institution, whether it's a big investor like Ross Gerber or someone going in there and just, selling, that's when that's when things can get real interesting. So I'm actually going to reach out to Ross and see. I'm sure CNBC and everyone's already reached out to Ross, but we did see that. Oh, he just said sure. Awesome. I'm messaging Ross right now, trying to get him on the show. He says he's going to come on tomorrow. Why Ross? He's dope. Because he's one of Tesla's biggest shareholders or investors and was publicly spatting with Elon, who Ross has been a big Elon fan, I would say, over the past however many years, 10 years. So to see Ross kind of come out and start, I just want to hear Ross's thoughts on it. I'd love to get Elon's thoughts on it too. I'll reach out to Elon too, but Where's CVS or Walgreens? The child medicine. Yeah, we can talk about that. Well, yeah, right. I mean, Vanguard and the institutions are going to be the top holders, but as far as like individual investors, I don't know. I'll look into. I don't know how many shares Ross holds, but I know Ross has it in his ETF and all this stuff. Yeah, we'll get Ross's thoughts on it. Alrighty. That's fair. Let's see. Gerber, Kawasaki, Whale, Wisdom. Seeing how much. I mean, yeah, look, I mean, it's still, I don't know how much, obviously, like I said, obviously wait, OP, Ross has max 5 to 100K shares. He has, you can see it right here. He has over $100 million worth of Tesla, and that's just in his investment account, not in his managed ETF. I don't know, man. I think once you have $100 million worth of something, you're allowed to be a little critical. I was critical at Elon when I had like a few $1,000s worth of shares of Tesla because I didn't like, some of the things he was doing when I had that much share. So if he's got 400,000 shares of Tesla, okay, he might not own as many shares as Vanguard or one of those other institutions, but there probably aren't that many, people that manage their like wealth management, things that own that many shares of Tesla. I don't know. $100 million worth of Tesla. Find me some other people that own them. We'll bring them on the show and get their thoughts as well. But someone asked why we were going to bring Ross on. It's because he's a major shareholder of Tesla. So he's got skin in the game and he's got opinions. I don't know, love him or hate him. I think that's fair. I think it's fair to, be critical and to have opinions when you have $100 million invested in something. So 100K shares. He has 400K shares. Leo Kogan is the largest private investor. All right. So let's see how much Leo Kogan has. Kogan. So is the point that because he's not the biggest shareholder, then he can't be critical of you? Like, I don't understand. Like, is it, I don't even know who Leo Kogan is. Shares of Tesla. Are you sure? That doesn't seem. Okay, Kogan Leo is some like Chinese. Either way, I mean, my point still stands, right? Elon doesn't care. After 2 years in this cycle, there will be other resilient investors immune to margin risk. I actually think it's quite the opposite right now with Tesla, where there could be some problems, and is that a lot of the buying that you've seen in Tesla over the past couple weeks, and I saw a not headline, whatever it's called, the bottom screen on CNBC the other day when they were talking about this was talking about how retail keeps buying Tesla stock. And now I don't know how much of this is on margin, or I don't know how much of it is just, like retail investors buying Tesla stock. But if retail is still one of the main drivers of Tesla, those are the most opposite of being, resilient to margin risk. If basically anyone who's bought Tesla in the past, year is underwater, the more retail investors start losing money on Tesla, the less they're going to be able to add more on margin risk. So I disagree wholeheartedly with, people in the comments saying, Elon has a plan or he knows what he's doing. In fact, Elon's already been trying to walk back some of his plans because he sees the price action. It doesn't matter what someone says to him on Twitter or what article the New York Times writes about or what he thinks the libs are saying about him or whatever. What matters at the end of the day is Tesla's stock price and the chart. And that's what's going to be what's going to get Elon to either, say, okay, I am stepping down from Twitter, or I'm going to stop posting on Twitter in general, or all these things are going to be Tesla's stock price, not what some woke mob or whatever he wants to say out there is doing. And again, you've already kind of seen him come out and say, I'm going to step down from Twitter. We're going to try to do this and that at Tesla. He was making excuses on for Tesla yesterday, basically saying the interest rates rising are what's hurting the stock, which 100%. But, you compare it to a Ford. We compare Ford to Tesla, to GM. You see over the past, and I know Tesla, you look at it on a 5-year or whatever, is way outperforming all the other manufacturers. But just in the past year, so just looking at 2021 right now, we're just looking at 2021 right now. Ford is up 30%. Tesla's down 40%. Again, Ford is up 30%. Tesla is down 40%. Again, I know if you zoom out, if you go back, Tesla crushes all the other car companies. The point in what I'm saying for the past year, and you're looking at the stock price, is the market is saying that Tesla, because of all that growth, essentially, or maybe not because of it, but in partly due to all that growth, now Tesla, because it was more of a growth company compared to your Fords, your GMs, is now getting absolutely crushed. I don't see it stopping really, unless the Fed, kind of turns around. So we shall see. Again, it's crazy to see this. Ford up 30% on the year, Tesla down 40%. Going back to Tesla, let's see if we got back green on the day. We did. We got barely back green on the day. So, okay, Tesla got back green on the day. Looking on the 2-minute chart here, good to see it pop back in the green. If you guys got trades on Tesla, or if you've got something you're doing with options, you're hedging a position there, let me know in the chat, because we've just been getting a lot of comments about Tesla this week in general. But I do think your biggest bull cases from here for Tesla will be Elon stepping down from Twitter and potentially even finding some other investors. I think a lot of institutional investors will get more at ease if they see that Elon isn't on the hook for as much money as the $55 billion or whatever it was when he bought Twitter. We'll start to get some more people interested in Tesla. Obviously, anything the Fed does that gives us confidence that they're closer to cutting rates or stop raising interest rates, that will be good for Tesla. But other than that, as investors allocate their portfolios for essentially for a recession in 2023, it's going to be hard to imagine that Tesla is able to keep up with its deliveries, able to keep up with its revenue expectations and EPS expectations if there truly is a mild recession or just a recession in general coming in 2023. So I don't know. It's scary right now looking at Tesla's chart. I guess you could always argue that if you're a long-term investor that, now's the time to buy, whatever. I personally wouldn't be. Again, this isn't investment advice. I actually am holding some Tesla puts right now, full disclosure. But those are my thoughts. I don't, necessarily. So yeah, we're going to get Ross Gerber, one of the major shareholders of Tesla, on the show tomorrow. Ross got in a Twitter spat with Elon the other day. So excited to talk to Ross from Gerber Kawasaki tomorrow. Again, if anyone has any other suggestions for Tesla shareholders or people, I figured Ross would be a good person to bring on because he's someone who's been bullish Tesla for so long and been such an Elon stan that it's interesting to hear someone from Ross's point of view, the problems that he might have with Tesla or the things that, he has problems with what Elon's doing, as opposed to a guy like Gordon Johnson, who's been, bearish on Tesla for forever. Gordon Johnson is going to come on and say, Tesla is awful and he hates Elon every time. But to hear Ross, who's been bullish on Tesla and who owns $100 million worth of Tesla, come on and say, Ron Barron, that's a good one too, Topher. I'll reach out to Ron today too. To hear Ross say that, it means a little bit more, it means something a little bit different to me than someone like Gordon, who again has been pretty bearish this whole time. What expiration on Tesla puts? Mine are just this Friday. I kind of I made some money on those SPY calls I bought on the show yesterday, and I took just a little bit of that profit. I want to say, let's see, what's my equity right now? I've got $235 worth of these 127 puts that expire on Friday. I actually bought them at like the perfect time. I bought them right before Tesla dipped down to like 136.50 today, and was up about like 10% on them, but I'm holding them into tomorrow. Again, the only reason I'm buying these short dated Tesla puts is because on a day like today, Tesla was showing a lot of weakness when the SPY was up 1.5%. If we get a down day in the overall market tomorrow, I'd be worried about Tesla's price action. So if we see that selling off pretty hard, could get rough. Ron Barron must be fed up because he asked Elon a couple times to be less controversial. Yeah, and I've been saying this on the show for a while, right? Like, you love Elon or hate him. Part of Elon's allure, part of the good things about Elon is that he's not afraid to go out on a whim. He's not afraid to go out and be his own person, and he's not afraid to do things kind of unplanned. He's not afraid to do things spontaneously. Like, he bought Twitter pretty spontaneously, and when you have that kind of brain that you see this and you want to do this and you want to achieve this, you're willing to experiment, you're willing to act. You can see Elon really getting a lot of things done. But the flip side of that, there are drawbacks as well, including OP, like what you're saying, Ron Barron saying, hey, man, like, you're posting all these tweets without really thinking about how some shareholders or some potential customers might see those tweets. There's a flip side. There's a negative impact that has as well, and goes back to the whole, Michael Jordan thing, where Michael Jordan, from a business person standpoint, intuitively understood this in the 90s and always said, I'm not going to go out there and make any comments you guys want me to make that could be seen as political or controversial, because Republicans buy shoes too. And Elon's forgotten that not only do liberals buy electric cars too, liberals are almost essentially the exclusive ones that buy electric cars. And I get it, Tesla's not just a car company, whatever, but when 90 whatever percent of its revenue comes from car sales, it's a car company, right? So we're going to get Ross Gerber on. Excited about that tomorrow. We'll see what Ross has to say, because again, not what you want to be seeing as a Tesla investor over the past few weeks. So let's see. OP saying 120, 122 will be magic support in the case of a flash crash. Yeah, and I don't, and that's kind of what why I bought these short dated Tesla puts, is because, like, you haven't really seen, you did see it down like 7-8% yesterday, but even that, if you look at the chart, like if we look at the 10-minute chart of yesterday's price action, very like orderly selling, and it kind of sold off more toward the close and toward the end, but just very orderly selling. You don't have any huge like capitulation, forced selling. And the more that Tesla stays out of favor, the more the market stays in trouble, the more I think you're getting to the likelihood of an event like that, where you kind of have everyone almost like a bank run, but everyone, rushing to sell as quickly as they can, to where you could really see that day. Like, we haven't seen Tesla get halted to the downside or anything like that. And again, that's the only reason I'm buying these cheap puts, is basically because I do see there being a possibility of something like that happening. If not this week, next week, whatever. Not even saying that it's likely. I say, okay, there's a 10% chance of that happening. Me buying $200 worth of these cheap out of the money puts, say that 10% ends up happening and it works out. Boom, that $200 is, we're now worth $2,000 or whatever. So again, just a little like high risk, high reward play there that I've been looking at. But Tesla getting a bounce today over the next over the last 20 minutes or so. So good to see Tesla getting back into the green there if you're long either Tesla or just the overall market here. All right, but I do see Money Mitch. We're gonna go ahead and play. I got double booked and got to hop on this call here in 5 minutes at 11:45. So we're just gonna play a few minutes of this replay of a boot camp before stock market movers. So be sure to hang around for that. We're gonna do understanding levels and moving averages with Sylvia Bellrock, owner and trader from Bellrock Pro. We used to have Sylvia on every week when we did get technical. She's great. So stick around and watch again. This will just be for about 20 minutes or so. And then when we come back, Money Mitch will be live on Stock Market Movers, so do not go anywhere. I'll be back live tomorrow on Benzinga Live. Ross Gerber, one of the top shareholders of Tesla, coming on tomorrow. Excited about that. So let's go ahead and get this stream going. And when we come back, Mitch will be here with us. Peace and love, y'all. See you tomorrow.
Right away with indicators. First of all, I would like to share with you guys, I do like indicators, but indicators I use only as a guide in my trading. So I really don't use them as a signals or buy pure based on indicators. Some of you probably already know me, and you know that I am a big fan of less is more and this KISS approach, which means keep it simple and stupid. So too many indicators can lead to confusion. This can lead to not being able to, to make a decision with your trading. So less is more at this point. And again, I do think most of the indicators are lagging. So I focus on the current price action. And I think when it comes to trading, and we're talking right now about indicators, there is no holy grail in trading. Every single strategy, regardless of what you're trading or doing, is going to have drawdowns and is going to have times where it's working very good, but also times where it will be much more difficult to trade and do the same trades like in a very nice and uptrending phase. So the key here and the biggest secret, in my opinion, is to be able to identify the current market cycle and when is a risk on and risk off time to trade. And being able to identify those things will help you a lot to increase your performance and also to focus on high quality setups only. So that's why when it comes to indicators, again, I use them as a guide, but I don't trade pure only on indicator because I see all those moving averages are crossing, I'm gonna buy the stock. So this is not how it works. That would have been way too easy. Okay, so let's go ahead and start with moving averages. Again, moving averages do not predict the price. They're all lagging indicators. You can use them, and I personally use them to identify the current direction and as a guide. And we're going to go after this theory through some examples. How can you use them and what are my bread and butter setups with moving averages? So the most popular moving averages are exponential moving average and the simple moving average. And the simple moving average is basically the average price of a stock over a specific number of periods. So for example, this is calculated based on the closing prices. If you're using, for example, the daily chart, this will be 5-day simple moving average will be the calculation of the 5-day sum of the closing prices divided by 5. And the exponential moving average reduces the lag by applying more weight on the recent prices. So that's basically the difference. Of course, there are many other moving averages which you can use, but I personally, when it comes to trading, like to focus only on those. So I personally use the moving averages 9, 20, 50, and 200 on the daily chart. Again, we're going to go through some setups and examples and see how exactly all of that works. Also, I like to use the RSI indicator. So this helps me to identify overbought or oversold areas on the chart. The relative straight index is a momentum indicator, which a lot of technical analysis traders are using, and it measures the magnitude of recent price changes to evaluate, like I already mentioned, the overbought or oversold conditions in the price. So, for example, RSI over 70 means that the stock is trading currently in the overbought area. But again, most of the time, especially when it comes to growth stocks, which I like to trade in very uptrending markets, those overbought stocks can stay for a very long period of time overbought. Also, the US indices, which I trade with futures, for example, NASDAQ, S&P 500, and Dow Jones, Also, they can stay for some longer period of time overbought. So only because something is overbought, I'm not going to go ahead and short it. I would use it as a guide to take some partial profits, maybe close a position and wait to start another position when everything starts to pull back. On the other hand, oversold means that the stock is trading in at a lower than a normal price, so it is oversold. And one of my favorite setups is to focus on oversold growth stocks. So if a stock pulls back into a certain support area, if it is above the 200 moving average and oversold, that's for me a A+ setup, of course, in a very good and uptrending cycle to buy. So this is one of my favorite setups, and this is how I use them as a combination. And we're going to go through some examples in a couple of minutes. Also, one of the most important thing when it comes to tradings, which I'm using, is support and resistance. I think, guys, there is nothing more simple and easier than identifying the price levels on the chart. So unfortunately, a lot of people are trying to get fancy, come up with a lot of different indicators with who knows what systems, which are been most likely tested in the past and work very good. But the market is changing, the conditions are changing. We're going through COVID, through Fed increasing interest rates. We're going through now tapering, gonna go next year increasing 3 times the interest rates. All those things you cannot back test. And that's why I like to focus on the price action around important support and resistance areas, because you don't know what the future is going to bring. You don't know what's going to happen in the world, some important events or fundamental data which is going to come up. All what you can do is focus on the price action using important levels on the chart is based on the technical analysis. So again, we're going to go also here through some examples. This is basically a theory here, how you can identify those support and resistance areas. So for example, if you have back here, we see this previous resistance zone. When the price breaks out of this resistance zone, it becomes a support area. And then at some point, we might see some test of this area a couple of times, and this is now our support area. When it breaks out again one more time through the previous highs, which is the resistance, then it becomes support again. So this is a very easy visual way for you to identify that. Resistance can be the previous high, like I mentioned, or the previous breakdown area. You can also have a lot of times like a channel where you have the resistance and the support area, and you can use them also as a trading price levels to make channel trading. You can buy around support and sell around resistance, or if you're a short seller, which I personally don't do a lot, you can short around resistance and cover around support. Why don't short sell? If you ask yourself, there are several reasons. So in the past years, the stock market has been extremely bullish. We have zero interest rates. It's been just very, very hard if you're a short seller to do something against the overall market direction. And even if you go back in the history, you're going to see that the majority of the time the stock market goes up, and even if you go through a lot of pullbacks or crashes, they recover very, very fast, especially in the past 9 years. That's why I've been very focused on buying stocks and less on shorting. So again, shorting can work, but especially when trading those US indices, this is kind of a hard strategy to do, not with very profitable and consistent income. Okay, so this is how resistance works. Again, if you're in a downtrend, you can, once the support area is broken, it becomes a resistance. And if it's tested a couple of times, you can use it as a guide, for example, to short sell. So I have now a couple of examples here, and I would like to go through those examples and see here on my trading platform. That's my trading platform here. and go and identify those support and resistance areas, those moving averages. How can you use them? How can you use, most importantly, the market cycle based on the price action, and not, just focus only because a couple of moving averages are crossing or only because you see something overbought or oversold. That's just not enough. Okay, let me check out now the stocks which I have. Guys, if you have any questions in the meantime, anytime, let me know about it. I have here on the list AMET.
Yep, we do have a couple good
stocks which I have been trading a lot. And
hi, Sylvia, can you hear me?
Yeah, I hear.
We do have a couple questions in the chat. Manny A wants to know, do you use a volume profile?
No, I don't use a volume profile. I have tried it in the past, but to me, it just didn't really help me with my trading decisions. It's I think it could be helpful. I know traders are using it, but I personally find myself using basically pure support and resistance areas much easier, and I don't like to put too much information because I cannot make clear decisions. So that's the reason I don't use it.
Yeah, we talk about that a lot with traders, that sometimes the simpler the strategy is, the easier it is to have it be repeatable for success. Edwin wants to know, do you use a VWAP?
VWAP I use if I day trade, which I do sometimes with those US indices, for example, the NASDAQ or S&P 500. Yeah, I do use it, but again, only the majority of the time that's a guide. So to me, it's very important the price levels on the chart. Where is support? Where is resistance? Trying to think a little bit outside of the box. So, like for example, if we take the NASDAQ as an example here, we went here in the past 4 days, 1,000 points, and if you just combine a little bit of logic and think, okay, if that was in the past 5 days straight up move of 1,000 points, you don't want to, of course, to continue buying here, because the probability for this to slow down and lose momentum and maybe starts to correct is very, very high, because this has been a straight up move only in 4 days. So that's why, only knowing that, you don't need to start longing at this point. So that kind of stuff, I don't think like only pure indicators can help, but VWAP can be used as a guide. Yeah.
Yeah. All right. Well, I'll let you get to your charts, because maybe some of these questions we're seeing in the chat will get answered as you go through your charts. Someone did ask, though, are you able to zoom in once on the chart for us, just so we can maybe see the levels a little bit?
Those levels I cannot zoom in, unfortunately, no.
Okay, it's fine. All right, great. Well, I'll hop back in as we get some more questions from the chat. Thank you, Sylvia.
Okay, you're welcome. Okay, so let's continue with the stocks again. Guys, those strategies can be used for, I'm using it for the US indices, which I'm trading, especially the NASDAQ, S&P 500. I'm trading with the contracts, but I think it is also very, very good for small accounts. And if you are starting right now, especially for people who are below the PDT rule, and you're trying to grow your account, this can be a very good opportunity with those instruments to do so, because they have also micro futures. So it's not only the big contracts. For a small account, the micro futures are a very good opportunity. You can basically start easily with with $2,000 to $3,000 with those. And if you learn the exact strategies and discipline here, I think this is a very, very good way to grow a small account. I use that in the past also a lot to grow my small account. So those are definitely something I really like to trade. And I trade those, by the way, on the 4-hour chart or 1-hour chart as a swing trade. And I do use there also the moving averages, but most importantly, I wanted to start with a couple of stocks, because those stocks are also, some mid-price stocks like 50, 60, 70 bucks stocks. Those are also very good opportunity to grow an account if you're trading those growth stocks. So let's check out AMET first, which I wanted to start with, and identify there what were here previous support and resistance area, what were also back here moving averages. How can you use them? When are moving averages good to use and when they are not good to use? So like I mentioned, for me, one of the most important things in trading, really before you start with any patterns or anything else, is market cycles. It's very important to identify what is the current cycle. Every single instrument goes through the same cycles over and over again, regardless if it is, you know, crypto, if it is here the futures, stocks, momentum, whatever you're trading, you will always go through those cycles. And that's why to me it's very, very important to understand those, because you know, it's just crucial. And just to, you know, to mention a few of the market cycles, which are some of those which will make you the majority of the money, and which personally made me my profits for this year and the past years, are being those uptrending cycles where you just have, you know, momentum, higher highs, higher lows, everything is easy to trade. Unfortunately, this is at some point over, and you cannot apply the same strategies, for example, with moving averages and stuff like that, when this cycle ends. Because in a very uptrending cycle, we're going to see that those moving averages are very easy to use. You know, every time they pull back into the 9 or 20 moving averages, you will have a very nice setup. You can buy, it will continue to go up, and everything, it will be easy. But unfortunately, like I mentioned, at some point this is over, and then you enter the so-called distribution cycle, which could look like this. You know, it can go sideways, it can break support area, then bounce back up, and then we might enter also a downtrending phase. So going through this cycle here, you cannot use the same strategy what you have been using in an uptrending cycle. And especially if you're using moving averages, they're gonna go here through the middle of the chart, and they will not work in this kind of a market phase. So that's important to know. And I know a lot of you guys, especially newbies, start with something, they think, oh, that's working great, that's the strategy. And then you realize at some point when the cycle changes, that's not working anymore. And then you want to throw the strategy and think, oh, you need to find another holy grail or something else which is going to work. So it's not the strategy, it's just the market is changing. And it's same with sectors. You can go through, for example, tech sector has been very hot, but this year has been a little bit harder to pick the right stock. It's not been a stock picking market. All those things you need to think of when you're trading. Okay, so let's go back here to our AMED example. And what I wanted to share with you guys is how to identify those support and resistance areas. So in order for me to make a trade, I want to be as much as closest to the previous support area and see how the price reacts there. If the price starts to make, you know, some consolidation pattern, some bullish candlestick formation like a doji candle or something like that, which just gives me the clue that they are bulls stepping in around this area, willing to buy the stock at this point, and that the stock is ready to bounce. So that's what I'm looking for. And the closer I am around the support area, the better my risk to reward is. So for example, if I if I buy a stock around this level, which is, if you see here back, this was the previous low, that was the previous low, so that's our previous support zone. So if I am able to buy it around this area, then my stop loss will be just below this support zone right here. So I'm risking here not much in order to to make 2 or 3 times on my money. So that's why I prefer to buy around support levels as much as low and next to the previous support as I can. And you just have very good risk to reward here. So this is how you can identify them. Now, if you look at this stock, this has been a very
Love it there by Sylvia Bellrock. Definitely give her a follow, team. You guys can check her out on Twitter. She's on Twitter, Sylvia Bellrock, and we might be actually been working with Sylvia in the future. I'm gonna reach out to her, see if we can do a little bit more of swing trading action, because it seems like that's her forte. And for sure, for me, and my bread and butter is definitely in swing trading. So we'll bring down Sylvia now, and we'll get into stock market movers. Like always, I'm excited to get into today's show. We got a lot to talk about. Going to go ahead and pull down the banner here, get us into, of course, stock market movers. And today we got Luke Lloyd, of course, wealth advisor, investment strategist at Strategic Wealth Partners. Excited to talk about 2023. Luke Lloyd, like always, one of the things that we do is get to the expert opinions to keep you in the informational edge here on Stock Market Movers. The experts, what are they looking at, right? Well, stay tuned. We'll hear all about it from Luke. Yesterday, of course, we released Adam Johnson. Don't know if you guys were able to catch that video. If you guys missed that video yesterday, definitely check it out today. I'll give you guys the link to go ahead and check out that video, which was how to find high quality stocks in 2023. I'll throw up that link right now. And like always, team, I'll throw it up also at the end so you guys don't miss it and are ready for 2023. That's really what I want to do this week. I want to ask the analysts, I want to get to the experts to ask them, what should we investors be looking into 2023? Let's get right into it. Hit the thumbs up. Let's get it started. Stock market movers, we got a lot to talk about. Looks like Santa Claus is coming to town. Let's go, team. Let's get it started. Welcome to Stock Market Movers. I'm your host, Money Mitch. Let's go ahead and see what we got in the market today. There are 3 ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. Team, gotta get my hat fixed up here, right? Gotta get it right. What's going on, team? Who's ready to get into it? It looks like Santa Claus is here and he's coming to town. We got a lot to talk about. Let me bring up my charts here. We can take a look at the overall market action. We're definitely seeing the SPY push and push. Looks like we're up there towards 386.55. Did a little bit of a pullback here and continuing the push here. Yes. Looks like we're hearing the sleigh bells ring there. Let's talk about what happened today. We did get some economic data to come in. Home sales declining 7.7% on a monthly basis in November. Sales down 35.4% year over year, marking the 10th straight month of declines in the housing industry. And of course, I've talked about housing, how the issues really are apparent. And one thing that I'm stating is I know that a lot of people are thinking, well, we got around this. This isn't a financial crisis like last time. But one thing I'll go ahead and state is that how long can people afford these high rates? And is this creating a bigger problem in, of course, the housing market? Because there's such a small supply of houses available. And a lot of people are what? They're stuck underwater underneath their mortgage now. If they were going to go ahead and sell or were forced to sell, let's say for some reason, job layoffs get a little bit intense, right? Well, there could be a big problem here, as a lot of people that are stuck underneath would have to sell at lower value than what they bought the house for. This is definitely an issue that I'm keeping in mind. If we get longer, prolonged, of course, interest rates, how will that affect the housing market? And in the long run, will we start seeing some kind of foreclosures starting to show up, as some people will not be able to sell their house at the prices to get the profits, right? Well, it's just all things to keep in mind. Like always, I don't expect to see another financial crisis. But of course, with the housing situation where how's it going and such low supply, yet demand destruction, I wonder what comes out of this. Something definitely that we can learn from investors. Just got to keep an eye out. And the SPY pushing strong here, looking like it wants to get back to 387. We'll see if it gets up there. Of course, we also got the Conference Board of Consumer Confidence Index. jumped today towards 108.3 in December, from 101.4 in November. So we're getting the jump. Of course, the street consensus estimate was for 100.5. What does that tell me? This tells us that inflation expectations are starting to retreat. And if anything, there is some people even thinking about vacation intentions, right? Now, one thing that we're starting to see, and this was given to us by Lynn Franco, Senior Director of Economic Indicators at the Conference Board, said that homes and big ticket appliances have cooled further. So plans to purchase homes, big ticket appliances have cooled off, the demand going down. This is where I'm starting to look in the long run, what will happen in the housing situation? Something needs to give, right? Is it going to be the supply coming to the market? No, I don't think that's going to give. It could be the prices coming down and getting knocked down as demand truly gets destruction. And if no one's buying houses, what happens to the price? Yeah, supply can keep it up because it's so low, but for only so long. Eventually, if demand destruction stays strong, well, we'll start seeing a glut there in the buying of the houses. And of course, if the prices keep dropping and more investors or mortgages get underwater, that's where things can really get sticky. All right. Well, oil news also hit today. Gasoline inventories build were at 2.53 million barrels versus 2.14 million barrels build. And the U.S. crude inventories, the draw was 5.894 million versus 1.65 barrels estimate. So what does this tell us? There's still more oil being pumped out. And I don't think anybody's doubting that. Now, one thing to note, though, is how XOM, right at that 10 o'clock release, reversed from the downside action and pushed right back towards the upside. So something definitely to keep in mind. Maybe you're looking at some other oil stocks, but that reversal off that 10 a.m. clock right there, and especially 10:30, it does look good. It looks like it's holding on and looks like oil is coming back. All right, let's keep going. Let's take a look at some different stocks out there. And of course, today there will be, of course, a big kind of political thing that's happening. Of course, I want to go ahead and mention this. I don't see it moving around many stocks, but like always, I want to put it on your radar. Of course, Ukrainian President Zelensky will be meeting President Biden at the White House Wednesday to deliver an address to joint session of Congress at 7:30 p.m. So we could be seeing some overnight action come in the markets. I'm not sure how much this will actually affect it, but something to keep in mind. We'll just have to wait and see if, of course, the Biden and Zelensky can move the markets. Right now, I don't think it's going to be moving too much, but something I want to keep on your radar. All right, let's keep going. Let's get into the market. Let's take a look what's going on right now. The SPY overall. Well, the SPY is now towards 386.70s, trying to get back there towards the intraday highs of 387.30s. Look at the daily chart. Looks like we're trying to fill in some of this gap. Can we actually make it back to 390? Well, something to keep in mind. Let's get into the action. Let's talk about the headlines that are out there. It's good to see you guys in the chat. I see you guys, JRP, Kenneth, The Crow, Quantum, RJ, Ray, Sydney in the house. What's going on out there? The Blind Trader. It's good to see you guys. Say hello. If you guys got a stock that moved today, would love to hear about it. All right, let's keep going. Let's get into some different stocks. All right, let's go towards FedEx as they reported earnings today, and we'll talk a little bit about what this did for the market. FedEx getting definitely the lift today. Let's go towards the 15-minute chart. You guys can see here, we're coming back here from the pullback. And FedEx continuing the push, not looking too bad after a nice kind of hourly pullback. Adjusted EPS at $3.18, beat the $2.83 estimate. Sales at $22.8 billion, missed the $23.74 billion estimate. Now, where things get a little bit worrisome is really, of course, is their warning that they gave. Of course, the second quarter results were constrained by continued demand weakness, particularly in FedEx Express. So it looks like, of course, kind of the one-day shipping is being not used as often. Of course, I think that this is businesses trying to make adjustments to cost, right? Cost cutting. And that's exactly what FedEx is doing, right? They're even trying to get some cost cutting. They said that they'll now be able to generate a total fiscal 2023 cost savings of approximately 3.7 billion relative to the initial fiscal 2023 business plan. So FedEx definitely trying to affect their costs, get some cost cutting, but they're still warning you that they do see demand weakness, and especially in their faster service, the FedEx Express. All right, getting to Nike, let's take a look really quickly into it. What happened today? You guys can see this is kind of pulling back and holding. Is this the type of stock that could really get that Santa Claus rally started? Well, it seems like we were definitely pushing today. Q2 EPS, 85 cents, beat the 65-cent estimate. Sales at 13.31 billion, beating the 12.57 billion estimate. Nike said that LeBron, KD's, and Giannis fueled double-digit growth in basketball. And of course, Nike executives said that North America, Black Friday, Cyber Week performance set record highs for demand and traffic. They also stated that we closed our biggest Cyber Week ever, increasing demand by 75% from last year. So Nike, definitely good results, starting to push. Is this the stock to really get the Santa Claus rally going? As you guys can see, we're back above the 200-day, have pushed into this level before. Now I want to see if we can keep pushing, kind of hold some pullbacks, but doesn't look too bad right now on Nike. And of course, we can take a look at some different stocks that kind of trade with Nike, see how they're doing today. Stocks like let's say a Dick's Sporting Good, right? Well, that's going sideways. Did get a little bit of a lift in the pre-market from that. You could take a look at Under Armour, got a little bit of a push up also. Lulu also kind of trade similar to this and getting a little bit of a lift. I think overall, Nike definitely gave retail stocks a little bit of a lift, especially after we saw those weak kind of retail numbers last week, right? Well, there you guys see it. Nike shaking things up, getting a little bit of a move. I was even watching another apparels. Crocs was having a good day. Crocs, we'll keep on watch to see what happens on this one. Doesn't look like a bad daily level. Did Nike get Crocs started? Doesn't look too bad. We'll see if Crocs can get back into the 100 handle. It did it earlier today on the 10 o'clock, 15-minute candle where we went to a high of 141. We'll wait and see if it can get a little bit of some Santa Claus rally. I don't know. Do reindeers use Crocs? Might have to find out. All right, getting out of Nike, we're going to go ahead and get into our interview in just a second. Like always, what it's all about here on Stock Market Movers is getting to the experts and getting their opinions. Want to ask, of course, into 2023, and that's what this week and next week is all about. That's what I'm trying to do. I'm trying to get our outlook ready for 2023. Of course, we can worry about the Santa Claus rally, but if anything, I think as investors and traders, we're all starting to think about 2023 and how we want to go ahead and have our outlook ready. So we're going to get into that conversation in just a second. But like always, do me a favor, team. Hit the thumbs up. Let's see if we can get some likes up today. Let's smash it up and let's get it started. Let's get into our interview today. Let's bring on, of course, my man, Luke Lloyd. Let's go. Let's get it started. Sound the alarm, chat. It's time to talk about 2023. All right, Luke Lloyd, let's bring him on. How we doing, Luke? What's going on? Oh, you muted yourself. You muted yourself. No worries. It happens to me all the time, but
I said you're looking very festive today. I didn't get the memo.
Oh, of course. You didn't see the stocks. They saw the hat, man. That's what happened this morning.
I think you're making this rally happen today, the Santa rally, right?
Yeah, yep. That's what everyone's telling me. It's all my cheerfulness today, and that might have been the move. But the truth is
I don't want to ruin the mood. Hopefully I don't do that today.
Yeah, the hat, for a little while there, Jerome kind of knocked it off, but I was able to put it back on. That's what matters, right? Right. Let's get into 2023. The first thing I want to ask is more along, how do you find what high quality stocks means to you, Luke?
Yeah. So number one, I think in this environment, you can't go and try to find stocks. Those stocks have to try to come find you, right? You have to have a list of stocks that you're just itching to buy, and you're waiting for those stocks to fall into our lap, because a lot of investors over the past 13 years straight basically could throw money at the wall, buy the dip, and it worked out because interest rates were 0%. What people got in trouble over the past couple, or I think they're going to get into trouble over the next year or so, is that they're not going to be patient. They're going to be itching to continue to buy the dip. And that's what's gotten people in trouble this year as well, is just itching to buy that dip. And we are in a bear market. So you have to be patient, number one. Number two is you have to combine both fundamentals and technicals. You can't ignore fundamentals anymore. Again, over the past 13 years, you could basically ignore fundamentals and look at the growth story and look at some of the momentum behind it, the technicals, and it worked out. You can't do that anymore. You have to actually look at valuation, especially as we're in this rising rate environment, and you have to look at momentum as well, because if it's not breaking out of trend lines, if it's not breaking out of the support and resistance levels, you can't really look to pick up the stocks either.
Definitely. I think it's something that a lot of investors tried to play the hero this year, and we're probably very quickly learned that playing the hero is not a fun game. But before we get really into 2023, give us a recap of what you really saw out there in 2022. And what do you expect happening towards the end of the year? Do you see the Santa Claus rally happening?
Well, I think it was a bunch of mixed emotions in 2022. A lot of investors, haven't played in this environment ever. I mean, these are unprecedented times, essentially, what's happened the past 2 years and what happened in 2022 with the rising rate of environment and how quickly, rates rose. Mortgages went from 2.5% to 7% so quickly, right? That was a shock, essentially, to this entire system that was built on debt. This whole system was built on debt for 13 years straight. With rates at 0% since 2008, right? So a lot of companies over-leveraged themselves over the past 13 years. And a lot of companies don't know how to operate. And a lot of investors don't know how to operate in this environment that we were in 2022 while we're taking out so much liquidity. I mean, the balance sheet from the Federal Reserve went from $3 trillion to $9 trillion. It tripled, in 2 years. I mean, that was the most liquidity we've ever pumped into the market. So I think 2023 is going to be much of the same. And that's what Federal Chair Powell, Fed Chair Powell said a week ago. He's more hawkish than most people, were wanting to be in the market. It's because we do need to kind of reset this economy. We need to reset expectations. There's been too much excess out there. The rich got richer, the poor got poorer, the middle class got divided. That's not good for the long-term economy. We need to make the middle class stronger again, but there's going to have to be some pain first off, and we got to fix the labor market. It's too hot, and the companies right now are taking it on the chin, and they will continue to take it on the chin.
Definitely. So where do you see the Fed outlook moving into 2023? Do you see maybe potentially the famous line of pivot?
I don't think there's going to be a pivot per se, and that's not actually a good thing either. Nobody should want to pivot. That's one thing that absolutely amazes me, is a pivot actually isn't good for the stock market. A pivot happens historically when the economy is absolutely in shambles. There's a reason why they are pivoting, right? What everybody should want and what a soft landing really means is that we're going to completely just pause at this 5% level or so, right? And inflation is going to come down to 2%. It's not going to go lower than 2%. It's going to fall right at 2%. And then we're going to ride the wave, organically growth of the economy over the next couple of years. I don't see that happening. I don't see that any kind of scenario to where we can have a soft landing. And what I do see happening is most likely stickier inflation than most people realize. Wages are sticky. Housing, rent is sticky as well. Getting down to a 2% inflation target is going to be extremely difficult. And we might even have to go higher than the 5% Fed funds rate to get that inflation down, which again, isn't good for equity prices as we continue to rate hikes. And the other side of it, and is also might be a likely scenario, is that they go too far. And they do go too far and they destroy demand so much that inflation does go maybe negative. And we do see a deflation environment. Then they got to pivot, like you said, and go lower. I don't think that's going to happen until at least the end of next year, maybe even the beginning of 2024. But both sides aren't good. That's why you have to be very active and know what you own, because a pivot's not good and raising rates aren't good either. I just don't see a scenario where we're steady and good at 2% inflation, we soft land. I don't see that happening at all.
Yeah, looks like in my eyes that there's two words that we got to just kick out of our vocabulary: transitory, and it looks like soon to be softish, right? I don't know about that word. I don't know it exists out there. Softish.
I mean, the whole goal of the
type
Fed is to
landing.
completely destroy the demand. The Fed's
Yeah.
trying to destroy demand.
That's
The
all they
whole
can
saying on the
affect,
way
right?
up was don't fight the Fed. On the way down, you don't want to fight the Fed either, right? But that being said,
100%.
equity prices have some areas within equities have gotten somewhat attractive, right? So there comes a point in time when that is discounted. I think the overall market isn't discounted, but some sectors and some areas and some stocks have been discounted a lot because of that, and that's why you got to be active and looking for those opportunities.
Perfect. Now, going into 2023, of course, there's going to be some that will expect the top sectors to remain strong. Maybe it's the leading ones like energy. What do you see moving into 2023? Do you think that we could get some sector rotation from the weakest?
Yeah, so it comes down to valuation and earnings, right? We're talking about the Fed a lot. We're talking about all the different variables in the economy, but really what stock prices are based off of are valuation and earnings. And earnings, still projected 6% earnings growth next year. I don't see that happening from the overall market. Valuations, we're trading 18 times earnings. Historically, we typically go down to 15 to 16 times earnings. So valuations probably is still high for 2023. So where I think you got to be selective isn't necessarily even a sector or parts of the economy per se. Energy prices, energy in general might continue to be strong heading into the first quarter of 2023, but it's a crowded trade. You don't want to necessarily be where everybody is at, right? So I think you have to pick off those individual securities specifically. We're looking right now where we just added to some of our positions. One of the stocks we added was Aspen Aerogels. I think you've talked to Mitch on the show about it before, but Aspen Aerogels is down like 80% year to date. It's discounted a lot. They were looking for financing for one of their facilities because they had so much demand they couldn't meet that demand. So they were trying to find a facility to finance to try to meet that demand. They just financed operations down in Georgia. They're going to be able to meet that demand for electric vehicles. And electric vehicles is a secular story. Just because 2023 is going to be a rough year doesn't mean electric vehicles aren't going to come about over the next 5 to 10 years, right? So that stock's already down 80%. We just picked it up. I think that's a good area to be in. You want to look at those good secular stories that have good valuations now, that might have bottomed from a technical standpoint, oversold standpoint. That's one of the stocks. The other side of it is because of our outlook, because of we think the consumer is going to be weaker. We think valuations are going to come down from the overall market. You got to look to the high-end consumer. One of the stocks we picked up was Canada Goose. High-end nice jackets. I'm sure you've got some nice jackets, Mitch. Maybe you got some Canada Goose jackets, right? The top 1% got richer and richer as equity prices rose, right? They're still able to afford expensive stuff. That's why I think you talked about Lulu earlier. I think I saw you bring that up. Canada Goose is down 50% year to date. We think that's a good pickup. So that's why you can't even necessarily pick certain sectors anymore, even because of the dispersions between equity prices. You got to look individually, even more granular than that.
Yeah, it seems like a stock picking year, and that's for sure, because it's going to be difficult, especially when we're seeing our leadership, the way it's been torn up, right?
Yep.
I mean, if our leaders are still coming down, well, definitely we're going to have to be looking deeper into the fundamentals and an understanding there. A lot of this year I felt was focused on cash flow, and as I think next year, still the focus there on cash flow, right? How are these businesses able to actually, handle this high interest rate environment? If they're able to handle this, well, when they start cutting, they're probably the stocks that I'll be looking at to continue their strength. Now, how do you feel about this? One's going to be interesting. I would love to hear this. So how do you feel about cryptocurrency moving forward, Luke?
Great question. I could go so many different directions with crypto. I've been outspoken about crypto since 2017, 2018 area. I own Bitcoin, specifically from like 2017 up to 2020. I sold it at 40. I rode 5,000 to 40,000. When speculation's on the table, when the government's printing money and there's so much speculation out there, crypto does very well. When there's not speculation out there and the economy is kind of entering a period where it's going to be hurting, if not in shambles at some point next year, people aren't looking to be speculative, right? And this whole FTX situation, I think pushed back what crypto could have been a couple years down the road, because it's kind of put this distrust in the system around crypto, right? The whole point of crypto is to be decentralized, to be a way for us to actually own our wealth. And once you get past the top 5 cryptocurrencies, who knows what's out there? Nobody. It's kind of like trading penny stocks at that point, right? Once you get past the top 5. So what's going to happen is the pendulum always swings from one side to the other side. Unregulated markets become over-regulated markets. And this whole FTX situation gives the government a way to go in there and a reason to go in there and say, hey, we're going to over-regulate this industry. My hope is that they don't completely ban crypto all around. My hope is that they do find some barriers, find some ways to make sure that they understand how maybe it's being transacted, to kind of give people back faith into the crypto industry. I would stay away from cryptocurrency past the top 5. Bitcoin, Ethereum, I think it's going to provide an opportunity next year. I think it's going to be mainly dead money in 2023, but it's going to provide an opportunity to buy in a little cheaper for maybe down the road, if for Bitcoin or Ethereum to become what it's supposed to become, maybe 10, 15, 20 years down the road. It's either going to $1 million or zero, Mitch. There's no really in between.
I see it, and I agree with you on there. It's either a zero or it's going to be everything for us moving forward. And one thing that I will note, though, is even the Fed was considering digital coins, right? And there's a reason why, right? I would just mention that, but
I would be concerned about that because it's just another way for the government to control and exactly tracked, and privacy concerns there. I would be very concerned if the government releases some sort of digital currency. It's like China. China did that exact same thing to have insight on their consumers. I don't necessarily think that's a good thing if they went down that path, but that's where we're headed. Government's gotten bigger and bigger and bigger. And that's one of my biggest concerns in the world is how big our government's gotten and how much control they have in our everyday life. Mitch, I don't even know if we live in a capitalistic system anymore. I'll even go as far as to say that.
Yeah, I mean, that's a whole nother conversation, but I definitely kind of agree there. It's become a point in this case where the whole idea for capitalism is to try to get to opportunities, right? I think cryptocurrency, if anything, has been one of the biggest opportunities to increase wealth. We just saw some people more than 100 times their wealth because they were in cryptocurrency. And if they got out in time, well, power to them. I say, I mean, if they were able to create, especially, let's say, a generational wealth, well, power to them, because they definitely were able to push their families forward. And I think that's what we all are looking forward, is not only just to push ourselves forward, but also our family and our generations moving forward.
You're exactly right. And what you're talking about there is discipline and always, seeking out opportunities. And that is the power of capitalism, is, understanding different markets, understanding how the world kind of works, and taking advantage of understanding that, the knowledge of understanding that, right? My concern is that the government continues to try to pick the winners and losers, and we got to get away from the government trying to pick who wins and who loses. That disinherits innovation. Cryptocurrency could become so much. Blockchain technology could become so much. So I just hope that there isn't a complete ban. I hope that Bitcoin does become what it's supposed to become, because if you went to the bank, try to get $1 million out right now, you couldn't do it. It's not your money. They're not going to give you $1 million. Bitcoin, crypto, you do actually own your own money.
All right, let's get towards a question here of, you're just kind of bringing into it, is what do you think about fiscal policy moving forward into 2023? I know the focus is all on monetary policy, but there is fiscal policy here to focus on. And are there any tailwinds that could be looking for opportunities as we drive into next year?
Fiscal policy and monetary policy seem to be fighting each other. Like, it's absolutely insane. Or we just passed, we're trying to pass a $1.7 trillion spending bill. That's inflationary. I mean, every time the government spends money, it's inflationary. So that's another reason why I think the Fed might have a more difficult job than we all realize, right? So what I do, like I said, think is going to happen most likely is, because of the government spending, because of government intervention, because of how involved they are in the markets, how involved the government is in the markets, the Fed's going to have to hike more than they realize. That's going to bring down asset prices. We're going to retest lows in the market. We'll probably overshoot the lows and go lower. And then there's going to become a point in time when the Fed will have to think about lowering rates because of how much demand they have destroyed, because they continue to fight each other, monetary and fiscal policy, fight back and forth. So that's why I think bonds might even be a spot you might want to look at some point. Maybe now is the time. Maybe it's somewhere down the road. Bond values, once we hike, and destroy that demand, and we lower rates back down, and speculations back on the table. Once rates go back down to 0%, bond values might actually increase. Bond values could actually increase more than stock prices over the next couple of years once that time comes. So that's an area I would actually be looking at. I'm not saying go out there and buy the TLT per se, long duration, but it's something you might want to consider sometime down the road.
All right, let's do a fun one here to end off. I appreciate you taking the time and definitely want to wish you a great end of the year, Luke, and I hope you have a good Christmas. Lastly, one quote that sticks with you and is maybe an often go-to when talking about the markets or trading.
Oh, that's a hard one, Mitch. You caught me off guard there. I could go so many different directions with that. I think right now is I don't even know if it's necessarily a quote. But don't let yourself always be so involved in the noise. Don't tune out the noise, I guess is what I would say, is stick to your own strategy, tune out all of the noise. There's so many different variables out there. Again, at the end of the day, life or stocks per se and investing is all about valuation and earnings. What's going to happen with earnings and what's going to happen with the valuation? Those are the two variables. And it all comes down to supply and demand, right? To all the noise out there, you can talk about fiscal policy, monetary policy. You can even talk about earnings. But at the end of the day, it's about supply and demand for where stock prices are trading. So you got to understand, where's the demand at? How much supply is out there? That's where you want to focus putting your money. So tune out the noise.
All right. Appreciate you, like always, coming on here, Luke, and giving us all different types of insight. We touched them all. We went from the Fed to even what? Fiscal policy talk? Yeah, we talked about it. It's been.
I will also even say, I'll even end to say real quick, don't fight the Fed. That's another one I will say. Don't fight the Fed. That's another great one.
It was a pretty easy one there.
I know. I could have went with that one easily, right? But I appreciate the time, Mitch. Merry Christmas.
Merry Christmas.
Hopefully we'll see you soon.
Hey, we'll see you. We'll see if we get that Santa Claus rally or not. We'll find out, Luke. Have a good one. All right, that's what it's all about here on Stock Market Movers. I hope that you guys enjoyed the outlook there. I tried to touch all different types of area, even included the cryptocurrency talk. And Buglog, no, I did not ask him about SHIB because I'm pretty sure he would have been like me and been like, well, if it's not top coins, let's not talk about it. And it seems to make sense. I would also too stick with cryptocurrency on the top coins. I would even do the top 2 or top 3, not even top 5. But hey, to each his own, right? Let's get back towards the market. Let's see what we see out there. And I hope you guys enjoyed us asking Luke some questions about 2023. Hit the thumbs up and definitely hit the share button down below. Let everybody know how good of an interview that just was. Let's keep moving forward. Let's get out of talking about, of course, overall Fed outlook. Let's get into some headlines. We did get some headlines. We already talked about FedEx and Nike. Let's talk about an interesting stock here, or interesting outlook. So I wonder what you guys in the chat will have to say about this, and I'll ask you guys what do you guys think about the NFL finalizing a deal here with a subscription-only package, of course, the Sunday Ticket, with Google's YouTube TV? I would love to know in the chat, is there any NFL fans out there? Would you add YouTube TV or maybe even switch to their service because of Sunday Ticket? Of course, with the NFL, DirecTV has been paying $1.5 billion annually since 2015, and the NFL is seeking a buyer between $2 billion and $3 billion. Apple was said to be battling to try to get this, but looks like they're not willing to pay up. Google seems to be willing to pay up, and we'll have to wait and see if they do get this announcement. But I think it's a major driver and more than some are thinking. Of course, it isn't going to be the all end all with YouTube TV and Google. That's not all their revenue. But I do think that YouTube TV could take off and potentially be the top streaming TV choice if they do land the Sunday Ticket. Let me know what you guys think in the chat. Are you guys going to be buying the YouTube TV if they do land the Sunday Ticket? When is the NFL looking to make this deal? Well, it would be starting, I believe, next year. But like always, one of the things to keep in mind here is that it's been on DirecTV for so long. I know plenty of people that had DirecTV specifically only because they wanted to watch the Sunday Ticket. So it's interesting to go ahead and take a look at what's going to happen here. Will it be a driver for Google? And is Apple losing out on this deal a bad thing? I think it's a bad thing. And overall, Apple Plus, of course, Apple Plus TV, I think in the long run, it could make giant leaps if it had Sunday Ticket. We'll have to wait and find out which one is willing to pay up. Will it be Google? We'll have to find out. Will they get the Sunday Ticket? And of course, once that happens, will it become a driver for YouTube TV? And can it become in the forefront? All right. Are you still interested in visiting the Connecticut Freak Mall? Heck yeah. Let's go, Kenneth. I need to get up there to Connecticut. I need to get up in the Northeast. I'm actually planning to do a tour, and I'll call it a tour because that's what I'm planning to do. I'm planning on going up to multiple cities. So, Kenneth, stay out, man. Stay out there. I'm going to see you soon. I'll see you out there in Connecticut. We'll get out there. Let's take a look now. Next conversation we'll get into, of course, let's take a look at Tesla today, and then we'll get into what was hot and what was not. Tesla, of course, in the news lately as battle continuing out there, and the battle's on. Of course, there's more and more battle between now. It looks like Ross Gerber that will be on, guess what? Benzinga tomorrow. Don't miss it. What did he say? He said Tesla stock price now reflects the value of having no CEO, and a great job on Tesla's board of directors. Time for a shakeup. That's what Gerber is saying. He launched an informal campaign to have fellow shareholders vote to appoint him to Tesla's board of directors. Musk replied, pretty much blaming macroeconomic factors and that the Tina trade is dead. And at this point, that's why the stock is coming down. And it's not because of Elon. Well, say what you want to say, right? It does look to me like Elon's having an effect here. Now, the only question is, has it already bottomed? It's pretty oversold here on the RSI, coming down to 9 on our RSI. It's near the levels that I was looking for it to bounce, somewhere between this 130 area and 140s. We are getting a little bit of a bounce. Now, the only question is, can maybe we get some good news? Good news out of Twitter? Can we get another CEO? That's what I'd be looking at for Tesla. And if that does happen, what will happen to the stock? Will it rip on that news? I do think that potentially, if for any means, finally, there could be a new CEO of Twitter and Tesla, Elon can say, I'm coming back to you. Will this get it driving again? That's something to keep in mind. All right, getting out of Tesla, let's go into what was hot and what was not. There's more stocks to talk about, and we could definitely take a look at the Santa Claus rally. Are we getting the Santa Claus rally? Ryan Dietrich of Carson Group did give some stats saying that we finished higher about almost 80% of the time, and that he still believes that Santa Claus could come to town. It doesn't look too bad right now, as we are getting a little bit of a push. Let's get into what was hot and what was not. All right, let's take a look at the sectors and the industries and how they're doing on the day. Technology leading the up move today as we got a bounce in a lot of these like semiconductor stocks. So you can take a look like in NVIDIA getting a little bit of a bounce back today. Nice little move there on the 5-minute. You could see it also on the 15-minute. Doesn't look too bad. Has held the VWAP on pullback, looking to push towards 166. AMD having a good day there, but it wasn't only semiconductors that had a good day. Solar stocks bouncing back, having a good day there. Just keep watch to see what happens on names like here. Run, SEDG having a good day there. How's First Solar? That's one that I'm keeping an eye on. Look at that little push towards 160. Can we get through these highs? Plenty of highs right here to get towards 162. Can we close above going to 163? You'll be looking good there in First Solar. We'll just have to wait and find out. Real estate also getting a little bit of a bounce back. Nothing that I'm going to call out too much on here. Healthcare. Now, this is definitely an area that I want to keep in mind. Medical care companies starting to get a little bit of a push up. Going to keep watch on the industries. Which one is going to get ripping again? Well, you can see here medical devices Made a big move yesterday, now starting to continue. I'll be looking at stocks here to see if we can get the lift. Abbott Labs is one that I like off the 107s. We'll see what happens there. MDT, not doing too much there. We'll take a look at some other ones. Let's do this. Let's look at the RSI. Let's see what we can find that's doing really well. So OM is one that's doing really well. On Outset Medical. Don't know this one too much. These are going to be smaller names, so just be careful out there, like always, team. The only thing I'm doing is running through industries, trying to find where there could potentially be moves. Like this stock doesn't look too bad. Tela, don't know too much about it. Would need to see the volume and how it trades, but doesn't look too bad there. Tela Bio. We'll see if it can take that next step up through 11 towards the 12s. All right, getting out of this, we'll take a look at some other healthcare stocks. Of course, there's biotech, so you guys can watch. Let's look at the high caps there, how those are doing. Amgen, Gilead. Gilead had pulled back significantly yesterday, getting a little bit of a bounce back today. Doesn't look too bad there. And of course, you guys can be looking at like an ETF like IBB. Biotech starting to get that bounce, trying to get back up there towards the highs. We'll see if it can continue making moves. Industrial staying strong today. Let's take a look there. What happened to Deere? Well, Deere pulled back. Now back there towards 440s as it's looking to push through 441. Not a bad stock there as it starts making that lift and continuing to push. Talked about Caterpillar early on. Will this continue to keep making the moves? Daily level breakout as we got a nice little push towards the 238s. Making that next step up towards the 240s. We'll see what happens on these. GE also having a good day. That means Honeywell, I'd be looking to have a decent day, and it is. We'll see what happens to these. Can they continue making moves? Another one in a similar, in the same sector, Boeing making a nice move up there towards 195.45. Seems like there's a lot of stocks that are strong in industrials. Not a bad move there in Boeing. Big move from 190 to 196 today. Not a bad move there. All right, catching up with the chat. What's going on out there? How we doing, Jelly? OP, Musk will do an X company IPO, Twitter in 2 years. Yeah, I could see that happening. But it's definitely ruining Tesla. By that time, it might not be a Tesla if he stays at it, OP. All right, Moderna reclaiming some highs. Let's take a look there. Moderna up there towards 207.82. I remember when I was looking at this one on the pullback, we weren't able to grab it. We missed it. Now it's been pushing up. That was back here. We got stopped out on the swing trade that we were looking at Moderna. It's been a big move since then. 18%. Looks like it wants to keep going. It pulls back to support. Found support at prior resistance. Now making that step up. We'll see if it gets to the 210 area and starts making its way to 215. All right, not looking too bad on those names. We'll see if the healthcare names can continue pushing stronger. Basic materials having a good day there. Steel, lumber, continuing. Aluminum, nice little push. Copper, getting a nice little lift. We'll see what happens on these names. It doesn't seem like there is much weak stocks around today. Even energy is up 0.5%. So essentially, no sector in the red from the open. That shows us what type of day it was. And definitely Santa Claus was coming to town today as we did get the lift. Now the only question is, will it remain or will we start coming back down? Can we fill this gap towards 390? Something to keep in mind. All right, let's keep going. We can take a look from stocks from the chat. If you guys have anything to throw up, definitely throw it up. There's still more that I can go through, but want to catch what you guys are looking at. All right, let's take a look there. Utilities pulling back, getting a nice little push. Cyclical, what happened here? Leisure, footwear. Of course, we talked about Nike and we talked about Deck. Deck is one definitely to watch, man. I should have been watching this one today. We talked about this one with our Wedbush analyst, of course. And look at Deck. Look how this has been a nice little push. That was Nick Setien. As we were talking about these, nice little push there. Deck, one to keep an eye out for as this has been staying in a channel, caught the 50 moving average on support, now starting to move back there. We'll see if it gets to the 390 and the 400. Skechers making a move up. Crocs making a move up. Can this close back towards the 100? I like this recovery of VWAP. We'll look to see if we can get the move towards 100, towards the close. That's going to be looking good there in Crocs. Foot Locker, of course, really related to Nike. Filled the gap here. Now starting to make its way back up. We'll see what happens on those. All right, Leisure doing well today. Of course, if you take a look there, you'll see Six Flags making a move today. What happened in Six Flags? Why is it up? Let's talk about it. I have the banner here. Six Flags is making moves after activist shareholder Land & Buildings Investment Management has accumulated 3% stake, and Land & Building has suggested changes in management, including selling or spinning off of the real estate. Well, Six getting a little bit of a lift there. We'll see if it gets back through 23.50. That's definitely the hourly level where we rejected. Look for pullbacks just in case we get a nice little pullback action. This doesn't look too bad. And one thing that I'll say about Six Flags, though, is if you do feel that we're going into a recession next year, this one might be one to avoid. But who knows? It does have like an inverse head and shoulders here. And I can clearly see that off levels. Maybe it's 2050. I can put it just simply at 20. Now it needs to get back through 26. If it gets back through 26, I see that inverse head and shoulders on this chart. But there was also the cruise lines making a little bit of a lift today. CCL, nice little push up today. We'll see if it can continue pushing. Carnival Cruise Lines getting a nice little lift. RCL getting a little bit of a lift there. We'll see what happens on these. I will let you guys know I got back into my Royal Caribbean cruise as I had credits for a little while. So I'll be going even in a cruise in April. Excited to do that. And that'll be Royal Caribbean. We'll just have to wait and see how the stock performs. But overall, these stocks have been hanging on. Look at CCL. CCL bounced off that 780 multiple times. Now just bounced off that 780 again. Doesn't want to break through 8 here. Is this an opportunity? That's what we need to be asking ourselves today. Doesn't look too bad there. NCLH. Let's see how that one's doing. Norwegian down to 1350s. Got a little bit of a bounce. Seems like Royal seems to be hanging on the most here. And it looks like a symmetrical triangle here pattern. We talked about patterns earlier today. Is this symmetrical triangle going to break to the upside or the downside? We'll have to wait and find out. Doesn't look too bad right now on NCLH. Just stuck in the middle. Let's see which way it goes. All right, catching up with the chat. What's up out there? What about TD? Did you check about TD? I'll take a look there. I got no problem looking at TD. You want to look at Toronto Dominion? I know you like the banks there, Kenneth, so I got no problem. It's not my specialty. I'll tell you that. And I like to admit when I don't have the most knowledge in an area. And one of those areas would be financials. The other one would be biotechs. And what we're talking there is some smaller biotechs. I try to stay away from understanding too much in the biotech space. TD, Toronto Dominion. We'll see if this can get back moving. Doesn't look the best on the daily chart, but you do have some moving averages. It is trying to get back there towards the 69, but you've had 1, 2, 3 times, and then you tried to come back up here and you failed. Now we need to be looking to see if this acts as resistance. If this acts as resistance, the 65.50 area, well, I don't want to be a part of this because this could easily come right back down. Just be careful there in TD. Can it get back through the 66, or is it going to use that as resistance and get knocked right back down? What's going on, man? You were looking at the Ulta? Yeah, that Ulta was a good level. I was looking for it because of the daily pullback. The only hard part with Ulta is understanding that you have to be able to deal with the spread. So what I was looking right necessarily was I was like, okay, this looks like it's coming back there towards prior resistance. It looks like it pulled back towards a good level. Let's look for the bounce, right? Well, there you guys see it today. It does get that little bounce coming right back up. This is one that I think could get a Santa Claus rally. And a lot of what maybe a lot of people buy during the holidays as they go see their families, right? Well, a lot of makeup being bought up, right? A lot of colognes being bought up, perfume being bought up. So maybe Ulta can get around this. Of course, Nice little decline came into this. So that's what also made me excited. RSI coming down. Looks like we're bouncing off prior resistance. We can go ahead and push back up there. Who knows? Maybe this is back up there to 480s. Had a good day on the day, up there to 451. Pretty much about a 1.4% from the open. Not overall, but just want to call out what I've been looking at. I'm not in this one, but we'll have to wait and see what happens there in Ulta if it can continue making a move. All right, it's good to always catch up with what was hot and what was not. Another stock that did have earnings today, or let's go to Starbucks, because I wanted to talk about Starbucks. As today, Starbucks was downgraded by Jefferies as Jefferies to hold from buy. And they said that the coffee chain may be impacted by a pullback in consumer discretionary spending. But I talked to you guys about that. And it didn't seem like that to me when I went to Starbucks, because it still seemed like they were pretty packed. But look what this stock has done. It's done a monster run. Big run since then. You know what? Let's clear this all out. Let's start all over here on Starbucks to see how we see it, right? Overall, let's go to the weekly, because I have a feeling that this stock doesn't like to follow too many daily patterns. And you can see how it's pulling back now, trying to collect here at some support around, looks like we could round it to 96 here. And it is trying to catch a little bit of a bounce right back up, right? Now the question here remains, though, can it get that lift? Well, look at the daily chart. It's gone 1, 2, 3. It tried to break out here, couldn't do it. Now it's pulling back. We're going to look for a bounce back 100, but this is not what you want to be seeing. But at least you're closing back towards the highs. That shows us reversal signs from what we saw this morning. Now, the only thing I would say is starting to draw some resistance. Can we actually get back towards the 100? If we get back towards the 100, you can pretty much kick this downgrading out the window. So it's just something to keep in mind, as Starbucks is moving on this, but it moved up on this on a downgrade. Did they get it right? Could it just been the market environment? Yes. But now we need to watch what happens the next couple of days in Starbucks. We'll see if Jefferies got it right or wrong. Of course, we've talked about Six Flags Rite Aid was the one that I wanted to talk about. Let's talk about that one. And looks like it got just completely destroyed. Earnings were bad here. I'll give you their numbers. It didn't look good there. Let's give their numbers here. Rite Aid's adjusted EPS, loss of 14 cents, beat the loss of 31 cent estimate. Sales of 6.08 billion, beat the 5.94 billion estimate. But they did announce that their adjusted EBITDA outlook is being lowered. So they're lowering their guidance to 410 million versus the 440 million they had before. So that's why you see RAD getting hit hard on the downside. Let me see if Walgreens got hit on this. Yeah, Walgreens taking also a pullback there. CVS not so closely related, but also pulled back today. I definitely keep watch on Walgreens as you're starting to drop. This one was trying to get back there towards 4150s. Now it's starting to break support, filled the gap. Let's see if it bounces from here, because if it doesn't, it could just easily just start cracking right back down. This was one that was getting watched for a little while and not in the focus or the limelight anymore. All right, we'll see what else is going on. Let's take a look at the overall market, where we're at right now, 386.45, as we look to try to get towards the 15-minute pattern right here. Nice little pattern, right? Well, we got a couple of highs there. We'll see if we're able to get through the 86.70 area and then actually push towards 388. Santa Claus has had a good day. Can't say that at all, that it hasn't been a good day. Now the only question is, do we actually go and fill the gap here and make our way back there towards, let's say, 390s or 388.94s, or you could even make it back maybe towards the 388 level and then reject. We'll have to wait and find out, but has not been a bad day for the bulls at all. So if you're looking at those types of stocks, hasn't been a bad one. I need to keep watch on certain stocks like Best Buy. I'm going to be watching some like kind of like Lulu, right? We need to keep watch on these retail stocks, how they're going to be performing. Will they get the Santa Claus rally? Is it oil stocks that we should be looking at? Ooh, nice little level just broken there in XOM. Now pushing towards the 108.30s after what? Pretty much hour-long sideways action. It actually was 2 hours of sideways action there on XOM. Now breaking up, and it held the VWAP 3 times to break it. Now starting to recover. Not a bad looking play there. We'll see what happens. All right, that's going to do it for me. Catching up with the chat. What's going on there? You guys are throwing up some tickers? I got you guys. I'll run through those. Can't go wrong with it. OP was the first one there. So let's do that one. MDDL, still pushing after 3 days. Biotech stock, not looking too bad. This is a really nice move. And where does the highs get to, right? Well, we had some support that we ran into around 275. Next level to watch for me is towards the 300 level. I think you can get towards the 294s first, but of course, 300 seems like it's in reach. It's been an absolute monster. MDGL. JetBlue being called out in the chat. Definitely an opportunity there. I've seen how low it's been going. JetBlue, let's take a look at it. On the daily, can it get back up towards the 7? That's the level that I would be looking at it. It's pretty low. It's as low as it's probably ever been, right near those pandemic low, right? Can it recover from here? Yeah, it could. We'll see what happens there in JetBlue. Will it be a better outlook for JetBlue moving forward? We'll have to wait and see. IEX, don't know that one too much, but diversified industrials doesn't look too bad. Not a bad looking chart there. Weekly chart pulling back here. Can we get back towards that 245 real quick after 2 weeks of pullback? Let's see if we can actually get that lift here and get back there towards 240s. Not one that I keep up with, but doesn't look too bad. McDonald's, Mickey D's, what's going on here? Well, this is kind of one that just keeps holding the pullbacks. It holds the pullback right now. It is getting the 200-day to start moving up. 50-day looking great there. Starting to actually push here. It doesn't look too bad to maybe hold around this 265. Get right back up there to 270, 275. Eventually pushing for the 280s. This one's not looking too bad. It also is holding pullbacks into kind of this price action, the resistance here. Let's see if it can actually get a move back up towards the upside. And it's been able to hang on in a recessionary environment before. Of course, I don't think anyone's not shopping at McDonald's or not getting fast food because of the recession, but something to keep in mind. We'll see what happens there in McDonald's. 1 or 2 more here, and then I'll get out of here, team. I see you guys keep throwing up tickers. I got no problem with it. I'll try to get to as many as I can. I'll just speed up. PDD, all about China, hanging on here. 9 EMA, will it recover that? BABA, look for that to kind of bottom out there. It's showing us that there is some bottoming action. Now what we need some positive news about China, some positive news about their COVID issues. Well, that's what you're going to probably be looking for. But like always with China, there could be tape bombs around any corner. Target being brought up here by Kenneth. Target has just been destroyed. They put out bad guidance. I'm not a fan right now, Target. I thought it would eventually maybe come test this gap. It's not looking good here, team. It's looking like it broke this long-term trend line, and now it could maybe use it as resistance. Yeah, you could get bounces to 150, maybe even 152, but I could see this just rejecting. It doesn't look good right now. All right, one last one I'll cover. Wes, I got you. CEI, definitely not a stock that I trade often. Reverse split, always be careful with these stocks. Reverse splits are an easy trap for the cheap investor. Reason why is that it makes it seem appealing, but really the stock hasn't done anything but just split its price. So now I look at this on kind of a longer time frame. The hourly chart seems to make sense for me, but it also shows me that this stock gapped here from an equivalent price because it's a stock split, right? So the price might have not been the same yesterday, but from around 318. And so with that being said, I think it could go back towards 3 or maybe even 325 before it gets up there to 5. So with that, I'll be looking for deeper pullbacks. Not something that I trade often. I probably won't even ever trade there, CEI, but just something that I wanted to talk about and make sure that I covered it for you. I'm hard of hearing. What did you say? Could be no. What it means is tape bombs. So one of the things, Jelly Bean, that we call tape bombs. What are tape bombs? So when you get an overnight catalyst, right? Something that just hits the tape. And what do we mean by the tape is like the news actually getting hit, right? When that news hits, a lot of times we've been getting kind of different news in the overnight action from China that ends up moving our markets and moving their stocks. Well, you can't really know what's going to happen there, right? The only thing you can do is worry about a potential catalyst that could hurt your stock. That's all I'm saying there. And China stocks have been one of the hardest trades, I would say, even for someone like myself that has been trading for multiple years, now about 6 years, going on 7. It's very difficult. It gaps. And the catalysts are hard to follow. The noise is pretty noisy. It means that you sometimes get positive catalysts, you get negative catalysts, and then all of a sudden you see an up move. It's just very difficult to trade the China stocks. I got you. Like always, one of the things I'm always going to try to do is explain what I mean. And if for any reason you guys feel I'm not being clear, let me know, because that's what we're all about here on Benzinga, is try to bring clarity for you. We're trying to be the #1 place to grow for your understanding, your skills in the markets right here on Benzinga. So give us a nice thumbs up to end today's stream. And definitely stay tuned. There's more on today's schedule. We'll see you guys on At the Close with Joel Elconin as I take a look into all the stock market action and we talk about Santa Claus coming to town. I'll see you guys. 2 types of people wear shoes: those who suck Crocs and those who wear it. Well, Quantum, you snuck that one by me. We won't talk about that, but we'll let it keep going there. Power Hour coming. And the Power Hour has been strong lately. Have you guys seen that pattern lately? I talked about that multiple times. We've been getting these Power Hour rallies. Let's see if we get one today. And it's a big one. Can it break out there towards 388, 399s? Look at the market right now. Not looking too bad there on the 15-minute trend line that we drew. We're out there towards 386.84. Hasn't been a bad day. Looks like Santa might be around the corner. I'll see you guys next time. Hit the thumbs up. See you tomorrow. Don't miss it, team. We still got a lot to talk about this week. And if you guys are just joining and didn't catch earlier our great interview, of course, Luke Lloyd talked about 2023 outlook. Catch that. Rewind. I'll see you guys next time. Hit the thumbs up on your way out.